My name is Mike Butler. I'm here with Jermal Chandler. Markets are up a tiny bit. Intel kind of slid after earnings yesterday, but it is Friday, July 24th. Hopefully you all have some fun weekend plans. I know I do. And Jermal, I'm sure you do too. How you doing this morning?
Doing great, man. Weekend, I don't really have anything planned as of right now, but other than just weekending. Other than that, let's take a look at what's coming up today. Let's take a look at what we got on today's show. We got a bunch of stuff going on here. So, of course, you and I are going to talk a little bit. We're going to talk about some morning news with Chris. We got overnight moves with Liz at 8:15 Central Time, of course, which eventually leads into the opening bell. We got some volatility and scalping with Errol. And, of course, that's going to be NASDAQ related. Dr. Jim comes on and does a little solo thing at 15 minutes inside the trade. Then we got some trading charts with Tim Knight. We got some research, some tasty research with Julia. And finally, you and I will round out the show with some live trading.
Yeah, absolutely. It's going to be a jam-packed show, as it always is. But, yeah, I think first things first, looking at this SPX Super Bowl here, is there a way to close out of this for a profit? Looks like we're ticking around okay. I had the 7,400, 7,390. We closed at 7,408, and we're implying to open up 20 points from that level with the futures up 20 points here. But I'm excited to see how this all happens. Oh, I was assigned on 200 shares of Tesla. That's fun. So this will be This will be a good example of how nothing really changes on the open. Apparently my butterfly that was in the money was assigned my two short options, two short puts. So buying power requirement is probably through the roof right now, but it doesn't matter. The broker knows you have these protective puts on.
What strike was that? Like 360 or something like that?
It was 355. Yeah.
It's close.
So I'm the proud owner of 200 shares at 355. But if we get an intraday rally in Tesla, it's up actually to 322 right now. So this is an interesting scenario where I can sell out of the shares and sell out of the puts. But if we get a rally of like 20 points today, the shares, the puts are going to gain a lot of extrinsic value. And that's really where all this profit comes from now that I have the 200 static shares. So interesting scenario there. For sure.
Did you do anything in there yesterday with the stock where it was?
No.
I did. I was just looking at the stock and just looking back across time here. And we really hadn't been this low since August of 2025. So I decided to do a little something. And again, just calendars. I did a couple spaced out. I did the 350, I did the 375, and I did the 400. So just kind of these different tranches as we get to these, if and when we get to these different levels, take them off. Or we don't even have to get to those levels per se, but, getting near those stock levels, I can take them off.
For sure. I just pulled up the YouTube myself here, but if you want to join us on the YouTube channel, we're streaming live. Just go to tastylive, and you can throw in your trade ideas and chats along the right-hand side. I see people are already in there. Welcome.
Hey,
but yeah, it's going to be an interesting day. I think the Intel slide is kind of telling of the whole scenario, and it kind of echoes exactly what we saw with some of these other tech names here, with Intel getting as high as 110-ish, 112 even. We're looking at the 1 minute chart here. It just slid from there. Kind of crazy.
Yeah, it's not as bad as it would seem. Whereas I should say, as I thought it would have just been completely down, right? Considering some of the other things that we've seen, but in this case, it looked like it's holding a little bit of something. Again, considering that it closed at 100 yesterday, I thought that we were just going to see straight down, and that it really hasn't been the case.
Yeah. We got Chris Vecchio on the line, and Chris, I know we were joking about the Kramer tweet timing, and the Intel sell-off was almost exactly at the same time.
Jim Cramer has the same Midas touch that I do, apparently, in top ticking things recently. So it's nice to see my fellow brethren getting the recognition that he deserves.
The inverse Kramer fund strikes again.
Oh God, is there an inverse Vecchio fund? Oh God,
We could make one.
please
we
don't.
could make one. Hey, ETFs are big hit exchanges these days.
But if I trade against it, is that insider trading?
Technically, yes.
Can't win.
But yeah, it's been an interesting week. I'm sure, as you know, you've been trading it too. But crude oil down 3%. Are we done? Is this over?
Yeah.
Oh, it's down. Oh, it's through 90s. Damn it. No, yesterday it was like 92, and I'm like, I felt like, man, this thing's going to 100. I was like, but you know what? Maybe this is a good time to try and get in fade. Sure, I'll take some pain, maybe $500-$600 of pain, but it seems like it's starting to slow down. And I was like, nah, just stay away. Now it's 89. This is the life of a trader.
Look,
Talk
I pointed it
yourself
out.
of things.
I pointed out in the morning note today, which is we're starting to publish those on the website, by the way. So folks should head over to tastylive.com, news and insights. It's going to be up hopefully before 8 Central every morning. But it's already written and been distributed internally here. I remember at the end of March, Trump was saying an entire civilization will die tonight. That was pretty apocalyptic. And then sure enough, it was a ceasefire. So, I don't know. Trump's been saying that he has a big attack plan for Iran, and the market's treating this like it's probably a negotiating chip, given everything that we've learned so far. But this is the linchpin for everything right now. I mean, if you're paying attention to bonds, bond yields are down today. Why? Because oil's down. Fed rate hike odds are in today. Why? I would say because oil's down. The correlation, the 1 week rolling correlation between oil and Fed hike odds is, if you look at like the SR3 Z6 contract, it's negative 0.95 right now. So near perfect negative correlation. Yeah, oil goes up, rate hike odds are increasing. What a shocker. So yeah, this is the point of relief today. I mean, Intel's nice. We were playing it directionally neutral yesterday. So if we open up around 103, going to be able to offload this. Short strikes were sitting up near 110, 112, and then on the other side below in the 90s at the 0 DTE here. So pretty comfortable with how that played out. But the market today is going to try to find its footing now with the Iran war. That to me is just the far and away most important thing. So to get into the Ilya perspective of it all, which does deserve some recognition, we had all these PMI points, these data points come out this morning. Purchasing manager indexes, these are diffusion indexes where they survey people to get folks' sentiment, basically, about how things are moving. I'm going to go real into the weeds here. That's non-trading, and I apologize. But the diffusion index, you get 3 choices for your survey answer. 0, 50, 100. 100 things are getting better. 50, they're staying the same. 0, they're getting worse. You blend them all together, and that's how you get a PMI that's anchored around 50. Higher you are above 50, the faster growth. Lower that you are below 50, the steeper the contraction. Eurozone, UK, Japan. They all surprised to the upside today. Growth isn't falling apart. That's really good news, despite these repeated energy shocks that we're seeing. So maybe there can be some stability in the market today. I'm curious, though, if the volume disappears again, because absent that Wednesday afternoon catalyst and then yesterday's follow-through, this has been an incredibly quiet week in terms of what's been going on. S&P 500, less than 1 million contracts, several days there. So it wouldn't surprise me if things calm down again here today, now that oil's off and yields are coming. So, Mike, I'm curious. I know a TP special is looking at SPX and 0 DTE short iron condors. You think there's any juice to squeeze out of that trade here right now, or you think this market's a little too jumpy post-Intel?
It's a good question. I think for me, like I'm positioned with a little Super Bowl here, so I would love to see this thing rip higher. But yeah, I think we're still seeing decent implied volatility. Interestingly enough, SPX has a 50-point implied move through today, and the E-mini futures have similar 35-point implied move. So it's not nothing. I mean, we've come to the market on a Friday morning with an implied move of like 20 points, and those are the scenarios where I'm like, I can't sell an iron condor in this environment. 20 points is nothing. So I think it'll be interesting to see the volumes and see if we chop around from here. But yeah, I'm leaning directional here. I feel really good about where I'm at right now because I have the Intel downside butterfly at the 190.80 that I bought for $200. It'll be 3 points out of the money. So if for some reason Intel has an intraday slide down, that will fill up and be a nice winner. SPX downside butterfly as a hedge, 74.50. That's in the money. 7,400, 73.50. So there's another hedge. The Super Bowl right at 7,400, kind of wrapped around the same level. And then an NDX butterfly that's 200 points out of the money, 400 points out of the money as well. So regardless of what happens, at least for today, I feel good about it.
I said it yesterday, guys. I think this is, it's seeming like this earnings cycle is going to be one of the few times where I'll just speak for myself that I'm probably going to be looking to sell volatility in some situations because I don't necessarily know if the calendar call or calendar puts are going to work as much. I don't think we're going to get these big moves. I think just because of expectations being so high, I think vol is going to be high enough where you could probably sell something. Doesn't maybe it's zero in the 0 day, or sorry, I should say maybe within the 2 day cycle or something, or 3 day cycle, wherever the earnings are, or maybe it's going a little further out. Because again, I did it in Intel. I did the ratio spread to the downside, bought one of the 90s and sold two of the 85s, and I did it in August because vol is just high enough where you could do that, right? Vol
Some
has
of these
been
names
high.
have vol. Yeah, especially when you have like some of these weeklies. I mean, even going out to the August monthly right now, but
Yeah.
you're still seeing 60-70% IV continue out for several weeks.
Yeah, very much so. So again, in Intel's case, it's 100. So I there's plenty of names where I don't know about you guys, but I took off some shorts heading into earnings cycle because again, I didn't want to be short in the with earnings arriving. But as earnings are either closing or coming to a close or done, sell vol. Google, that's obviously a bigger name. It's in the 30s. I'm like, after yesterday, sold a strangle in there. Why not? Because now there's no earnings catalyst. Now, who knows what other news comes out, right? Some data center thing or whatever, but that's just what you live with.
Yeah, it is. If we're going to talk about a market that may be calming down here today, I'm taking a look at the SPX 0 DTEs here. Volatility is pretty elevated for a 0 DTE. I'm looking just at the expected move right now, 74.60, 74.65, and then the 73.65, 73.70. Now, technically, the 73.65, 73.70 leg of a short iron condor here would be inside the expected move. But it's just below yesterday's low, right? If the market starts breaking yesterday's lows in NASDAQ and the S&P, right, we're probably going to have a really ugly close to the day where people are just dumping stocks going into the weekend. So, getting some acceleration through there, all right, that might be problematic. But if we hold yesterday's low, then are we really going to break out to new highs this week? I mean, on a Friday? Does the market really do that on Friday? So right now, if you were to do this 73.65, 73.70, 74.60, 74.65, 0 DTE, $1.65 in credit. 77% probability of profit. $1.65 in credit off of $5 wide strikes is just basically at the sweet spot of $1.67. So I have this working order right now. Hopefully it gets filled.
Nice.
I like it. Yeah, and one last thing, I think if you have a bunch of bullish positions on, or you have, let's say you have a lot of stock in these Mag 7s, I really like the idea of going to the 7 day. So July 31st encompasses 90% of the earnings announcements that are going to be taking place. I mean, next week is a huge week. So you could go to SPX. Like we have a butterfly on in both of these cycles. Just a downside butterfly, 50 points wide. I bought this for like $300. But this can really hedge you if there is a big move to the downside in your position, bullish or even neutral to bullish in a lot of those stocks that are reporting next week.
Yeah, I mean, it's end of the month, and we've got it centered around some both of them around big strikes. We have the exact same ones, and so it's I think it's something worthwhile doing. We'll you just never know how things end up, especially on an end of the month situation. I mean, Chris, how's it been overall? Like we talked about at the beginning of the month, and it was fairly bullish, right? Heading prior to expiration, if you will, we had a pretty bullish month. Since then, it feels like we've been trading sideways. What's the call on seasonality for July?
Well, it's supposed to be good. Was not good. Hasn't been good so far. I suppose there's still 7 days left, so we can save this thing, guys. If Mike Pence has the courage, we can save this thing. I think that this is the time of the year when you have to be concerned about volatility going up, because this is what happens in August and into September. I mean, if history is any guide, not that history has been any sort of guide for this month of July, so perhaps throw it away. But, it goes, some months it's a better guide than others. I'm thinking about last summer. July, if you stayed long through July, you were rewarded handsomely. If you were like me and got panicked and said, oh, the seasonality really matters for August, you spent about 10, I think 11 days there at the start of the month on the wrong side of a position. I eventually capitulated and got long again because it was clear the market was ignoring the seasonality. So right now the table's not exactly set for a calm month of August. If we revert back to history, then you should be looking at the VIX spending some time up in the 20s here. And didn't we have that in 2024? That August 5th Monday market meltdown with the yen carry trade unwind, and then something in 2023, and it just seems to happen every so often. Either way, though, volatility seasonality is not fantastic. This is one of the pockets of the year when it tends to go up.
Yeah, I mean, you got to clean the house every so often, right? It is what it is. I had my VXM.
I just want to point out volatility. Do you do seasonality and volatility? Listen, probably not. It's a non-stationary time series. So just for the statisticians out there, I hear your complaints.
No VIX and percentage points.
Gosh, no.
They get so mad about that. They really do. It's it's just a fascinating market right now, guys. I mean, it's summer and we're talking earnings and things are still happening. And, but even if volume is low, we still seem to have a bunch of things going on.
Yeah, these crude oil markets are interesting because crude is leading the way to the downside. If you look at the futures watch list, the CME futures watch list, and you would imagine that might be paired with a flattening of the backwardation in the curve, but it seems like it's actually increasing. Like the difference between the 24-day and the 55 days, 4.5 points. And these back ones are dropping a little bit, but not really that much. So it's kind of a weird day in that regard.
It is a little bit. And, speaking of interesting days, one thing that I like to do in the morning is check out what the apes are doing together over on Reddit. And so my little scan here this morning, Tesla and SpaceX are two of the top 3 tickers being discussed, having been engaged with on Reddit over the past 24 hours here. Guys, SpaceX has been just dropping like a lead weight in the water. But yesterday there was a little bit of resiliency. It felt like maybe it was trying to turn a corner here. You guys picking up this falling knife with its 100 IV rank?
One of the best, and I kind of followed Mike's lead on this, one of the best things I've done in recent time is to push my thoughts on this trade further out in time. I have a short put with the upside call spread, the upside call kicker. I got it in September. I don't even think about it every day, honestly, which is nice because it's still talked about a lot. So.
Yeah, I'm in the same boat. I'm all the way out in January of 2028. So, yeah. But no.
Not your typical tasty cycle.
No.
Correct. But
this is not your typical name,
yeah.
Right? It's still figuring itself out.
Yeah. I figured implied volatility in here is sky high. The raw implied volatility in here is sky high. And it was when I put this trade on. When I put this trade on, these IVs were in the hundreds for sure. But I really like the idea of just taking a stance at a lower price point. So I put this on when it was trading around 150. I sold the 125 short put for $3,400. And then I bought the 300 strike call for $3,100. So my net credit received is $345. I have no risk in the middle here between 125 and anywhere above it. But I do have the asymmetric risk reward to the upside with the long call up here. And the reason why I wanted to put this on so long term is because I believe SpaceX has the ability to behave like a volatility product or like a Bitcoin product, where if you do get those big rips to the upside, it's likely going to be paired with an expansion in implied volatility rather than a contraction. And it's probably going to be paired with call skew getting infused to the upside. So what's the best way to take advantage of that? Having a long naked call on the upside, still reducing cost basis and routing it for a net credit with this short put here. So really, that's what I'm playing for. And if that doesn't happen, I'll take the shares at 125. The premium in here will still be fine. I would imagine, even in a world where we chop around 100 to 150 for the next year, we'll still have 50% implied volatility in here, I would imagine.
For sure, yeah. And I did the same thing. I did in September. I'm short the 125 put. I was originally short the 200 call in September, and honestly, I've been rolling them down. And so now I'm short the 160 call. And I would like to do another one in here, but this thing ties up $4,000 in capital. I can find other ways to use that.
Yeah.
Probably can find other ways to use that between now and September.
Right.
Sure.
And that's also one of the considerations here. some of these you just mentioned $4,000 in capital. What's your time horizon? If it's over the next week, okay. If you're going to do it for the next 2 months, depends on your account size. So
yes,
for sure. I was assigned on 200 shares. I don't know if you heard us talking about this.
This guy. And Tesla.
Speaking of buying power requirement, so I have 200 shares in Tesla as part of this butterfly. So I had the 370, 340. It's trading at
yesterday. Yeah, that's good for you.
321.
Okay.
So yeah.
So what's the plan? You're going to wheel it out?
No.
This is a good discussion point real quick, because you could theoretically, if you wanted to, if you were worried about that, you could sell it out right now in pre-market, and you just have to change the time order, right? Like if you were just like worried, it's worked out. I mean, the stock is higher than it was yesterday. If you want to, you could, but you're trying to figure out exactly if you want to keep 100 shares, if you want to do something with the trade, right?
Yeah. I mean, I'll sell these. I'll sell this whole package today. And to your point, you could do a number of different things. Like let's say you're.
Oh yeah. Wait. Do you have any other? Sorry. Do you have any other positions? I'm trying to think.
Yeah, it was part of a butterfly. So basically, my shares that I was assigned are completely protected by the 340, 370
True
puts.
that. Forgot about that part.
So really, what I want to happen is I want Tesla to rally closer to 340, not because of the shares. The shares don't matter because they're offset by my intrinsic value on the puts. Really, the trade is the extrinsic value in the 340 and 370 now. Basically, no extrinsic value. But I think if we get an intraday rally, maybe I get back $100, $200, something like that. That would be the perfect scenario. But yeah, either way, I'm going to just get out of this trade. I don't want long shares of Tesla. I think Tesla is going lower. That's been my thesis.
It's finally happening, Mikey.
I know, right?
It's finally happening.
I said that yesterday.
He was saying that.
I put it on the record yesterday for the options trade of the day that this thesis is starting to form. We just need SpaceX to go up a little bit. But yeah,
we just need SpaceX to go up a little bit.
He's so my bad. I wanted to just clarify that. Yeah, you are long 200 shares against 2 deep in the money puts, so you are completely hedged. Just so people understand that.
Yeah, the 200 shares were from the 355 shorts in the butterfly, but because I still have these longs, it means nothing. The risk is still defined.
Fun
times, Chris. Appreciate your time. We'll see you a little bit later today.
See you later.
Adios. Here we are again with the E-minis and NASDAQ chopping around, splicing each other. E-minis up 8, NASDAQ down 12. The Dow and the Russell are up. Bitcoin and ETH are chopping around as well. But yeah, I think it's interesting to see crude selling off here, but the backwardation is still very apparent and steep. 89.45 in the 24-day, 84.79 in the September cycle. And then these back ones are still sitting around 75, 74. So we'll see what happens here. But this is good for my position for sure. I have a iron condor in CL. So retreating from this 95 half short strike, I still have the 70, 69 and a half there. But really the position is the MCL straddle that I rolled out to the 55 day. And I've got the 80 strike straddle here with $1,100 in premium, I believe. $1,175 in premium. So sitting in a better spot now with MCL chopping around 84 in this contract. So that's another nice thing about rolling out in time with the same strikes, or if you're moving your strikes a little bit, the further out in time you go, the more you get into that lower price point because of the backwardation.
Yep. And I'm in the August cycle with a strangle. I am short the 80.95 strangle. I actually rolled my put down yesterday from the 75 strike to the 80 strike. So 80.95. I am glad that we're seeing somewhat of a pullback, because obviously we were starting to get inch higher and higher to that upside strike. And obviously crude does nothing but see skew rise higher in those calls. And so I needed a little bit of relief and got it now.
Yeah, we'll see what happens. But much rather see one red day here than a continuation up to 100. That would be troubling for everything. But yeah, lots to talk about, lots to discuss here. But yeah, join us in the YouTube chat if you haven't already. I see I see the regulars in there. I see you, Grumpy Mike.
Grumpy
Stay
Mike.
grumpy. Stay grumpy, my friend.
Stay grumpy.
But yeah, I think this is going to be, it feels like a kind of a lull situation here, especially with the E-minis and NASDAQ going in different directions now. I think that might lend its hand into a neutral day, but you never know. You never know. But yeah, first things first in the open, I got to close, or I'm going to keep an eye on this Tesla, the shares and long puts. I don't need to close it right away. I'll probably hold it closer to the end of the day, honestly. And then Intel. Keeping my eye on this. I put a GTC order in for this butterfly. It's at 0 days. I'm at the 190.80. So if we get like a 5-point sell-off in Intel, I want to make sure that I have an order in just in case it appreciates. Right now it's trading for like 250. Closing it for $5 would yield a $250 profit on that butterfly, which is a nice hedge against my inversion. I also need to close out of this 120 short call. I have the 130 short put, and I went inverted into the 0 day. It's a perfect scenario. I would have loved it to be up at 110. That would have really been great. But the 120 short call is going to go to 0. I'll just roll it into August and probably keep the same inversion. We'll take a look on the open with the premium.
Inverted. Reminds me of Top Gun. By the way, did you know they're going to do a Days of Thunder sequel? How about that?
I did not.
You live long enough to do sequels.
Yeah. They're redoing, I got to think about after this break. I'll try and figure it out. But I was talking about Rounders the other day. And there's some people that have never seen Rounders that are close to me. And I'm like, This has got to stop. Like, I can't handle this anymore. Austin Powers, Rounder. Like, what are we doing here?
Yeah, I got to show my son that movie. I'm in that phase where I'm showing like my 22-year-old movies that I love. I've been doing that for years, but now he's got to the next level now. You know what I'm saying? So there's like next level movies now we got to start showing. You
got to show him the game. That broke my brain. If you want,
it did, right? You're still talking about it. Yeah. That's the sign of a great movie.
True. We're going to take a quick 90-second break. Join us on the YouTube chat. We'll be popping in there, especially if this market is kind of dull. We will lean heavily on you guys in the YouTube chat. We'll look at some of your trade ideas and questions. We'll analyze what you got. But we'll be back on the other side of this break. You're watching Tasty Live.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading, and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say? Other than, boom! Trade like a trader. Tasty Trade. Make your move.
Get live trade ideas,
Technical analysis,
earning setups,
option strategies,
macro insights,
and real positions from traders putting capital to work
in real time.
only at Tasty Live.
Only on Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What's up, Tasty Nation? Welcome back to the show. We got E-minis and NASDAQ chopping around. We got some stocks moving around. And Jermal, I'm very excited to announce we've got This Week in Stocks coming back on this Freaky Friday. Are you ready for it?
I'm ready. Let's take a look at This Week in Stocks. It's been a week for sure. Oil hits 100 in tech resets. Now, to be clear, Brent crude did hit 100 this week, and light sweet crude was as high as 93.5. So this is definitely a headline that grabs people's heads, though. Let's move to the next slide. It has been a week, and oil has been the thing that's moving us around. It's been the beginning of what we think is going to be consecutive big weeks. This week we had some major earnings for the week so far. Again, through Thursday's close. NASDAQ's down 2.2% yesterday, leading to a 1.5% down on the week. Dow is down 0.8%. S&P down 0.7%. Russell, the same number. Russell is up 18.5% on the year so far. So, NASDAQ is in the lead. What's interesting about that, Mikey, is none of us are really talking about the Russell or trading it like that. I mean, I don't know. I actually do have an IWM position that's further out. It's also a calendar. It's a diagonal, I think. I forget about it at times. I just want some exposure there to kind of keep track of it. But I mean, not you, not me, that I can think of, Liz or Chris or Ilya, or none of us have really talked about the Russell, yet it's leading the way. Isn't that funny?
It is funny. I think there's one person we can blame for that, and his name is Errol Coleman, because he is just constantly talking about NASDAQ. So that's all we look at.
It's true.
This is his fault.
It is. Agreed. And we'll take that up with him when we see him today.
Yeah.
Let's move to the next slide. Brent crude rose every day and finished above 100. And essentially, we saw the same thing in light sweet crude. Both of them are pulling back this morning. But we have oil rising. You have the 10-year yield rising as high as 4.7% more recently. And this is just nothing but inflationary, right? Meanwhile, all of this you would think would be affecting the economy in a major way. And initial claims just came out the other day. I thought I saw this yesterday. I'm glad that this is here in print. That was the lowest number since 1969 for initial claims, for initial jobless claims. So it would seem that the job market is intact and everything seems fine. And I don't know if you've noticed this, but I've noticed this too. Every day back and forth and going back and, to and from work. And we're seeing oil rise every day. And the last time, this happened, which was a couple of months ago. I mean, our gas prices skyrocketed. Not happening right now. Knock on wood. I've noticed, it seems. So for the time being, it doesn't seem like crude gas prices are 100% correlated with crude prices, at least in the upward direction. But maybe that changes over the weekend.
Yeah, I think maybe there's a slight lag, if anything, which should give us the leg up of like, oh, I need to fill up this tank right now because these prices.
That's what I was thinking.
Skyrocket.
That's what I was thinking. And it was one of those times I was like, I'm going to bring my little carton of gas along with me too, a little gas carton to fill that up as well. It is a trip.
Yeah, one of my friends, he paid like $6 and change for gas, and I was like, dude, what are you doing? Look at the crude oil futures market. It's down 10% today. Just wait a couple days. And he's like, what are you talking about?
Is he in Cali or something, or New York?
No, he's here. He's by like O'Hare. I think that was his issue.
God. Oh, jeez.
He went to one of those like price gouge places.
He got scammed for sure. Tesla and Alphabet, of course, defined the outside. Both of those had earnings the other day. Some of the other names that had earnings, I noticed this the other day, LMT. I thought about selling a call spread in there, and then I looked at the chart, and I'm like, you know what? This chart is actually pretty low, so this thing could have legs. But that moved 10%. Micron did not have earnings, but up 3% on the weekend. That's been moving around quite a bit, Micron and SanDisk. IBM had earnings. Of course, they had already put a lot of the bad stuff out there about a week ago with a pre-announced, so earnings were just a foregone conclusion. Now had earnings. That was down. It makes you wonder about the software trade. Google and Tesla, of course, both were pretty ugly as far as reactions.
Yeah, Tesla had a huge gap down and then a continuation to the downside yesterday. So I think that is the weakest you can get in terms of signs from a post-earnings move. Google, I think, is obviously a different beast here, but still chopped around and still had an intraday sell-off even after the gap down. But yeah, Tesla is up $2 pre-market here. We'll see if they can recover some ground.
And of course, we just had Intel overnight. That's up $3. It was down 2.3% yesterday in the regular session, but it's up a couple of dollars here. Like you said earlier, it went up as high as 112 in the after hours, but kind of pulled back. And again, not that surprising based on what we've seen from some tech earnings so far. Let's move to the next slide. Record deliveries were not the story. Again, they were focused on what kind of cash levels and the spending that's going on for Tesla. Again, big down move, 14.5%. Free cash flow, I never say those words, but I'm saying them now, down negative 1.1 billion. CapEx, of course, is the thing that we're always watching on all these stocks now. I didn't even know what CapEx was 2 years ago, and now I hear it all the time. 142% year over year for them. So it's about the spending, and I think that's the number one thing clearly we're going to be paying attention to this time around. Last quarter, it was great if you're spending a lot of money, or definitely 2 quarters ago, it was great if you're spending a lot of money on AI. Now it's like you're spending too much.
Yeah. And it's gotten to the point where like the spending is crazy and all of these companies are intertwined. I think that's like the big risk, where if one of these companies starts to sputter out, the rest of these companies are like, well, wait, we have a deal with you. You can't sputter out now. And then that company suffers and that company suffers. And it could just be a big unwind here. We'll see.
Negative feedback loop, right? Mm-hmm. They did record Q2 deliveries of 480,000 and 126. So there's that. Let's move to the next slide. Alphabet Cloud accelerated, but again, negative cash flow cash flow went negative 5.9 billion free cash flow now. So, and then the Google Cloud growth did rise 80 to 82% this time around. So, you're seeing the cloud thing still be a strong component of their earnings, but yet and still, it's just more about spending. What's going on? How much you're spending? I think that's just going to be the way they're going to be judged.
Yeah. And really, it's how much are you spending and how great are your deals going out to 2027, 2028? It feels like that is what the market wants to hear, and it seems that they're not hearing it just yet, because I think next week's going to be crazy, especially with all these companies. Like even ServiceNow was the only one yesterday that caught a bid, but they just had an intraday sell-off and erased the whole thing. They're up a little bit pre-market right now, but it was basically zero stocks were up after earnings in a substantial way.
Yeah. Let's move to the next slide. The suppliers traded differently from the buyer. Every memory name shown was positive, while the NASDAQ fell 2.2% yesterday. And I did notice that, Micron was the big mover yesterday. SanDisk was up, SCX was up, WDC was up. So that was definitely a weird situation. And again, you can only attribute this to just kind of like the earnings day, where there's a lot of moving around, sort of paper being pushed in every direction. But that was the day before, they were all kind of down. The next day you come in, they were up, but NASDAQ was down. But again, NASDAQ was being dragged by mostly Tesla and Google. So that was kind of the story there.
Indeed. Yeah.
It is weird though, man. Let's move to the next slide. AI was not one trade. You had Now down 3.7%. IBM basically flat. Intel at least was up in the after hours. Now we're seeing that's not as up as much. But again, with Now, you got the AI annual contract value of greater than $1 billion. You got IBM, their distributed infrastructures, down 42%, but up 37% overall, at least. And then you have Intel, data center and AI revenue up 59%. I mean, now this is the one thing we're talking about with every one of these stocks, man. I mean, it's just, when was everybody doing the same thing kind of at the same time? I just don't even know. And it's just wild.
Yeah, it's very concentrated, and we're seeing it every single day. Like you pull up MU, it's down 30 points right now. I would imagine SanDisk is down 30 points, or not 30 points, but down in general. There you go.
It's down like 60 or something. Yeah.
It's like these things are moving with a 1.0 correlation, positive correlation, it feels like. Microsoft and like some of these other software names too, up $4. Is CRM up? Yes.
Is
so
it?
It's like,
That's
yeah,
funny.
they're moving together. It's crazy.
Yeah. Let's move to the next slide. So this week, we have 4 mega cap reports land inside a 30-hour macro window. We got the Fed, we got GDP, we got the next round of earnings coming up. STX has earnings on the 28th. FOMC, of course, begins. We got the decision on that Wednesday in the afternoon. Then you got Microsoft, Meta, Qualcomm all hitting. Then you got GDP and PCE on Thursday. Also, Apple and Amazon after hours. Holy cow. Between Wednesday and Thursday, it's going to be nuts. It's going to be nuts, man. I mean, we got to get some sleep this weekend because it's going to be wild. It's going to be crazy. Yeah. And then Friday, we got, I don't know what the hell that is. Is that Costco's same-store sales? Probably on Friday. Again, that stock's been all over the place, too, recently. Can't seem to break 1,000. So can the AI builders defend cash flow while spending accelerates? Probably not, but we'll see. The other thing about the market is, like, it's all based on sentiment, right? And so maybe they end up saying the same thing, but week over week, it just doesn't matter as much. Things change. So 3 questions now connect the tape. Does Brent hold 100 and keep 10-year near 4.7%, especially with all these inflation numbers coming up? Can Microsoft, Meta, Apple, and Amazon defend their cash flow? Does Intel's rebound broaden the memory and compute trade? Or do they even, again, this was Thursday after close, we did these, so do they hold on to anything? And do they buck the trend of going down on earnings is the real question here. Yeah.
I think they're going to have a hard time doing that. Which is why I feel good about these butterflies that we have expiring next week. 2 of them are one of them is an NDX, one of them is an SPX. Both of them are slightly out of the money, but they can be massive hedges against these market moves, especially if we get inside down moves in a lot of these stocks.
Yeah,
it's gonna be crazy. It's gonna be crazy.
It is.
But yeah. I just realized you brought up Costco. We have this 1100 calendar. I think we should put this on the list of things to do in 17 minutes here when the market opens to close this short call, because we sold it for like $650. It's trading for 50 cents now. There's no reason to have that on. I'd rather take the 50-cent risk and just open up that possibility for a reversal.
I hadn't even looked at it in a while. Yeah.
But yeah, we're going to take a quick break. We'll see you on the other side of it. You're watching Tasty Live.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. You got E-minis up 5, Nasdaq down 27. Could be a choppy inside day. My name is Mike. I'm here with Jermal, and we got Liz in the house. Liz, how you doing? I love the sweater.
Thank you. I feel like it's like the Taylor Swift sweater, but with cherries. So
yeah.
Okay, so this morning. yes.
I got to talk to you guys about something diabolical. I actually saved this because I knew that this was a good time to talk about it. It's a trip to me. The Odyssey. Now, have you guys seen it?
I'm going Sunday with my son.
You're going Sunday. Okay.
Yes.
Like, you seen it?
I tried to get tickets and it was impossible. So I had a frustrating rage quit. So I'm waiting until a week or two. Like, it's literally, you cannot get tickets unless you're in the front row.
Yeah.
Because I want to see it in IMAX.
No, there's no IMAX tickets available.
Yeah.
There's no IMAX tickets.
Crazy.
That's what I'm getting at. Damn, I'm good. See, this is exactly why I brought it up. Do you know that there are only 25 theaters in the U.S. that are 70 millimeter IMAX?
I did, because my son told me that the other day, and he's like, well, you got to go to the one. So we were trying Seven Bridges, which is by me, and sold out. So, I mean, you couldn't, it's done. Like, there's none. You can't even go at 10 a.m.
Is that or is that not the most diabolical idea in the history of film? To come up with this idea, to do that film in that whatever resolution, and then put it in only those 25 theaters. Isn't that true?
It is crazy.
And say, good luck.
There is a life
Watch
hack.
this movie, good luck.
There is a life hack, and I can tell you how to get tickets, and it's terrible. We'll talk offline.
Nice.
Perfect.
Liz, what are you seeing this morning?
You know what was crazy? I was thinking about you guys. When I watch you in the morning, you guys are doing a great job. I'm glad This Week in Stocks came back, because that was one of my favorite segments. But this morning, I know you did your Super Bowl, Mike. I did a Jade Lizard in SPX in the 0 day. Jade Lizard-esque, because obviously I can't afford a naked put in SPX, even if it is 1 day. That's just stupid. But so I did a Jade Lizard-esque type position in the 0 days. And once again, do I know anything? No, but it seems like we're not going to do much today. I don't. And these are famous last words, right?
Well, what did you do? What were the strikes you selected?
So, and when I say ask, because I did a narrow, here, I'll show you exactly. I did go to 0 on the put side, I did the 73.70, 73.60. So $10 wide on the bottom and $5 wide on the top. So, and I didn't collect over 5, but I know, and you know, that if we meander up, a pop will kill me because I will lose money. What are you getting? What are you collecting there? It's only $5 wide on the top. 50, 55, 74, 50, 74, 55.
Yeah.
So what do you got there? 250. I think I collected 270, 280. But that being said, I was like, if we meander up or stay right here, I can take this off. If we pop up violently, I'm going to lose $120 or whatever. But yeah, it's not bad.
Yeah, I think these, like we say all the time, like if you really want to have no upside risk, you should collect more than the width of your short call spread. So you would want to collect more than $5. However, you also know that these options, these spreads, even if they move in the money, like let's say the market goes up to 74.55 in SPX, this 5-point wide call spread is probably going to be trading for 250 until closer to the end of the day. Like it'll still have enough extrinsic value to offset a full intrinsic value loss, which is why when you switch this over to Theo, it's tough to show Theo with the 0 day, but when I go to the top of the strike here, the Theo P&L is basically flat. It's not a $250 loser. That would only happen at expiration. So to your point, if you're collecting 270, 280, $3, $4, like you're going to be fine. And you can see this here. If I change this to $4, still not quite 5, but the Theo extends beyond the in the money spread because the market, this Theo analysis knows it's not going to be trading for max loss until at the end of the day.
So this was my go-to move for a very long time during market hours. I mean, I've never done one of these in the pre-market or the global trading hours. But I mean, I'm not saying I make a living out of this, but I like SPX. I love selling these. And I would do an SPX Jade Lizard around 9 o'clock every day until you two convinced me to be a psycho and trade before the market opens.
We did? What? You're the one who said you get up at 5 o'clock and put on the
No,
trade
I do,
run
and I'm very
go work
happy
out.
with it. But I don't like when streams cross, so I like things to be organized. So if I'll put different things in different accounts with SPX. So I stopped trading my Jade Lizards at 9 once I had all those Super Bowls in because they were crossing things. So
Yeah.
I think I'm kind of back to the I'm going to go back to the Jade Lizard and see what I can do. I'm going to try and pre-market though. You get what I found fascinating, and I hadn't looked at these in the global market hours. You get more, and I can get farther than I could at 9 o'clock. When I would put these on at 9 o'clock, I'm aiming for this in credit, just around $3, but they were much tighter, much tighter at 9 o'clock.
Yeah, and that's a testament to just the extra time risk value that you get. with these pre-market hours. Like this market could literally do nothing. It really hasn't from when we started at 7:30. But the premium you would have gotten at 7:30 if you put the same trade on as now is significantly higher because it's another hour of risk.
Right.
So it is a nice little bonus for the SPX pre-market global trading hours session, which you can easily access. Just change the trade session to 24 hours, and you'll be golden.
I manage this differently. I know with the Super Bowls, you're kind of looking for a pop and then you're out. And I actually think that's the smart way to trade those. With these, I leave them. So I'm looking, this, whatever happens at the end of the day happens. Unless it's because I know my risk. I know my risk to the downside. I know my risk to the upside. And if it lands right in the middle, I get to keep all $300. So that's kind of how I manage these in the zeros. If I'm doing a Jade Lizard in a farther out in time, I for sure manage it. But if it's a 0 day, I kind of let these go. They've been pretty good.
Yeah, especially you have limited risk to the upside, and if you go through the spread, you can close it for scratch or whatever. But yeah, that neutral range is pretty wide.
If it does go wildly through it, I close it for I'll close it for a scratch. But if it's going down or if it's meandering, I leave them.
Yeah, but you have a nice wide range, 100 points.
Yeah,
basically in either direction.
Yeah, what could possibly go wrong? Yesterday we closed only down 80, right? So we were down as low as like 119, 120. I wasn't near my computer at the close yesterday because I had some other things to do, but so that's the first thing I look at as I go and check out. I was like, you know what? I'm leaving my SPX, downside broken wing butterflies. And my daughter pinned one.
She was
like...
Mike, cue that up again, and let's. We got some questions in chat. Cue that up again, just to trade in SPX and show how we change it to get it executed outside of the regular hours.
Oh,
yeah.
Perfect.
So just in the trade session, change it from market hours to 24 hours, and that will route you in the global trading session window, and you could get filled right now.
Yep. Because it looks the same, right? If we forget to change that session, it looks the same. It looks like it's working, but it's not actually working.
Yep.
And what I liked about that, though, Mike, too, and we kind of vetted this the other day, when you change it to the global or the 24 hours, it stays in the regulars. You don't have to re-put it in once the bell rings.
Right.
It just transfers into a day order if you're not filled on it, which is kind of nice as well.
Yep. 100%.
And your closing orders transfer as well, too. So when you put your Super Bull in and you put a closing order in it, that goes into the regular trading hours as well.
Yep. Yeah, it's a nice little free-flowing system we got there.
Yes, yes.
But yeah, speaking of like overlapping, I feel good about this. I mean, I don't feel good about this short put spread being right at the money, but I use these strikes at 7,400, 7,390 because I have the 7-day butterfly at 7,400 with my short strike. So even if we chop around here and I take a loss on the Super Bowl with the 0 day, this is going to appreciate pretty dramatically over the next couple of days, but also just today too. So we'll see what happens, but I'm hoping for a rally for that Super Bowl's sake.
Yeah, so butterflies are really tricky though. You want to rally today, a little bit of a rally. I mean, if you stayed right here, you wouldn't lose any money. And then you want it to pin 7,400 so the butterfly opens up. Not even a week from now. You want it a week and 5 hours from now.
Yep. Correct.
Yeah, I mean, I got the same one. I don't want to win on this thing. I actually want to move away from this thing. I got plenty of other things in the portfolio that work if the market moves higher and away from this thing.
Yep.
Yeah.
That's what we need.
But
NASDAQ just ripped up 20 points as we're chatting. So we'll see.
Did it?
Maybe we'll go higher on this morning session. We got about 5 minutes left until the equity markets open. Crude oil is creeping up, erasing some of that loss. Ominous.
Yes, that is erasing some of that loss. That's crazy. And what did volatility do on the close yesterday? Can we take a look at that? Like I said, I was disposed for the last hour. So what did vol do on the close? So VIX is 18. Okay, so it's still keeping its wings up. Mm-hmm. Okay, and how's your...
Yeah, it got crushed. I mean, it didn't close at the high, but it was right in the middle of the range.
And how's your
18-ish.
How's your fancy VIX futures chart?
It looks the same.
Okay.
It looks pretty similar. Still in contango.
I just love how enthralled she is by that.
I do. I love it. It's my favorite thing. Every time I say it, I want it on the. I'm gonna keep asking. In some.
I guess you gotta add. Here. You gotta add /VX F27.
Oh.
Now it's probably available. I would think. Jan should be available, right?
Yeah.
Is Jan available?
I
Is G
can't believe we
available?
have something in 27 already.
Yeah.
VXM
Yep.
27.
F is available. Is G available?
There it is.
VXG 27.
VX.
G
27.
might be
Look at
available.
this. Now, Jermal, do you have that in front of you, or do you remember these features?
I remembered it. I actually remember it. Yeah.
Do we have M? Oh, we could just throw it on there. It'll eventually be the
No.
It'll eventually pop in. That's a good point.
Yeah.
It's ways off.
So we have the F, the G. So now we can see holistically. Where are we? There you go. So yeah, 19, 30, 2005, 2081. So it's a pretty decent contango there still. And then you have it flatten out 21, 21, 22, 22. So yeah, the near term is still in contango. Until that changes, I'm not playing for a big market sell-off. We'll see.
So I was looking yesterday, sometimes we can see weird things in the term structure, right? And I was looking yesterday because we were talking with Jem, and he was talking about, the midterms. And I was like, ooh, is there a kink in the vol curve? And there actually is not. But I thought there might be an election kink in the vol curve. If you guys remember, we saw that in like throughout 2024, right? We saw that election bump in there. We don't necessarily see that in midterms. So it's not, as of right now, it's not expected to be anything crazy come, when is midterms? October, November, right? Something like that? I don't know.
No, it's usually, my birthday is November 2nd, and it's usually on my birthday, like wrapped
Is that what it is? Okay.
Very,
Yeah.
very, very beginning of November.
Midterm elections.
Yes.
Happy birthday. Here's some political craziness.
I know.
November 3rd, yes. And your birthday's the 2nd?
Second. Yeah, it's always
Yeah.
like wrapped around there. I knew it. Like that's the only way I remember.
Yeah.
Fun fact though, you guys Cubs fans or Sox fans?
I'm a Cubs fan.
I'm
There's a lot of-
omnidirectional.
There's a lot of...
I'm actually a White Sox fan, but the Cubs won the World Series on my 40th birthday. That's the only.
right.
If I'm ever in a trivia session and they ask me the date the Cubs won the World Series, it's the only athletic thing I'll be able to remember.
They actually had I was at the Cubs game the other day, and they had a trivia question. It was, when they won the World Series, how many games did they win, including playoffs? And it was 144 games. So keep that in your mind too.
Okay,
Wow.
I got that.
Another
November
another
2nd,
side. Yeah.
144.
Yeah, I became a Cubs fan just from going to games over the years. But then our oldest son was born during that 2003 run that they had, which obviously resulted in the Bartman game. So he was born like maybe the day before the Bartman game. We were literally in there. And it was just like, okay, push. And then after the push, we like look up at the TV
Bartman caught the
screen.
ball.
me. It wasn't that game. But it was one of those games where we literally like were looking up at the game, me and the doctors in the room during one of those games. So that's kind of how we kind of, and then we took him a lot of Cubs games when he was little. It was the thing.
Yeah, I get it.
It was 114 games. Sorry, I'm spreading fake news.
I was like 144. What?
I was like, Mike, I would believe whatever you say. So don't feed me fake news.
Trust me, it's a problem in my personal life. I'm very confident in whatever I'm saying or doing, and I've been known to just drive in the wrong direction for 10 minutes until someone's like, "Where are we going?" And I'm like, "I don't know." Like this.
10 seconds here. 10
Yeah.
seconds here.
All right, what are you guys looking at on the open? I know Intel. Did you trade it?
Yes.
Yeah.
So
Yeah, we did.
we got some housekeeping to do. Okay, so we got Intel selling off here. Market's selling off. Intel, I've got this butterfly, the 0-day butterfly, which could work out very nicely if we end up selling off another 10 points or so. I've got the 80, 90, 100 butterfly for today. I have a GTC order in to close it for half the width, $5, just in case we get down there and I'm doing something else. What else did we want to do? Costco. We wanted to close this short call.
Yeah. True that.
We basically collected 90% of the value. This is a zero bid option. Ugh.
Yeah, it's gonna be hard. I have the 1,000 and the 1,100 call spreads.
That's no bid at 160. I mean, you got
It's
it.
stupid.
Put that in for 5 or 10 cents.
Yeah,
It's not gonna happen though.
let's try it. Give us the 20 cent.
No chance.
We're just moving the bid. It's fine.
Yeah.
Nothing to see here. Just moving the bid.
I like watching the bid go up though. It's kind of fun.
It's
It is
funny,
fun
right?
because you're like, this is
like, that's me.
I'm doing this.
It's me.
That's me right there, 25 cents. I'm just going to leave it.
I would think that. I mean, you're not in any dire risk to get out of it, are you? You still have the long.
No, he's fine.
No.
It's not gonna happen.
But yeah, Tesla, I have 200 shares in Tesla because I was assigned on this butterfly, but it doesn't matter. My risk is still the same because I have these 2 long puts that completely protect my intrinsic value risk in the shares. And this is just
closed it as a package because all that happened is your capital went through the roof because Tesla's $320. That's all that happened.
Yep. Yeah. Buying power goes through the roof, but you can close it. Even if you're in negative buying power, if you have a position like this, you can close it because you're freeing up buying power in that transaction. So yeah, that would be the case here. I don't have to close it, and I will close it today for sure. But I would like to see if we can get a rally here. That'd be nice. If we could rally 20 points and have these things fill up with extrinsic value, that could be a nice trade.
So you have the capital to hold these shares?
Yes, for now.
So that's what I was going to say is if you have the capital to hold these shares, you can take some patience with it because you essentially have the exact same position. A lot of times when you're doing expensive products like this and you get assigned the stock, sometimes you don't have the buying power to hold these shares. Then I would recommend not trying to game the system and close it.
Yep.
Okay? Because 100%. Otherwise, I believe it'll be closed for you at a certain point if you don't have the capital.
Yeah. If you're in negative buying power, the broker has you on a list and they will do it on your behalf if they can't contact you. That is for sure. SPX, maybe I should close. Maybe I'll put in a GTC order for this one too. This Super Bowl at 7,400. Probably not getting up to 75.35 today, but we collected $100 for this. So I'll put in a GTC to close this for 50 cents, just to capture half of that. If we get a little intraday rally, because we're so close to the strike, I would hate to have this go in the money. So yeah.
I just remembered. I have T-Mobile. I sold some vol in T-Mobile yesterday. I was short a put in there maybe a couple of weeks back, but then I got out. I was actually probably on that news, right, that we had for SpaceX and satellites and stock tanked, and we've been seeing that across those names. I decided to get back in after earnings yesterday. That's the great thing about when earnings get out of the way. You can just trade vol again and not worry about earnings. So I got back in that. And then I just remembered Charter, similar deal. I think I want to sell a put in here. It's another stock. I mean, these stocks have been getting waxed. I know Gus came with some news yesterday, but this thing just had earnings. Stock is down. I'm going to look to sell a put in here as well in SEP. So I've been trying to get a little exposure to some of these type names.
I've never traded Charter. Is that liquid?
No. Wow, this is a little expensive though. I don't know if I want to do that.
Those are pretty wide markets.
They are very wide markets.
Yeah. These are ones
I
where
don't like this one as much.
You can trade these. You just got to be really strike selective.
I was looking at that 110, but I don't know. I don't like it as much. Again, I liked the T-Mobile worked better, but yeah, I don't like it, so not doing it.
So if you try, you didn't push anything through, did you, Mike?
No,
because I would be surprised if that's not closing only in Charter with markets that wide. Because there is like a fail-safe at Tasty where if the markets are very, very wide, they try to protect the customers, meaning you have to call to trade it, and those look like wide enough markets where it might be closing only.
That's a nice feature.
It is.
Yeah,
nice.
it is nice.
They try to protect you from yourself.
I wish I would have
had
that for some other things that I've been involved in these markets. But yeah, choppy day here. I think this is going to be just a big nothing day, which lends to your Jade Lizard-esque and SPX.
Yeah.
0-day iron condors too. But SPX still has a implied range of 30 points in either direction. If I'm not mistaken, these numbers are coming out at 8:45. The PMI.
Oh, are they?
8:45 Central. It looks like.
Just trying to get a handle on what's going on here so far.
Coming out at 8:45 today.
As I look at a heat map,
so.
It's confusing. I don't get
Unless this is wrong, but I'm looking at the economic calendar and it looks like 8:45 Central.
And Mr. Vecchio didn't alert you of this?
Oh no, he did.
Okay.
He did. He was the first one to let us know. Yeah. He may be catching a bid here. Look at this.
I mean,
American Express down on earnings, down 5%. I don't know why. I mean, I use them more than enough.
Looks like we had some people in the YouTube chat also assigned on Tesla. Yeah.
Really?
Tesla. It's kind of interesting. I'm kind of surprised that we got assigned, but
me too.
It is what it is. But yeah, these options still have a decent amount of extrinsic value.
Was it 0 days that got assigned?
Yes, 100%.
Oh. That's pretty weird. That is bizarre. And it's bizarre that you got assigned on both of them. So when this happens and it's a wheel, they don't know that they're not trying to assign Mike Butler. They're not trying to assign the person in the chat. So that's why sometimes when it's this, you might get assigned on, when you have a 2-lot, you might get assigned on 1. If it's just a randomness. They're not together. They don't know that you have a 2-lot. It's a wheel. So it's bizarre that you got assigned on 2.
It is bizarre. I agree with you on that. Yeah, because it's so random.
Yeah.
That they do it.
It is random. Like as soon as you said that, I jumped into my Tesla position to see if I was assigned, and I was not. So it's good for you got assigned because you actually get all that extrinsic value immediately. If you understand that and know how to trade it, you get all the extrinsic value.
100%. And yeah, if we get a rally, if we are fortunate to get a rally in Tesla, then I have the shares. The shares are offset in intrinsic value with the long puts. But if we get a rally of 20 points, this put would have $300 of extrinsic value. Like this would be a huge winner if we can get an intraday rally here in Tesla. Because now that I have the shares, the nice thing about that is if we did get a move up to 355, I wouldn't have the short options with extrinsic value. I just have the shares. So I am completely reliant on the extrinsic value in the longs. And as long as I can hold this intraday, I'll do just that. See if we can get a rally here.
Yeah, I'm hoping for a rally for you too.
Many of the names did not have good earnings or not responding to earnings well. American Express, Deckers, Intel, obviously, Charter Communications, not great.
Intel was crazy because I had the shares and I did the upside and the downside broken wing butterfly, which did nothing for me because I didn't sell premium. I mean, I did them as wide as I could as protection for movement on both sides. So Intel did nothing for me by a non-move.
Yeah, let's go back to Intel. Ooh, down $2. So this butterfly here, I have this order in for $5. It's trading at $2.78. So yeah, we would need another $5 probably in here, but we will see if we can get anything out of this thing. Someone in the YouTube chat asking calendar spreads. If I have a short leg expiring today, should I close it? This is a debit spread. Can you advise? You don't have to close it. Like I have some positions.
Where's their strike? Is it in the money or out of the money?
Yeah, if you're in the money, then you're going to run into a scenario where you have 100 shares and a long option, similar to my Tesla position. But if it's out of the money, like this Google one, 360 short, it's going to expire worthless. 365 short, it's going to expire worthless. And I just have these long options left. So I'll leave these long options on because they're trading for 20 cents. And if you get a crazy rally next week in Google, you kind of have a free shot, right? I know, Liz, you were talking about that for many years, just like getting into these free shots where you've already reduced cost basis on these options that are pretty much worthless.
Yep. You also, Google's an interesting animal. I just looked at this because you have 3-day and 5-day. So your long is the 7-day. If you wanted to sell something against it, you could. But those are pretty far away.
Yeah,
I saw the strangle in Google yesterday after everything played out, and I went out to SEP.
Yeah, looks like the YouTube chat viewer point B is out of the money. So yeah, if it's significantly out of the money, you don't really have anything to worry about. If it's teetering out of the money and in the money, then it's just keep an eye on it.
Yeah, you don't have to. The teetering is the problem because unlike Mike's butterfly, where he's got the options protecting it, if you do have a calendar where your short is teetering in the money, out of the money, if it expires, like you could come in long the stock, you still have the option protecting it. I guess that's not a warning, Will Robinson, but I was thinking the opposite, where sometimes you can come in long or short the stock without it being protected.
Yeah, if you have a vertical spread and you're teetering, that's where you could really run into issues.
Yeah.
The real question here is, are chips going to go up at some point today? It's the real question here. Right now, the market's still trying to figure itself out. I don't really see any real pattern, which is really not that crazy considering it's earnings season and a lot of different things are moving around. But by the time being, chips are slightly down. All those names that are follow-ons, the Oklos, the Wolves, the Irons of the world are also down. There is a little bit to some of the consumer staples type stuff. I'm looking at Kroger. I'm looking at Fox A. I'm looking at Nike even, positive, STZ. These are names that I have in the portfolio. This is kind of how my portfolio is kind of broken down, right? I got consumer staples. I got the chips. And so I'm seeing that Walmart's up today. So it's kind of fascinating to look. Costco is up. So it does seem like it could be a day for the consumer staple type of move. Also software, but we'll see how it eventually plays out.
But they're not up. I mean, I just glanced at Nike. I mean, when you say up, you're saying green. They're not necessarily like up, right? We're not seeing movement, major movement in any direction in any of this stuff.
That is true. Correct. Yes. I was just saying up. Like, so I was trying to figure, every day I come in, I try to figure out, okay, what groups are moving together? What's happening here? Are the chips up or are the chips down? If the chips are down, these are the names that are eventually up, these consumer staples. As you can see right here, a lot of the tech and chip names are the ones that are down.
Yeah. For sure.
There's a lot. TP says this a lot, where he looks at the S&P 100 or 500 and just looks at how many stocks are green versus red, and you can see there are only a handful of stocks that are red in a big way, over 1%. There's 10 stocks, but then you go to the upside, and there's a ton of stocks that are green in the S&P 100. So, really,
and it's like Disney and all those type of names.
Yeah.
This is the number one thing I've done for years. This is, nobody knows anything about the stock market, sure, but you can figure out something about a day when you look at something like this. This is the reason why it's good to look at the S&P, whether it's 100 or 500, because you can get some kind of idea of how you want to trade or how the market has been trading. And this is why for the last 3 weeks, it's easy to tell when the chips are up, you know what's down. When the chips are down, you know what's up.
Yeah. And it kind of, the movement begets movement. I think today legitimately is probably one of the most boring days I've seen thus far. And it's 8:40 whatever right now, 8:42, 8:43 right now, and this is probably we're not moving. I mean, I love when Mike's like, they're trying to rally. We were up 6 points, right?
I was just trying to speak the prayer that I have in my head for SPX to expire out of the money.
And you're doing a live show, so and when you're doing a live show for this long and nothing is moving, that is a rally. You're right. That is green. They were up, right?
Yeah.
NBIS is down 6%.
We have our wonderful viewers in the YouTube chat. So let us know if you want us to look at anything, because these markets are not marketing right now.
They're not marketing.
NBIS is down 6.5%. This is a ticker symbol I had not even looked at for years, and now it's like, it seems like it's in every headline.
Yeah. Let me guess. BE is down as well then. Bloom Energy?
Bloom Energy is down?
Oh, big surprise.
What the heck?
Big surprise.
I mean, these charts are basically the same.
Yeah.
Yep.
Crazy. Costco catching a bid. That option is no longer zero bid. It's 50 cent dollar wide. So you could probably get out. I have it at 50 cents. I'm trying to just hit the bid. I want them to come to me.
Yeah, exactly. So what's funny is last week, the chips were down, right? We had it ended up pretty ugly, I think, with SanDisk and Micron. And these Costco and Walmart of the world were up. And then somewhere at some point, don't remember how far into the trading day, it all reversed, and we obviously ended up having a pretty bad day. So
yeah. Well,
hopefully
Liz,
that doesn't happen.
Appreciate your time. We'll let you go here. Please say a prayer for the markets and see if we can get these things marketing.
I'll give you my genie blank. This is what I used to do all the time when somebody needs.
We'll take it. All of a sudden, E-mini's ripping higher, 50 points. Just kidding.
All right, bye guys. Happy trading. See you later.
See ya.
Happy trading. See you later. E-mini's completely flat. NASDAQ down 0.5%, which makes a lot of sense with Intel, Tesla, a lot of these other stocks down on the day. But we're going to take a quick 90-second break. We'll see you on the other side of it. You're watching Tasty Live.
Putting on strategies, that's easy. Taking off strategies, that's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade. Named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. We got E-minis catching a bid, up 6. Nasdaq down 160 though, and this guy on the screen, E, only looks at the Nasdaq in isolation. How you doing this morning?
Morning. As I'm directly staring at NASDAQ as I hear you call me out on that. That's hilarious. But no, doing pretty well. I heard Liz even mentioning like, oh, the market's up like 6 handles or moved 6 handles. And then I'm looking at NASDAQ. I'm like, well, we're down about 150, 160 on NASDAQ, you know. But no, it's going to be interesting to the point that you made some weaker earnings, selling off to the downside, got some other underlyings dragging the broader market in terms of NASDAQ down a little bit there. So, I mean, it's still early, you know, barely 20 minutes into market open. So, you know, we'll see what we get, but how are you guys doing this morning?
Thriving.
Good.
Yeah, just thriving, surviving, chilling,
just thriving.
Like a villain.
You know, it's funny. I have this. I drew this line on the Nasdaq futures chart when we were talking earlier this week, and now here we are, right back at the bottom of it, 28.5. Like this is the line in the sand.
How do we feel about that? It seems like. I mean, I don't know if the market is going to bounce from here or have a little bit of a continuation, but. It kind of seems like it's a decision-making area. It feels like it's a little bit of a line in the sand, I guess, the way that you put it there, Mike.
Yeah. I think
it does.
I think if we drop significantly below it, maybe we see some continued selling. But yeah, I mean, it has been a point of contention over the last couple of weeks. So.
That's the word I was looking for. There we go. Point of contention.
That's the one?
Yeah,
that's the word you were looking for?
That scratched the itch.
Got it.
Yeah.
But yeah, I mean, we're gonna have Mr. Tim Knight on in a little bit here, so I'll ask him specifically about this Nasdaq chart and my beautiful line that I drew.
You know what? He did have a line drawn the other day, right? And it was like right around there, I feel, or maybe it was 28.2 something. I can't remember exactly, but
yeah. No, it'll be interesting. I know now we're kind of selling off all the way to July 17th low. We're getting pretty close, so I could imagine. There might be a lot of bull stop losses around some of these levels. I know we don't talk about stop losses too much, but it does seem to be a point of contention. If we continue to sell off a little bit lower, I think I'm going to be looking to sell another out-of-the-money put spread on something like QQQ or SPY just to get a little bit of long delta on with the extended downside that we're seeing. And yesterday I sold an out-of-the-money put spread to get some long delta on. And I just wasn't really feeling it, so I cut the loss at $7. So I'm gonna reposition that trade later today for trade of the day, and we'll get into the details about that. But I don't know. I like the downside, and I like the expanded volatility or the expansion in volatility. So I want to take advantage of that a little bit there.
I like it. Do you trade Intel at all?
No, but I got out of the Micron trade yesterday because I didn't want any of that earnings risk with Intel reporting. But I'm a little bit more attracted to it now that, the binary event's out of the way.
What Micron trade?
I got on a little bit of long delta a few days ago. So we got a little bit of a pop. But with Intel earnings, I was like, you know what? I'll get out of this one, reposition, get a little bit more exposure after the earnings cycle on Intel at least.
Yeah, makes sense. Yeah, I had we got this butterfly on. I'm going to keep that on for today. See if we sell off even further from here. But I also had a short put at 130 in Intel. I sold the 120 0-day against it. That's now worthless. So I'm going to move this 120 into the August cycle and pick up another almost $3. If I can get filled here, let's do 275. So this will... They're really going to make me give them a penny, huh?
Yeah, they are. I'm going to tell you that one.
Unbelievable.
100%.
Unbelievable.
Yeah. I know.
But yeah, it's a doozy for now. We're down on it for sure in Intel, but this trade now, I've got the 130 short put with all this premium against it. I've got like $2,000 in premium now, 1,600 in premium. So we'll see what we can do, but we'll just keep compressing that cost basis reduction. I have a 10-point wide inversion, so I can. The nice thing is, if we do get a rally up to 120, I can just buy this back in August, move it to September, reduce the inversion. But we'll cross that bridge when we get to it.
100%. How are you guys feeling about Oracle? I see in the chat Oracle's a joke, and I was actually going to bring that up today.
It is a joke.
It is a joke, man. I sold a naked put on Oracle. I felt good. I felt cool, sold a naked put. But no, this continues to slide to the downside. Now I'm down about $180. Whenever something continues to sell off like this, I mean, how do you guys kind of view some of these naked put trades? Do you guys kind of have a max loss that you like? If you still like the trade, are you just going to roll out in time? Are you going to see if you can roll for more credit? What's your guys' thought process?
Jermal, what do you think?
Naked put trade and Oracle?
Yeah, I'm down. So right now I'm down about $180, right? We've only had the trade on for maybe 2 or 3 days, but Oracle continues to slide and make lower lows. And this isn't a trade that I want to risk too much on. It is a naked put, so
what expiration
I
you
want
in?
to be a little more attentive to it. This one expires August 21st, 28 days left.
So you're into August. So do you have?
I'll risk about $250. I maybe $250 to $300 max. Maybe we'll risk on something like.
So I mean, this name is in that software space. It's been getting hit harder, obviously, than some of the other ones. I would say even. I think it's a good attempt at selling the put, but since it's 28-day cycle, I mean, obviously you're probably going to roll or close this thing next week anyway.
Yeah.
Next week is quite a week, though.
It's a week next week. Maybe it helps, though. Maybe it helps.
I mean, maybe it helps. I'd give it probably another week.
Give it a little time.
But by next Friday, if it's still doing this, I'd be out.
Yeah.
Yeah,
That's how I look at it.
Sure, but I like keeping. If I'm going to sell a put, I like just rolling it perpetually. Otherwise, I like just doing a put spread. But this is a tough one because you're trying to catch this falling knife. I think that's a little different story where you're trying to just catch a day where it's up $5-6 and you can close it, but the market's just not giving you that.
No, not at all. Not even no breathing room there. Just straight underwater. So.
I'm in September with this thing with a Super Bowl. I mean, that I've had on for a while. So, I mean, it's risk defined. There's pretty out of the money right now. My short put spread is a 150, 140 to buy the 160, 180 call spread. I mean, I guess I'll leave it on. I try to forget that I have this thing on every single day.
Which one was that again?
That's Oracle.
Oh,
which
Oracle.
one? What?
Yeah.
Strikes?
Sorry, I reminded you. But I might remind you a couple times next week again. But no, we'll see how this one pans out. Just a lot of momentum to the downside. This thing's been getting crushed over the last couple
It
months.
is. Yeah, it is. I mean, these software names, they just they haven't really had much of a bid, and the earnings from Now yesterday did not help a whole lot. From ServiceNow did not help the situation.
Yeah.
ServiceNow.
Yeah. There's no service, and the damn sure ain't happening now. That's
no.
So someone in the YouTube chat, not Tesla, is trying to close their Tesla shares with the puts. So if you're getting the message, options must match your share quantity. What you could do is I would close the options first because the shares you're going to be able to get out of immediately. So I would route the closing order for the options first. And see if you can get filled at a decent mid price, and then right when you're filled, I would just close the shares right after that, because you can get filled on the shares immediately. The options you'll probably have to work a little bit. So it is
kind of weird when you route them at the same time. You're right. Sometimes you get these weird looking numbers, but again, it's routing them. Like showing them talking about, Mike. If you do one put, sell the one put versus selling 100 shares.
Yeah. Oops. If I click close all for this, where are we? Tesla. If I click close all, it'll give me everything's got to be balanced here. The validation error. So if you get rid of one of these legs, that would probably help too.
Right.
You could probably sell one of the puts, sell 100 shares. So that would be a way to get around it and keep your quantities the same.
It's not doing it for you.
Yeah, but you could do this. So you could go to your positions tab, click the shares, click on one of these options, actions, close position, balanced.
There you go.
And that'll be 100 shares in one option. And then that will allow you to close it. And then you could do the same with the other leg. So got to match it 1 for 1. It's likely a risk thing that they have in so that they're protecting you from doing like selling 200 shares in one option where then you're left with this undefined risk. Mm-hmm. So just do that.
That put market is a little wide, so it's going to be a little hard to get out. But again, when it's showing you that price, it's selling that put, let's just say $24, and selling this stock at $316, so it's going to be $340. But it's moving around, right? All these things are moving around, so it is a little hard sometimes to close.
Yeah, and we could do this. I'll do this right now. Like, we're probably not going to rally 50 points in Tesla today, so I'll just do this to show you. So I'll do the balanced. I'll click one of the legs, do the balanced, route it for 340, instantly filled, and then we'll do the other side in Tesla, 100 shares, long option, close position.
Like, it's scary getting the sign, but when you see what's actually happening, and especially if you have options against your stock, it's really not that bad.
Yeah, and I'm routing it for exactly the same price as my strike. So the 340, we were just filled exactly at 340. The 370, if I can get filled exactly at 370, that basically confirms that I've realized my max loss in the butterfly. I didn't take on any additional max loss or max profit, and you're good to go.
Put call parity.
Mm-hmm.
There it is.
But yeah, that one didn't work out, unfortunately. But I still have this iron condor on, and we'll just leave that one.
Your extrinsic went up massively.
Yeah, yeah, it did. But yeah, can be a tricky scenario, but as we just showed, really easy to get out.
Indeed.
I don't know what Dr. Jim is doing, but the NASDAQ is down about 300 points. So we'll have to see. We'll have to see what's going on there.
Well, he's doing a Wizard of Oz impression. I see him in the room here, but we have not brought him on just yet. But yeah, we'll ask him on your behalf.
Yeah, let me know. Get back with me because this market seems to be sliding. It's getting a little aggressive here. So we'll see how we position for the rest of the day.
Cool. Well, appreciate your time. We'll see you a little bit later.
Awesome. Thanks, guys.
Adios.
Later.
Yeah, E-minis selling off here, down 6. NASDAQ continuing its slide, down 1%, almost exactly. Kind of a crazy day, but we're going to take a quick break. Join us on the YouTube chat if you haven't already. Throw in your trade ideas, questions along the right-hand side chat. We got Dr. Jim coming up on the other side of this break, and hopefully you heard our question, and he'll talk about the NASDAQ a little bit. But we'll see you in a little bit. Tasty Nation, see you on the other side of this break.
Later.
Peace.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined.
Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1, and Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
I'm Jim Schultz, and welcome to Inside the Trade. It is a Friday. We're heading into the weekend, and I, like many of you all, got assigned in my Tesla trade. So I was like, man, I was going to unwind this guy on the open. Like, I was going to clean this guy up on the open, but then I was like, let's do this on the show live, because I know that when you are assigned, sometimes it's a little tricky. Sometimes it's a little sticky. So let's do that here live together. So Ben, bring us into the market, man. Man, I heard the guys before, Mike and Jermal and E. Yeah, NASDAQ is sliding. She is slipping going into the weekend, down 250. But take a look at the portfolio here. So Tesla, we are the proud owners, and maybe not so proud owners now, of 200 long shares in Tesla. So I thought, let's take some time and let's unwind this guy live. So the first thing you want to understand, whenever you are assigned on any position, the risk parameters that you had going into the position before you were assigned are no different. These are unchanged. These are no different. As long as you don't start breaking things up and creating brand new positions, your risk parameters are the same, whatever they were before the assignment. So if they were defined risk, they're still defined risk. If they were undefined risk, of course, they're still going to be undefined risk. And so for us here, this is a butterfly, or I guess was a butterfly. This is the artist formerly known as a butterfly. And so because of that, we still have the same risk parameters on that a butterfly would have on. And one of the better, or one of the best maybe qualities of a butterfly is the maximum losses known. Like, you know your maximum loss, you know your worst case scenario on entry. And so you don't have to necessarily worry, if I get this wrong, if it doesn't work, what's going to happen. So we were assigned. And so if we take a look at, so we're going to have to use a couple of different tabs here today. We're going to use, normally I would go to like an activity tab. Normally you might bring up a little Alice in Chains, and that would of course be good. It's a great way to start the weekend. But if you get assigned, you actually need to dig into the history tab. So if I go into the history tab, you're going to see, let me sort by Tesla. And let me know in the chat. Let me know where you guys are at. Let me know if you guys got assigned. Let me know how your earnings trades panned out. Let me know how Intel is holding up for you guys. Man, that thing is crashing like a storm on the shores here this morning. And so that's not great for me. But anyway, I digress. If I go back to 7 days in Tesla, nothing like some digressions early in the morning. You guys are used to the afternoon digressions, but before 10 o'clock, man, it's a whole different experience. So if you take a look at what happened here with Tesla, we got assigned at the 355 strike. So we bought our shares of Tesla at 355. So obviously you can see that's going to eat up a significant chunk of buying power. Like, that is going to be, absorbing a lot of our capital, and it's not really going to allow us to be able to do too many other things. And so what I want to do here is let's just take a look at the situation before we even do anything. So we got the shares at 355. I guess we could have seen it right here, actually. Man, look at how easy that Tasty Trade makes it. Look at how simple this is. It's right on the screen. And so, man, that is some good stuff. So you're going to see we're going to lose about $40 a share on the shares. And so that doesn't look good. So right there, we can kind of put that gets one of those jobs. But then if you look at the puts, let's grab a different color here just because we can. you're going to see that we've got an 80-cent put that's marking at 22.20, right? So that's kind of good. And then we have a 931 put. I'm sorry, the strike is 372.50, but the cost of the put, it was 931. It's marking for $56. It's like, Jim, why didn't you just do that? I know. I'm asking myself the same question here this morning. So that obviously gets another one of those guys. And so net, like I'm okay if I end up with one of those guys, right? Like I'm okay with just kind of a neutral expression. Kind of give me that neutral emoji and I'll be all right. And so what we're going to do is we are going to unwind this guy here live on the show. Now, when you go to unwind an assignment, there's a couple of different ways that you could do this. You may do it a slightly different way from how I do it, but I like to do it in kind of a piecemeal fashion, just so I can clearly see and identify what happened to that piece of the actual strategy. My goal is to close the whole thing down anyway. So whether you do it in one fell swoop or you break it up, you're going to effectively end up at the same end destination. Now, the difference, of course, being, like I'm going to close the shares first here in a second, and then I'm going to close the options. There may be a 20, 30, 45 cent lag between those closing trades. Obviously, with a stock like Tesla, that may work in my favor. That may work against me. But it's only here live on the Tasty Network that it is working at all. So let's go ahead and let's close out of our Tesla position first. I'm sorry, let's close out of our shares first. Well, actually, wait a second. Hold on. Just to show you, if you wanted to do these all in one fell swoop, you could just highlight everything, close the position, go to the full right there, and then boom, you would be able to close it for a 709.70 credit. Now, again, you can see that's going to release a ton of buying power in the account. And that's where I ultimately want to get. You can do that. That's totally fine. And we could do that. We can make sense of that and what have you. But for me, and I've been doing this a long time, for me, it's still easier to actually break it apart. And so that way I can clearly look at, okay, what happened to the shares? What happened to the options? Where did I end up in the end? And so I'm going to break it apart, but you could do it all together if you wanted to. If you're like, yeah, I don't really have the extra 10 or 15 seconds. I kind of want to do this all in one click. You could do that. So let me go ahead and let's close this guy down. Let's close down our shares. So it looks like it's going to be about 314.60 or 70 or whatever. It's obviously moving around quite a bit. Let's see. Oh, it's like 315 now. Yeah, I'll just go in around 315. That's fine. So we'll get our shares closed, hopefully here in the next couple of seconds. Okay, so the shares just got closed. So now we got to hurry. We got to move with some quickness. We got to close our puts. Now, again, I'm going to close them one at a time. You could close them together in a blast order if you wanted to. I like doing them one at a time. It's just the way that I've always done it. You could argue it's not efficient. You could argue it's worse, and I wouldn't necessarily oppose any of those arguments, but this is just how I like to do it. So that way, for my record-keeping purposes, okay, so we're out now. We are completely out of Tesla. If you see, it's gone. It just completely vanishes from the portfolio. It's like it was never there to begin with. If we click on this closed tab, though, you're going to see that for Tesla, we are gone. There is no position left. Now, if you look at the P&L for the day, you can see we didn't actually lose that much money. Now, it may have appeared that we were losing a ton of cash, that we were just hemorrhaging cash and just setting stacks ablaze here on the show. But again, remember that the risk parameters were the same. So now, if I were to go back in and try to figure out my basis on the Tesla position, I can see in the activity tab very clearly, here's what happened to the shares. Here's what happened to the first option. Here's what happened to the second option. Now, you might be thinking, Jim, can you take me one step further? Can you work out that basis? Well, you got to watch from theory to practice later today. All right, we may spend a couple of minutes actually unpacking the total basis on the trade to actually see that the risk on the butterfly, even after being assigned, was indeed defined. But your boy needs that watch time. So we can't do it now. We got to do it. We got to do it later today. And so, all right. So what I want to do, though, I see you guys in the chat, though, man. You guys are in there putting in some morning reps. Man, look at you guys. I see Aunt Duh is in the house. Please give my best to Uncle Duh. I know he's probably nearby. Ash fan, time to light some stacks of cash on fire in the morning. Yeah, you gotta heat yourself up a little bit. I mean, said no one ever in, the late July weeks and months of St. Petersburg, Florida. But yeah, we do have some stacks of cash to get us moving forward. Great way to start the Friday with my favorite man, the magician, Dr. J, man. Let's go. Point B is here. You were assigned on a leg in your butterfly. Can you elaborate, or is it due to the short put? It was the short put. Right now, every leg of the butterfly was in the money, right? So we were going to have to close this one way or another today anyway. Now, when you do a butterfly and you miss the mark, you can miss the mark in two different ways. You can miss the mark by being out of the money. You can miss the mark by being in the money. And if it's all in the money, you have to close it. Otherwise, you're going to be assigned across the board, and it's generally going to be more cost effective for you to just close the strategy. You do have to negotiate bid-ask spread differentials on 4 different legs. Well, I guess 3 different legs. I mean, the middle one is kind of doubled up. There are 0 closing commissions on Tasty Trade, which is super nice. But there are going to be assignment fees. So if you hold the actual strategy through expiration, I think you pay, what do we pay? $5? We paid like $5, I think, per assignment leg, right? We see that right here. Let me see. Tesla. Yeah. Here it is right here. $5. So you pay $5 on our assignment fee. So again, it's kind of like, we'd have 3 parts to that if we went ahead and carried it into expiration. The risk parameters would be no different, but if we carried it into expiration, then we'd pay $15, I suppose. And so it was the short put there. Point B, I appreciate you, my friend. And so Flipper says, can you ask him with his Tesla share assignment, does he plan on selling a call against it? No, I just got rid of all of it. I just closed the entire position. Now, if you were like mega bullish on Tesla and you were like, hey, I think this is the bottom, you could hold the shares. You could just close the put and then hold the shares and then hold the shares to the upside. That would be fine. You could do that and then potentially sell calls against it. It's not a terrible idea. I don't typically do that with like a defined risk strategy. You could do that with something like, like a short put spread. You have a short put spread on, it goes fully in the money, and you're in a situation where like, all right, I kind of still like the stock. Maybe I just close the put, take assignment on the shares, which is effectively what happened to us, and then ride the shares higher. Yeah, you could absolutely do that. I don't typically do that. That would be a little bit off the reservation for me, which is not to say we won't explore or entertain some things that are off the reservation. We certainly do that from time to time. And by that, I mean on a pretty regular basis. And so maybe we'll do that at some point in the future. But let's see. Bread Mud is in the house. What's going on there, Bread Mud? I appreciate you. Ashvin, Dr. Jim is great about paying attention to the YouTube chat as I'm in the YouTube chat. Man, this is some meta level of content this morning. This is Inception level stuff. He will also have a very interactive show at 2:30 Eastern. That is correct. That's absolutely correct. And then there's Flipper, there's N1C. Intel, what are they doing to you? Yeah, what is Intel doing to us? This is a bit of a preview into from theory to practice later, but yikes. Man, we need the administration to come in with something to save the position. Yikes. Man, we had a nice move last night. We'll talk about all that on from theory to practice though. And so I just want to see where you guys are at real quick in the final minutes of the show. Ranch is in the house. Orgdenu is here. What is up, my friend? And N1C, let's see. Ashwin says, I have a doctorate from the University of Memphis. That's correct. I was a former college professor. That's also correct. I was an artist formerly known as a college professor. And, man, that's how I started my career. And I loved it. I loved every minute of it. And, it was great. I mean, it's, if I could go off on a tangent for 2 seconds, and by 2 seconds, I mean, it's going to be the rest of the show. I loved it. Like, there was a really special time in my life. It was a really special opportunity to be able to be with young people all the time. And, 21, 22, 23. I mean, can you imagine? Like, so many of you are finding us and finding me, whatever. You already have a baseline of some understanding of the stock market, right? Like, you want to learn more. You want to, engage with options, whatever. But you have a baseline. You have a foundation. Can you imagine if your first ever experience was me? Like, if I was the one that like forever colored like what you thought about the financial markets, that's scary stuff, man. The fact that they let me in the room all by myself, like that's super, super scary stuff. But it was a special time in my life, man. And I just remember so many times from that, like so many times from that. It was really, really great. And so let's see. Mr. Pillows, what is going on? Ashvin or Daniel, only Dr. Jim could help you live with things like this. Thank you, Doctor. You're the best, man. I appreciate you so very, very much. Let's see. Annie Goodman in the house. What's going on there, Annie Goodman? NDX put butterfly. Jermal and Mike trade. What is the profit target? NDX seems hard to exit. Is this normal? So I don't trade NDX too often. It is a little hard to exit, in my opinion. I haven't traded that in a really, really long time. I would actually, I would ask Mike and Jermal more specifically about that. And so, Andy, maybe you could pop into the chat. I know they're gonna be back on right when I'm done here in just a couple of seconds. And so I don't want to necessarily misrepresent their position. And I don't trade NDX that often, Annie. So that's good to hear from you, by the way. I don't know that I'm gonna be able to offer too many insights over and above what they could do themselves. And so I'm gonna leave that for them. Let's see. Flipper, Doc and Liz should be coupled with a live trading show. That's a pretty good idea. That is a pretty good idea. Let's see. Rant. It's going to be neat doing 0 days and stuff with Dr. J. Put him on in the morning, manage him in the afternoon. He agrees. I actually thought about doing that today. I actually thought about doing like an SPX trade in the morning and then managing it later today. But then the Tesla thing happened, and I was like, well, that's really pressing. That's real time. We can do this any day. And so now you got to watch Monday's show, obviously. And so, yeah, you're not going to want to miss next week's show. I can assure you of that. But yeah, so let's see. Where else are we at? We got a couple seconds to go. Let's see. Thoughts on SpaceX? I have very few thoughts on SpaceX other than it's just so funny to me that, you know, when they IPO'd and they were rocketing higher, pun intended, everybody on the internet was like, oh, it can't go down. You got lockup periods. You got this, you got that, you got the other thing. Like they can't sell it. They can't sell it if they wanted to. And that was quite literally the top tick. Like that was quite literally the highest possible price for SpaceX. And so, as I close the show this morning, it's just further evidence. Nobody knows, man. Nobody knows anything. Not one single thing. Not you, not me, not nobody. They don't know anything. So that is Inside the Trade, a little Tesla assignment, unwind, and I'll see you guys later for From Theater to Practice.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock, and short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Investopedia says we're the best for options trading. Stockbrokers.com says we're number 1, and Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. We got divergence here. E-minis up 3, Nasdaq down 260. Huge move to the downside there. My name is Mike. I'm here with Jermal, and of course Tim Knight on the line. How you doing this morning?
With my 70s porn theme song, apparently. So, yeah.
I do feel like we're in a carpeted room, wall to wall. I do feel like that.
Yeah. Oh, my Lord. It's a deep shag. Anyway, yeah, it's a really cool morning. Really cool morning. A very chart-friendly day. Absolutely.
I would think so. A lot of things don't look that great.
Now, okay. Now, see, we're already provocative. Things don't look that great. All right. I must take exception because it was a couple of weeks ago. Because one of my many personality defects is I never forget a slight. And you mentioned a couple of weeks ago how I'm the sort who would not cheer when Superman saves someone from a falling building. This is a canard. I
said that. That sounds like something I would say.
Yeah. And not only do I absolutely dispute the notion that bears, they hate America and they like to see people fail on this. On the contrary, bears to me are the apotheosis of discerning, intelligent, and honest individuals that look for the fraud. They look for the overvaluations. There's something very virtuous about the bearish mindset. So, no, I cheer for Superman. We actually love the good guy, truth, justice, the American way, and all that. So, no, quite the opposite. Equity bears I see as the Lex Luthor out there. So, yeah, we've got a different disposition. But in any case, and I don't know if you saw the tweet I sent on that day, but I did try to answer the anti-Superman guy. He's a child hero of mine. We can't have talk.
I didn't realize I created such a start. This is great.
Yeah, we hit a nerve. Maybe we look at a chart or two. Would that be all right?
Absolutely.
Let's do it.
Okay. This has been a terrific week for charts. All kinds of exciting stuff going on. The diamond here is working on what most other things are working on, which is completing a topping pattern. They are, in fact, some are even closer than this one. We're not quite there yet, but what happened between Wednesday and Thursday was absolutely key. On Wednesday, I was just wringing my hands about what the market might do next, and there was a bit of a sea change that took place overnight. So I just want to emphasize this kind of pattern, which is kind of the 1-2 punch of a failed trend line and a pattern which is about 90% complete. This is what is exciting, particularly since we're going into the huge earnings week next week, plus Kevin Worsham as FOMC.
This is the one that's the weakest year to date. I mean, it's you're right. I mean, you need some catalysts, and the next week is full of them. Are there any major down names that report next week? Can't think of offhand, but this does not look that great.
Yeah, it's hard to keep track of the components. I mean, there's amongst the Mag 7, there's got to be a few in there. I mean, we've got what do we've got? Microsoft, we've got Amazon. I don't know if those are included. I'm kind of a Rain Man when it comes to symbols, but the Dow 30 components. Sorry, you got me.
I'm looking for you right now. Actually, Apple is in there.
Yeah,
Nvidia's in there. Nvidia's way out, but Apple and Google. Obviously, Google was in there and just had earnings. Microsoft and Amazon are also in there.
Yes, yeah. So that should shake him up. And I don't want to make it seem like the Dow's kind of this weird exception. This is sort of an archetype, I think, of a lot of things that are going on right now. You mentioned Google just now. They are still quite on the mat. And we were joking about Kramer before the cameras went on, and I think that after their earnings came out on Wednesday, he tweeted out the sort of this really lucid analysis of the numbers look pretty darn good, and that a few milliseconds later began to plunge. So we had a big gap down on Thursday, and it's still just kind of sitting there. And I read it. This is the first time in their history that they've gone cash flow negative because they're just hurling hundreds of billions of dollars at the hyperscaling efforts. So it's a big move. We've lost about 20% from the peak not that long ago.
You're our Silicon Valley resident person. I mean, isn't that part of the course? Throwing money at things that aren't they're going to come to fruition at some point in time.
Not like this. Not like this. Literally trillions of dollars that have been either spent or are committed to the hyperscaling effort. It's got to be the biggest. It's got to be the biggest corporate gamble in history. And if there's a uh-oh kind of moment, there's some sort of epiphanic realization that things aren't going to go as marvelously as people thought for whatever reason, there's going to be a huge domino effect. And I think we've seen that already reflected in Oracle, because they've been a big bettor in this thing, and their stock is getting absolutely destroyed. Even with last night, they had some huge news about new $7 billion defense contract. And the market's like, listen, we're going to take it down another 5% today. So it's just been, the suffering's already there in places, Oracle being an extreme example.
Was the OpenAI hacking an uh-oh moment that we had this week?
No, I mean, I know OpenAI pretty deeply. What seems to have left the news cycle quickly is the Apple lawsuit, which I think is a really big deal. Their hacking of Hugging Face or whatever it was, that was just sort of a interesting little tidbit. But OpenAI has kind of some scandal every week, it seems. So they just keep getting pushed out of the news cycle. But that Apple lawsuit is wow, that's a big one. And that, of course, is the king of the hill when it comes to the OpenAI bets and risks. So we'll see if Anthropic manages to go public this year, but that'll be the real litmus test if OpenAI can manage to do so. If I can tiptoe to Tesla here, that was the other big result yesterday, and good gravy. I mean, this thing is still sinking. We're trading where we were in mid-2021. This was a $500 stock only in December. So this has shaved off about almost 40% of its value since then. And it's sort of funny. I heard Dr. Jim just talking about the SpaceX hype, and when SpaceX was still hot, the excitement was, okay, now they'll merge with Tesla next. And I don't think the long-suffering Tesla shareholders want the SpaceX anchor dangled around their neck now. They just look trying to. So this is like I keep saying. I mean, and someone thought Tim hates Elon Musk. Nothing at all like that. Elon Musk. I mean, speaking personally, has been very helpful to the Knight family, and I've known him for a very long time. I don't hate him at all. But I'm a student of history, and I do know that this is like the cover curse times a million. When someone reaches that height of wealth and fame and this seemingly infallibility, look out. And that's kind of what we're seeing in front of us.
This is I think one of the more interesting charts, because we all know that from here we could either see a 75-point fall or a 75-point gain. And I'm curious to see what happens next.
It's a mess. I mean, you folks trade differently than I do. I tend to look for this kind of volatility, this kind of dynamism is probably gets your blood pumping. I'm looking for kind of safe, broad, kind of elementary school patterns. But I mean, if right this second it's all right, up or down, it's probably up, because it's got to, it's probably going to bounce because the poor thing is so battered. But I don't touch Tesla as a trading instrument. And while we're on the subject of Mr. Musk, there's SpaceX, another lifetime low today, and another week and a half. We'll have, not even that, in 7 trading days from now, we'll get the first earnings announcement, and boy, is that going to be closely watched. Because it's like, is this a wipeout justified, or is it going to be hey, dummies, we're printing money over here. So again, to Dr. Jim's point, the mania over this was sort of a tell that I like the quote before the IPO. They say that, like in the old days, the notion of an IPO was that you get in on the ground floor, whereas the SpaceX one is you're parachuting to the top of the skyscraper, and that's exactly what happened.
Was it? Go ahead, Mike.
I was just gonna say, I think it's interesting. I mean, I think Tesla has a hard time getting back to 500 now that SpaceX has its own ticker symbol. I've been saying this for months. It's just like the people that were trading Tesla for proxy exposure to SpaceX don't have to do it anymore. And I think maybe that's also playing a role in this big downside move.
Right, and that same sentence applies to all the other space companies, ASTS and PL and RKLB and on and on.
Indeed.
But we don't have to look at all these symbols. I'm trying to pluck out the most interesting ones. We've been talking about crude oil a lot, and we're at a real question mark right now because I've been focused on this trend line, and notice what's happening. We pushed above it yesterday, and now it's sort of stalled out. We're down about 3% on this, so that trend line seems to have some power there. We've gone up really far, really fast. I say again, I'm not trading anything related to energy. And I don't have any particular. Well, okay, I'll throw a hunch out there, which is that just as we've seen with stocks for the downside, when you sort of like make a attempt at a trend line like this, when you succeed pushing past it, there might be a stall there, a little pause, a little bit of gathering your breath. But I still think for energy, this is probably a bullish sign that we've managed to get this far, even though we're having a bit of a drop right now.
I'm aligned with you on that. I was interested in taking a short position, but I was like, nah. And this is the classic stall out before the next move higher.
Yeah, the weekend is looming, and who knows what's going to happen.
If that on the converse side, if we were pushing higher to 95, 96 today, I would be like, you know what? The weekend news might make this fall come Monday, and I would have decided to get on. But because we stalled here, no, not touching.
Right. Let me end with, and it's funny. I didn't even have it on the list. I'm going to end with two related charts, and they're the big ones. So the NQ and the ES. Let's just look at those. NQ definitely going my way here, and you can see we sort of close our eyes to the little wiggles and waggles along the way, we have been plainly just curling lower here very consistently. Lower lows, lower highs. From time to time, we'll get a rally. It's been a violent ride, all these counter trend pushes, but you can just put a ruler on your screen and there's a pretty straight line down. And now we're reaching a really important point of decision, getting very, very close to this support level. Right triangle top, the kinds of stuff I'm obsessed with, like semiconductors, are definitely breaking down cleanly. It's looking really good. And usually we would pause and talk about this chart a bit, but I want to augment that and sort of augment my argument with the ES chart, which is my main point on this, which is why I think that the ES, the NQ is going to head lower, is we've got here completed a really nice, and I'm going to change the granularity of this to see if it's a little more plain. We've got here, okay, let me just rectangle this real quick so I can show you what I'm talking about right there. That is a beauty right there. And so what happened right on this bar, this nice red bar right here, is that we were forming, so we got left shoulder, head, right shoulder is lower than the left, exactly what we want to see, plunge past the neckline, a retrace to the neckline, just what we want to see, starting to fall. Everything about this is working. So what should happen at this point is that this level here, the peak we saw, about 740 on the SPY, should represent important resistance. And this pattern within a pattern should set us up for a push lower. I think will give us the energy to cut through the support we just saw in the NQ.
There's plenty of catalysts where it could happen. They're all coming up next week.
Yeah, a weekend these days is a long time. So, yeah,
Indeed.
But terrific week.
Terrific week, and lots more to come with next week. Tons of earnings reports, and that can certainly shake the market up, especially with the proof that we've seen this week with some of these names reporting. But Tim, appreciate your insights as always. We'll see you a little bit later.
Bye-bye, guys.
Appreciate you, sir.
Yeah, E-mini's flat. NASDAQ continuing to slide down over 1%. But we got a research piece coming up on the other side of this break. Join us in the YouTube chat if you haven't already. You're watching Tasty Live.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, it's not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in. What's up, Tasty Nation? Welcome back to the show. We've got Julia in the house for a research piece sponsored by SIBO. Research, how you doing? Research, how you doing? How about Julia? How you doing? Wow, it's fun.
No one ever asks about me. No, I'm a great, actually. Yeah, I'm having a good day.
That's awesome.
I'm excited that the smoke is gone for now.
Yeah, it's nice to breathe.
Smoke, yeah.
Nice to
Yeah,
breathe.
breathing sounds nice. Yeah. I don't have to wake up. My eyes aren't burning. So, like, that was a nice Friday.
Yeah, that was weird. Julia, how's marriage going now?
Everybody always asks me that. It's the same. It's the same. We can't testify against each other, which is I'm sure that's gonna come in handy at some point.
That is a nice perk. Yes,
that's a nice perk, right?
It is.
Yeah. So I mean, it's going good. I'm making like eggs twice a week. That's the marriage perk.
Awesome.
Oh yeah.
Little scrampy eggs. Yeah.
Eggs are the key to a good marriage.
I wish they were like fun eggs. They're just like scrambled eggs with what is that stuff in them? The peppers from California. I can't remember the name of it.
I
don't know. But those go in the eggs now. But I'm like, they're not super exciting eggs. If they were exciting eggs, they're like a poached egg with like, I don't know, prosciutto and a little bit of, I don't know.
When
cool,
you're married to a woman from Wisconsin, she puts milk in the eggs as she's mixing it up to make them fluffier.
I use a little half and half. Fresno peppers, that's what I'm thinking of. Those are pretty good.
You know what's another hack is cottage cheese. You want some protein infused eggs? Cottage cheese works just as well. You just got to blend it up.
I can see that.
That reminds me of those recipes of like brownies, but they're healthy and it's 2 ingredients and it's cottage cheese and like cocoa powder and they don't look like they taste very good.
That doesn't sound good.
The eggs with cottage cheese, they taste good. You just got to blend.
I can believe that.
Cheese. Yeah,
I can believe that.
I used to eat it with peaches when I was a kid.
Huh.
I like it.
Cottage cheese.
What you got?
Made it
what you got?
We're talking about 0 DTEs. We're talking about legging out.
Everybody loves the zero DTEs.
Everybody likes the zero DTEs. Yes, that's why this actually came from a request, and God did the analytics on it, and so he'll put the piece together. So I wanted to talk about it a little bit, but it's about legging out a zero DTE trade. So we're looking at iron condors. We're going to be looking at basically if a spread hits like, a certain profit target, or if it gets down to a certain level, like just buy it back and let the other one kind of continue to work for you. And we wanted to look at sort of what the trade-offs would be of that.
Sweet. This will be a good one.
Cool. Let's do it. Zero DT's just exploded in popularity. We've seen that continue post PDT, just because you can close, open and close trades intraday. They're liquid enough to be tradable now. Obviously, you want to be pretty careful about like product selection, managing risk, all that kind of stuff. But they've gotten quite popular, and we've gotten a ton of requests about them. So one common management strategy is legging out, where you either have a put or call spread on either side that's just become worthless. So you just buy it back, let the other one go. And we wanted to sort of back test how that's performed over time.
Cool.
Let's do it. So we looked at 20 Delta SPX iron condors with $20 wide wings. I think that's a little bit wider than you guys typically go. You guys go more like $10, right?
Yeah.
Mm-hmm.
Yeah, $10. So this is a little bit wider, just because we wanted to capture a little bit more of that tail risk. Entered at 8:30 a.m. Central, and then we just applied a 25% profit target to all of the trades that we considered, both in the non-legging out case and in the baseline case. So we just kind of said, yeah, that's pretty important. Like having the small profit target in there, that's obviously going to skew a lot of the results, right? That's going to be a very impactful, just management strategy that we're adding. But then we compared the baseline case of just holding the position to expiration target, basically if the profit target wasn't reached, or the legging out case. Like I said, if the put or call spread basically decays to a certain value throughout the lifetime of the trade, then buy it back and leave the other spread kind of working. Other caveat here is that if at any point the original credit of the trade hits a 25% profit target just from that other leg continuing to work, then we're just going to close the whole trade out. But the buyback thresholds that we're going to use are $1.75, 50 cents, and 25 cents per spread. And then in that kind of legging out case, like I said, so if none of those cases are met, then we're just going to let that expire as well, just because it's a defined risk position on SPX, right?
Mm-hmm. What time frame is this over?
So this is going back to 2023. We have daily data going back to 2023, which is actually a good number of occurrences, but that's really when zero DTEs were liquid enough to be able to test this well. And we take snapshots every like 10 minutes. So there's like it's not quite minute by minute, but hopefully gives a pretty good representation of movement throughout the day.
Okay.
Sweet.
Cool. Let's get into it. So what we found was that legging out really didn't improve win rate significantly. The baseline strategy was really like everything just kind of hovered around the baseline strategy. And I think it's just because that profit target is so impactful. Having that profit target there just like, helps a bunch in terms of like getting out of positions early, especially throughout the day. So we can see that everything is kind of clustering around this 89.9% win rate threshold. We really didn't see any kind of significant boost, I suppose, when it comes to kind of legging out.
Interesting. Yeah.
Would you have expected otherwise?
No.
No.
This is part of the reason why I asked time frame too, just how crazy the market was across any given time frame. But
yeah, I think the win rate, I think we will see maybe a little bit of a difference in profit potential. But the win rate, I feel like if you're legging out, the other side is the one that's tested anyways. So I don't think it affects your win rate all that much.
Yeah, that makes sense. And here's the thing. If you didn't have the profit target, like that's kind of acting as your profit target, like having individual spreads kind of like hitting their own respective thresholds is effectively a profit target. So I think that's really like skewing a lot of that here, just kind of shows how important that kind of like early management or having a small profit target really makes a difference. But if you didn't have that, that's where I think you'd see a significant difference. And typically what you see is that the trades that are sort of left to expire, they tend to profit more often, but that comes at higher tail risks, like with longer premium or longer term short premium positions as well.
Yep.
Cool. Okay, let's go to the next one. So median P&L remained about $140 across every strategy. So again, we're not seeing like a ton of variance here when we're looking at medians, which are less sensitive to those tails compared to averages. But averages are like kind of, Mikey, how you said, where we're kind of seeing a bit more of a difference here. And what we're seeing is that basically when you leg out of the position sooner, you're giving up gains when you do that. just because, positions that are left to kind of go a bit later in the day have a higher chance of recovery, but that comes with trade-offs, kind of like as we talked about.
Yeah, I think it's a fine line, but you have to figure, when you're managing these positions, the more you see profit, the more risk you take inherently, because all that profit can go away. So just making sure you've got that profit target in there, or some kind of take profit, I think makes a lot of sense.
Yeah, some kind of take profit. What we saw here is that when you look at it like 25 cents, it's like pretty comparable to just like the baseline. So at that point, if you were to employ the strategy, it would make sense to have like kind of smaller, like larger, I should say, buyback thresholds between like $1 and 50. I would not even say 50 cents. 75 cents is maybe where you see more of a difference, but closer to $1 really, which keeps your medians. Medians kind of stay roughly the same, kind of typical trade experience, and then at the $1 threshold is really where you see the averages start to show a significant difference. Yeah.
100%.
Yeah.
Cool. Legging out also did not meaningfully reduce downside risk. Again, I think this is because of that small profit target, but we're also working with defined risk positions, which is something you typically do when you're dealing with zero DTE strategies. So the baseline actually produced the smallest average loss when we're looking at these kind of like worst 5% of occurrences, funny enough. So that it's not to say that legging out results in slightly larger tail loss, but because again, we know what the max loss of the position is at that point, but it's really like the time to recovery, which seems to be kind of like boosting the loss averages in this case for the baseline case. Those recoveries like made sort of a difference here, noting that we're looking at 2023 kind of onwards, and we had a very, let's say, particular market throughout that time.
Indeed.
Yeah. So let's go on to the takeaways. Or actually, no, we're looking at cumulatives over here. And this is kind of like the story that we've told in a couple of these zero DTE pieces. But holding out to expiration, noting that we've applied the 25% profit target here, shows the most gains, because the more time that the position has to decay, the more profits you tend to collect. But that also comes with more P&L volatility. What we actually saw here is having that high buyback threshold for buying the leg back actually tended to underperform some of these large, smaller ones. Some of these more liberal ones, I should say. And kind of like a sweet spot is between that 75 cents and 50 cents range, where you get good amount of growth, but less volatility than just the baseline case of just allowing that position to hold to expiration.
Yeah, I think these sorts of trades, the only situation where we're legging out is if we're paying very little to buy back the spread. And when you have a put spread and a call spread together, which is what an iron condor is, if you are realizing 90% of your max value that you can extract from one of those sides, then sure, you can peel it off. But if you're paying a lot to take it off on a small move, it's not really going to improve your trade success here. So always keep that in mind. With a short option, all you can make is the premium collected. But if you're at 90% of that collection, maybe it's time to peel it off.
Yeah.
Yeah. I'm almost always holding my iron condors expiration in SPX.
Yeah. Which makes sense. Defined risk position on SPX, like that's the very specific case where that's like a little bit more, it just makes sense, right? Versus there's a lot of different ways in which that doesn't make sense, but for this specific case, like for sure. And just kind of for some takeaways, noting very importantly that profit targets were applied to both cases here, that holding that full, that holding that iron condor plus the profit target case sort of to expiration actually produced the highest win rate, strongest average returns, and best long-term cumulative performance. We saw legging out really did not significantly reduce tail risk and often removed the side of the trade that could have actually bounced back following sort of an intraday reversal. That being said, kind of like Mikey said, if the trade has gone, like if it's become like basically worthless, taking it off here as we've seen in sort of doing that legging out strategy just in that specific case, actually had pretty comparable performance and actually less volatility than just like the holding to expiration case.
Love it.
Cool.
Love it. Always love the 0-day stuff. The people love the 0-day stuff.
Yeah, it's so many emails about it. Like so many.
Yeah. Everyone's trading it. We got to get one on the Super Bowl and the Super Bear. I think that would be interesting as well. Because those are kind of new strategies that we're doing all the time in these things for the 0 days. Yep. But they're super fast moving. We'll just have to create some mechanics around them for research
Got
sake.
being directional. It's crazy.
I know. We're crazy.
We're crazy out here. Yeah.
Crazy. Wild and crazy guys.
Julia, appreciate you as
Awesome.
always.
Thank you guys so much. Appreciate it.
You got it. Have a good weekend.
You too. Peace.
E-minis up 3. Just when you thought it was going to be a stress-free Friday, we've got SPX right at the short put spread again. The last one expired like 80 cents out of the money. So hoping for a little more space this time. But yeah, join us on the YouTube chat. We got about 9 minutes left with myself and Jermal. But join us on the YouTube chat. We will get to your trade ideas and questions over the next 10 minutes. We're going to take a quick break. First, you're watching Tasty Live.
It's time to trade smart, post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
What's up, Tasty Nation? Welcome back to the show. E-minis up 2, NASDAQ down 300. Big divergence there. That's been the story of the morning. You also have crude oil selling off 3% here. Kind of a wild day, all things considered. But Jermal, we've been somewhat active. We've been trying to be somewhat active with this lack of movement in the markets. Tesla got assigned on the butterfly, closed out of the long put paired to the 100 shares at 370 for exactly $370, and then 340 at the 340 strike. Intel rolled my 120 zero-day short call into August to continue that inversion, the 120, 130 inversion. I've got $1,600 in premium collected there. And then Costco, I just bought back that 1100 strike short call for 70 cents. Initially sold that for $700, so we got 90% of the value of the short option. Now we lean long, and if Costco rips, we will be looking good here with 60 days left on that 1100 call.
Yeah, nice. What'd you get filled for?
70 cents.
Oh, 70 cents. Wow, nice. Yeah, I've yet to do anything. This is kind of weird spot for my book with the tech being down, with S&Ps being up. I do see it seems to be that there are some consumer staples names that are on the move today. That's propping the book up a little. That's nice. I like that strat is working. But I gotta, I haven't seen anything I really want to do yet. The NDX, NDX put butterfly is working well for us today. Long the 28,200, short 2 of the 28,000. Sorry, long 28. Yeah, I said that right. 200, short 2 of the 28,000, and long 1 of the 27,800. So for now, I guess I'm just on the sidelines, at least for me. One of the things that I can probably eventually de-risk is this IBM short put that I had. Again, I put that on the day of the big down move. And what is this? Oh, yeah, this is our put butterfly. That looks great. That's going to capture some things this week. We'll see if this ends up really coming into focus. It's interesting how both of our butterflies are already coming into focus this week. So I don't know what that means. I don't know if we just fall even lower from here. End the week here. End the week for next week. This should be exactly where they end. Or maybe, you know what? There's been plenty of times we have weeks like this coming up next week where we got these major earnings coming up. We have a Fed meeting. We got an inflation reading. And the market, there's so much happening that the market doesn't really move a whole lot. So we'll see if that happens week over week. But so far, NASDAQ, this is 2 Fridays in a row that's been down. And it would seem as though there's been some de-risking heading into the weekend.
Yeah. And right now, like just a look ahead. So if we were to be right at 28.2 next week, if you look at the 0 day, same butterfly. If we did the 28.2, 2,800. Wow, they have a ton of strikes.
And somebody's asking us that. And we got a couple of questions here. We got one on Google, but to answer this one that's more timely, are we tempted to harvest that NDX butterfly? Me right now? No.
No, I'm going to hold it for sure.
No.
This is the exact same butterfly that we have 200 points wide, 28.2, 28,000, 27.8. If we were right here next Friday, it would be a $3,600 winner. So there's no trade that I have on that has the risk of $3,700. Like this butterfly is a complete portfolio hedge. So I am not closing this one. It's up nicely for sure. It's up $500 right now. But this is one of those things where I'm going to have bullish positions on in Microsoft, Amazon, Apple, at least neutral. But either way, this butterfly can hedge everything in this portfolio. So leaving it on for next week.
And somebody's asking, what our profit target is. I'll be honest with you, with a hedge, I don't have a profit target. I'm actually willing to lose the money. That's why I'm willing to put it on for the price that it is. I mean, it's so cheap compared to what it's helping me hedge in the portfolio, if you will. And I use the word hedge. I guess I always have problems with that word because I put it on as a hedge, as something that's going to be green on a day where there's reds. And that's exactly what's happening on a day like today. And so I don't have a profit target. Matter of fact, I'm willing to lose all $700 that I paid for it. Because it's fine. I mean, I want it there for a potential chance to really do something if for some reason we're sitting around these levels come next week.
Yeah. And really, it's hard to answer. Like you said, we have these on as hedges, so we want best case scenario is we smash it and we get this 28,000 pin. But the most you can ever make on a butterfly is when the stock is at your short strikes. So if you come to the market on Monday and we're down another 200 points and we're right at 28,000, that butterfly is going to appreciate even more. And maybe that's your cue, where like regardless of where you are in the time in the trade, if it moves to your middle strikes, you take it off for a profit. That's one way to handle it. But again, we have so many earnings next week that this 7-day cycle is super important. You have a 1,200 point implied range here, so this thing could be completely in the money or out of the money. But if we just chop around here, we gravitate towards 28,000. It's going to be a really nice hedge against the rest of the positions in this portfolio. Same with SPX.
And if you're asking us because you put this on, you follow us in that trade, and if you don't, again, we put these on because we have other things on. If you didn't do that, totally makes sense. If this is just a one-off trade, totally makes sense if you get out of this thing right now. If you paid $700 and you're making $400, $500 on it, totally makes sense. I know we're closing down because but we got one more question. Somebody has an in-the-money call in Google that expires today as part of a calendar. Should they close it or do nothing? I would say you want to close that thing. You don't want to be assigned shares in Google.
Yeah.
I don't know how you got an in-the-money calendar call, but okay.
Yeah. And really, like, it depends on the setup. Like, we have a long 7-day, short 0-day, but in theory, you could roll it from the 0 to the 3-day if you're like slightly in the money and just give yourself another calendarized shot here. But the closer you get to 7 days, the more the position is just done. So, yeah, to Jermal's point, if you don't want 100 shares of Google on Monday, you got to close it at some point today.
Yep.
It's
amazing that you have a short calendar. I don't know if they have the 319 or 320. Maybe it's like really close, but
yeah,
ripping higher. Holy cow!
Look at that. Google up $2, but E-minis just in the last couple of minutes here. Boom. 74.35 was where we were at. That was a 30-point rip we just saw in the last 10 minutes or so. So something's going on here. The market is starting to market here. But yeah.
Kramer just tweeted. I just happened to see it. Intel and AMD sellers, please come back and knock these two down for us. What?
Oh my God.
This guy's talking out of both sides of his mouth.
I love it. But yeah, Jermal, it's been a fun morning, as always.
Indeed.
And we'll keep trading as the day goes on. But check out the follow page if you haven't already. We'll post all of our trades there. And we'll see what the market gives us the rest of the day. But I'd love to see SPX above 7,400. That will mean a 0-day, another successful 0-day Super Bowl. I have a working order for 50 cents there. But you can reach out to us on Twitter if you want to reach out to us for any other questions you've got. I'm at Trader Mikey B there. Jermal is at Jermal Chandler. But we're going to kick it over to Liz and Chris on the other side of this break. You're watching Tasty Live.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it. Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We're back. You're watching Tasty Live. This is Confirm and Send. I'm your host, Chris Vecchio. She's your co-host, Liz. Dear King. Liz, how are you today?
This is a different day. It's been moving the last couple of days. I feel like we're not doing much of anything today. Spoos are trying to catch a bid right now. I always say right around 10:30 is when the market turns around. So we'll take a look at that right as our show is ending.
We have about 27 minutes until that 10:30 Central flip over, perhaps. But yeah, the markets are having a nice little bounce here. Past 20 minutes or so, S&Ps are up about 30 points off the lows. I don't see any clear catalyst, although a headline did appear maybe 15 ago. Bank of Japan is not going to hike rates next week, which that's probably a good thing. We don't need more of that right now. But pinned, we were talking about a potential trade this morning on the morning segment. Iron Condor, short Iron Condor in the 0 DTE for the S&P 500. We're seemingly would still be working here right now because we're still trading around 74.60. Liz,
what's your strike? Are you trying
unfortunately, I didn't get filled, so I'm hoping someone else was able to take that. But we were looking at the time 74.60, 74.65, and then 73.65, 73.70. So there's been some erosion. It would have worked out if you got filled on it. So hopefully, maybe some other people looked at the idea in this market today, which is just absent of catalysts. That was kind of my idea going into it. There just wasn't anything to move this market today.
No, I get it. There really isn't anything to move this market today. Next week it's Christmas for you, right? You've got lots of things on deck.
This is a Christmas for me. It's a little derogatory, but it's absolutely true.
Numbers, Chris. I love that you like the numbers. Makes me happy. So we've got a lot of them.
We've got a lot of numbers next week, right? We have the Fed meeting on Wednesday, but Wednesday you're going to get Meta, you're going to get Microsoft, you're going to get ARM, so it's not a small day. Qualcomm as well. Big AI infrastructure day. Thursday, Apple, Amazon. So, next week is stacked.
Can I pick your macro brain on this? So you've got the Fed meeting is Wednesday, right?
Yes.
So do you trade those earnings knowing that there could be something moving the market, or do you You obviously, so you find out when the market moves in the Fed meeting at like 1 o'clock, 1:15, right?
Mm-hmm.
And then he continues to talk. So can he move the market afterwards?
Yeah. So I mean, I really try to avoid anything that's going to be immediately expiring the day after a Fed meeting because, Liz, I mean, how many times have you seen this in your career? The market responds one day that Wednesday afternoon, Thursday morning you wake up, we've gone the completely other way. Right?
100% of the time. It's funny because I mean I've never really focused on the meetings. I think it's newer to me than it ever has been. Probably thanks to you. So a lot of times I'm always like, whatever.
I'm sorry.
No, it's good. This is a good thing. I always say it's kind of baked in, but listening to you and I'm learning from you guys, I might avoid the big earnings and maybe do an after earnings trade because there's a catalyst that can move the market afterward, be it the earnings and be it the Fed.
I mean, Apple and Amazon, to me, if you told me, Chris, you have to trade one batch of earnings, the Wednesdays or the Thursdays, I'd rather do the Thursdays and put those on Thursday morning after we see how the market is impacted by the Fed. Because if you get a 2% dislocation, all of a sudden you could have a really good idea for Apple and Amazon, like they're going to stay within their expected move, but that range is all of a sudden shifted like $4 or $5 or $10 or $15.
Right.
And if you just waited like 6 market hours time, then you would have worked out just fine. So, I mean, that's how I'm thinking. I'm more interested in Apple and Amazon next week than I am in Microsoft and Meta, just for that particular reason.
I'm telling you, I'm spending too much time with you. I'm gonna be on your page. I'm not doing.
Don't be on my page right now. You don't want to be on my page right now. This is the no sleep. I wasn't wearing this when I first got ready to go on air today, but then you have a 10-month-old at home, and he's very handsy when you're changing his diaper, and he grabs stuff and he smears it on you, and he just.
It's the cutest thing in the entire world. Be still my heart. 10 months old. I would give anything. I would return both of mine for one 10-month-old.
Yeah, he's crawling everywhere now. It's crazy. So, like, gates have gone up again. We're baby-proofing it. That's what we're doing this weekend. Yes, what we're doing this weekend. We're baby-proofing the house. That's what we need to do.
Yeah, because your daughter is 6, so the baby proofing got removed, and now you got to put it back up, right? She's 5 or 6?
She's 6. She's 6. She's very actually yesterday. So this is crazy. She went on a field trip yesterday. They get dropped off, and they're supposed to walk through like this hiking trail through the woods to get back to the campground site where they actually have the town camp. And her and some friends decide to look at some rocks while the group is walking along, and the group leaves these 3 kids in the woods.
No.
However, my daughter and one of the other girls were like, "Oh, we hiked these was with our mommies and daddies. We know how to get back to the playground." And they led themselves out of the woods.
Are you kidding me?
So very proud of her today.
I am very proud of her. That's amazing. So 3 6-year-olds walked out of the woods by themselves.
Yeah, I put in a call to the camp director.
I mean, I would be putting a call. I might make choice words as well.
Yeah. So.
Did they not know they were missing?
No. Which is the remark. When you have the buddy system and the triplet of buddies goes missing, and no kids look around and go, "Well, all of our buddies are here. No one's missing."
Oh my goodness! Is she at camp today?
Yeah.
Okay.
They're not doing wood stuff today, so we're good on that.
That is amazing.
But very proud of her. This is why we take her out there.
But those are heart palpitating moves like that.
Well, she told me afterwards. She's like, "We got lost in the woods today." I'm like, "What do you mean lost?" So it's like, oh, all right. Verified by the counselors.
And I know this is not going to go over well in the chat, but I will tell you this tracks because girls coming out of the gate are way smarter than boys. They really are.
Having both now, raising a son, he is physically so much stronger, but it's like raising a bowling ball.
It is 100%. I mean, mine were Irish twins, and my daughter was a year younger, so it was It was a fascinating exchange to watch because she was ahead of him 90% of the time.
Yeah, it's really interesting. But hey, you know what? Before we get to the actual confirm and send questions, a quick look here on the divergence that we're seeing between the Nasdaq and the S&P today. Is this something that you're looking at as a tradable divergence? Do you put on a spread here, or I mean, this chart's really looking. I feel like Tim Knight here. He's been onto this. This is looking a little sketchy all of a sudden. Do you sell puts down here, or catch this falling knife?
Yeah, sure. I mean, well, who am I to say whether the knife is falling or go right back up? Every market, this has been a buy the dip market, right? I mean, every dip has been met with a little bit of a rally. We've had some two-way situations. I have no problem dipping a toe in the water. Now, I know Mike and Jermal have a big, wide NASDAQ butterfly that they think is going to solve all their problems if the market goes down.
Oh my goodness. Okay.
You know I can tease them.
Solve all their problems. All right. Boy, they must be down bad.
They have a very, very large NASDAQ butterfly they've been talking about. So there's nothing wrong with, dipping a toe in the water. NASDAQ, NQ. The NQ future has a 76 rank. That's a lot, IVR.
That is a lot. And there's this huge spread right now between NASDAQ volatility and S&P 500 volatility. I mean, just the VXN VIX spread right now is 10.6 points. If you were to look back for years, this thing usually oscillates between like 2 and 6.
Yeah.
So the premium that we're seeing in the NASDAQ vol relative to the S&P 500 vol, I mean, the last time that was at these levels, I think you had to go out to September 2020. So we're like in the throes of COVID here.
So why do premium sellers look at implied volatility? Because you get paid to take the risk, right? So you ask, are you going to jump in front of a truck or catch a falling knife? You get paid to take that risk. That's what happens when the IVR goes up. If you do decide to take that risk, you are getting more money for it right now.
Well, right now the expected move for the NASDAQ out at 38 days, which is the August 31st monthly expiration, is sitting right around 26,750 or so. Liz, I don't know how you find this, but 200 points wide, only about, it's bouncing around here. It looks like $20 of credit or so. That seems a little light still. We're probably looking for something like 33, 35 points of credit.
Well, it's kind of hard though too, because I know there's a question about this, but I think you're already in here. So you talking about NASDAQ is so NASDAQ, S&P 500, all of these have normal put skew. So when you're buying something, I get when you're just looking at the put side. When you're buying something with a normal put skew, when you're buying that last put, you're buying the most expensive volatility option on the board. That's what happens. The volatility increases as you go down. And with normal, general market ETFs, there's always put skew. So by selling the, 650 and buying the 640, the one you're buying is the most expensive option on the board, because that's how vol skew works.
Liz, good time to go over to confirm and send here. We have 4 questions. As always, you can send your questions into research@tastylive.com, research@tastylive.com, or put them in the chat here in YouTube. If you're on the platform, come over to YouTube, join us, like, subscribe. That way you can get these videos, plus many more that we put out throughout the day, various research topics, interesting trade ideas that we're seeing come across our screens. Liz, question number 1 for confirm and send today here. Let's get to it, shall we?
Okay, I'll go. I think people need your information on this. I'm a dime a dozen. I'm just a trader, but you're our favorite macroeconomist. So let's get a lot of your knowledge out of this. Tesla moved nearly twice its implied earnings move. What does a miss that large reveal about relying on one's expected move numbers for earnings?
Well, I was in the short iron condor for Tesla here, and it went outside the expected move, right? And I know that others around here have been, got assigned some Tesla because of how big the move was. I think we covered this a few days ago. The thing was, 5.6% implied, 5.2, yes. But the question was posed, when you've seen it gap down 8, 10, 12% around previous earnings, how do you handle something like that? So I went beyond the expected move, thinking that would make me a little bit more comfortable, given that Tesla's had this tendency to trade a little bit more wildly, and it still didn't save me, right? So I think the one thing that new traders get into, and certainly maybe this was the feeling that I had, was, oh yeah, I'm taking a little bit less risk, and so I'm getting compensated enough, but I'm going out beyond the expected move. I'm going out beyond the 1 standard deviation move. Like, I'm safe out here. Not safe. You're never safe. You're never safe.
You're never safe in anything. And I understand that Tesla did move, and we know the history that Tesla did move, but history doesn't always repeat itself. You said that you were very eloquently saying that, going that there's cycles in markets, and you were talking about this today, that just because it historically did doesn't necessarily mean it's going to do it again. And so the interesting thing about listening to what you were saying, and I'm just playing devil's advocate here, Chris, and I know you went farther outside the move to kind of protect yourself, but what if you brought it in closer? Because if it wasn't going to move, then it's not going to move, but then your drawdown is less. When you're doing an iron condor and you're going out farther, you're collecting less, which means you're going to lose more if it does move its expected move. I'm just playing devil's advocate. As you were talking, maybe one way to thwart it is by bringing it in and collecting more. Because if it doesn't move, it doesn't move. But if it does move, your drawdown is less.
Right. Yeah. And there you go. So a few people here are working on the same problem today with Tesla. It's kind of stuck in our craw. Oh, finally, SPX decided to fill. That's nice.
Oh,
glad it's a little finally filled here all these hours later. Great.
Oh my God, SPUs are up 30.
Well, they're continuing to run a little bit here, and I'm looking for a headline to see if there's something that's getting this market going here today, which I'm just not seeing anything here right now. My Twitter feed, the most recent thing is from Mark Carney, which kind of shows how boring of a day it is.
I mean, I couldn't find any catalyst to move this market either, but you would be able to find it for me. I don't see anything. You know who's going to tell us? Who's going to save us and tell us why the market is moving? Frank the Great in the chat. He's on it. That guy is on it.
Well, I'm Japan, given where the yen is, the meeting next week, the way that oil's moved, I have my conspiracies. Conspiracy Chris is going to be out in force today, but 70.46 here, so up 0.5% right now. I think we should just turn our attention to that chart real quick. Liz, something sparking this market move because we're up 50 points from the low that we had just about 30 minutes ago here. Not that I'm complaining because I'm still sitting on that very lovely long top-ticked MES position amongst a slew of other things that weren't having fun the past 2 days here. Let's keep going with the confirm and send questions, though. That's why people are here. Liz, Mag 7 lost 800 billion yesterday, but the VIX only moved up to 18. When mega caps get destroyed and the fear gauge barely reacts, is the index quietly telling you the damage is contained to a few names, or is it lulling everyone to sleep?
I mean, this could have said love Liz, because I've been questioning the VIX movements on these moves for a while. Now, I don't know if I'm in, I didn't see that question flash up on the screen, so I don't know if everybody else got to see it or not. But the question was, the volatility isn't moving and the Mag 7 was, right? Was that?
Yes, effectively.
So I think the VIX has been reacting very bizarrely lately. And I know Jermal has a different opinion than I do, but I think it's not been moving like the VIX notoriously has. And once again, opinion, but there's been lots of different things in this market that are newer for, the VIX has been around for a while, but these 0 DTE SPX, so the VIX is based off, SPY and SPX, and these are heavily traded newer products that I think are changing the way the VIX is moving. I mean, a long time ago, I was talking, not a long time ago, maybe a month or two ago, the last time I was on the trading floor, talking to some of the traders, and they were saying that the VIX and the SPX options in the 0 days are acting meme-ish, meaning that it's nonsensical. It's not falling along the same patterns. So I don't know if this is, I can't answer this one because I think the VIX has been acting very bizarre for a while. What are your thoughts?
I'm looking this up because I recalled, and my memory was right. The Bank of International Settlements did a study 2 years ago about what could explain the drop in volatility, and they specifically looked into 0 DTEs. But this was 2024. And we know that the market structure, particularly around 0 DTEs, has evolved a lot since then. I mean, I think the number back then was below 20% of all market activity, according to the OCC, was 0 DTEs and stuff like SPY.
Yeah.
And now that's closer to 30%.
So on the trading floor, the open outcry, it's closer to 50.
Right. So there may be legitimate research done in some financial journals about this, but not recently. No. So I'd be curious if maybe methodologically we could send this report over to our research team and they're like, reverse engineer this and give us an update.
Yeah, there you go.
Right? Has something changed? But it is an interesting question.
And I don't know if anything has fundamentally changed. All I know is that to me, the VIX isn't reacting as it normally as 20 years ago, and and things are different. So I don't know. Okay.
Things are different. There's a distinction here, though, right? The mega cap, the Mag 7 came down, but it does increasingly feel like because of what's happened with the AI trade over the past year, if you're looking for a comparison for volatility, you should be looking at VXN and not VIX if you're thinking about the Mag 7. And VXN has been, again, trading at this ridiculous premium to the VIX itself and has spiked. So it's a constituency of the index that you're looking at. Without the semiconductor and the tech weighting that the NASDAQ has, S&P volatility is a little bit lower. Now, if you're going to say this is going to spill over, right, is this an opportunity to get long vol? The mags are freaking out. How come the rest of the market hasn't figured that out yet? Maybe it is. I mean, Liz, I asked you a question a week or so back. Is there a trade out there where you short NASDAQ vol and get long S&P 500 vol and look for that spread to get back into that 2 to 6 point range? It's currently sitting at 10 or so.
Yeah, I mean,
maybe that's the way to think about it.
Yeah, I think that's a good.
But it's persistent.
Way to look at it.
But we wouldn't have made any money along the way so far because it's been persisting at this 10 points wide ever since it got here 2 or 3 months ago.
No, we would have made nothing. So we just.
Yeah, I mean, yeah. Hey, look, I want to take one step back. When historically speaking, and we've covered this a few times recently as well, when the Nasdaq sells off in excess, or the S&P sells off in excess of 1.5%, but the VIX doesn't close above 20. Usually, it means that it was probably a liquidity, a positioning, nothing that's destabilizing the market, and the next 1 day and 3 day returns historically have tended to be positive. We can get the exact numbers again. I'll see if I can pull them together for when I'm on with Ilya for Futures Power Hour. I don't have them in front of me right now. So, but just we're seeing a little bit of a bounce play out here today, right? S&P's up. We had a big meltdown yesterday, but vol didn't spike, and now we're getting a little bit of a rebound on this Friday.
Yeah, it's pretty interesting. I'm going to tune in and watch you and Ilya if you pull up those numbers.
If I have time, there's this recording that, this, that.
I know you're the hardest working man in show business. I get it.
They keep me busy around here.
Well, I say you're the hardest working macroeconomist in show business. How about that?
I'm trying to lose that title, please. Ilya's the head of global macro. Okay, let's just be clear. I'm the futures guy.
Okay.
Skew means puts almost always cost more than equidistant calls. Is that a permanent edge you can harvest by leaning towards selling puts, or is that premium expensive for a reason you'll find out the hard way? That's a good question.
We kind of touched on this a little bit. So this is normal skew. We've seen the flip where you've got call skew in some products, in some individual names, especially your Mag 7 names of years past and things of that nature. But so there is permanent edge. If you're looking at a skew, there are certain trades and there are certain complex trade setups that take advantage of bulk skew. It's helpful. So just like a Jade Lizard, a true Jade Lizard, not one in SPX where you're buying something in there. When you're just selling the put and then selling a call spread, that completely takes advantage of vol skew, because kind of what I was alluding to before. If you do not do the iron condor and you're just selling the put and selling the call spread, you did not buy the most expensive option on the board. And same on the flip. So it's the volatility goes up with the calls. So the one you're buying is less expensive vol wise. So that's one way to harvest a normal put skew is by a Jade Lizard.
Yeah, I'm thinking about the relationships here. Is this a permanent edge? It's an edge, it's permanent, but it's structural, right? Because investors want downside protection, institutions want downside protection. Markets, when they melt down, typically tighten up, correlate, liquidity disappears, things go down faster than they go up. When you go up, it's usually more of a slow grind. So there's going to be, in a normal market, the equidistant puts should cost more than the calls. The question then is whether or not the cost of that insurance is too rich relative to what you think it's worth. Right. And if you think that insurance is too costly, then that's when you look to sell the vol. But we've done those studies before. When volatility is in a certain range, is it better to do a short strangle, a long call spread, just be long the futures? And when vol gets really down, when you're like below 15, you're looking at a 13 or a 12. Not that we've seen that recently here. No. But is there really even an edge in selling the insurance when it's so darn cheap? Because historically, it doesn't really work in your favor. So that's the question here. Selling puts to the downside is totally different in a 25 VIX market than a 10 VIX market was. But there's that structure of that skew should always be there because of that demand for protection from longer term buy and hold investors.
And it works out until it doesn't. All of these things work until they don't. So you do get paid more to sell put than you do to sell calls in a skew. You do. You do. And also, I'd rather be an optimist and be wrong than be a pessimist and be right. So I'm not selling calls on the upside and losing money in a stock market. It's just not my thing. I'd rather be an optimist and be wrong. I like it.
Than be a pessimist and be right.
And let me just put it the other way. The most money I've ever lost are selling naked calls. So I'm once bitten, twice shy from that, because in individual products, I shouldn't say that. I've never been taken out in an.
Well, I was telling this to Ilya. I'm like, do you understand that when you're happy, there's millions of people elsewhere that are probably upset?
It's true. Poor Ilya.
He's like, yeah, oil surging. It's like, yeah, because there's a war going on. All right. Delta gives you the odds of finishing in the money, but most trades get tested long before expiration. When you pick a strike, are you thinking about where it ends up at expiration or how likely it's going to get tapped along the way? I know that we think about how likely it's going to get tapped, Liz.
It's gonna get
TP
tapped
talks
a
about this
lot.
all the time.
This is a realistic number. So if you know what the delta is, you know what the odds of getting tapped along the way is. And tapped meaning it's going to cut your strike. So if you got a 30 delta, say you're selling a 30 delta option, I don't care if it's a call or a put, you double the delta at your odds of touching at some point during that cycle. So if you got a 30 delta, I can do that math, you have a 60% chance of it hitting that strike at some point during the cycle. That's a lot.
Right. So if we're thinking about here an Apple on the screen, they're currently trading 331. Nice little bounce today, 3% higher. The 320 put is about 32 delta, 317.5 is the 29. So effectively, you're suggesting here, market math, there is a 64% chance that during this 28-day cycle, we test 320.
Can we see Chris's thing? I'm watching what people are watching, and I like to share with the class. So can we put that on where everybody can see what?
Oh yeah. Let's go to my chart here real quick.
Yes, thank you very much. Okay.
Thank you. So we have the 320 here on the screen, right? The delta in the right-hand column, negative 32. So odds of this touching 320 during this 28-day cycle, 64% chance.
So does that bother you? So to me, that doesn't bother me because I know it's just there and it's a realistic portrayal of the math.
No.
When I look at that, I'd rather it touch early in the cycle than later. So personally, if I sell something in Apple, I'd rather it go down right away than not because it's a high probability that it will at some point.
If it touches later in the cycle, you're now loaded up with gamma risk.
Yep.
And so the position is moving against you a lot quicker. It's not fun.
I agree.
Yeah, well, the P50 here, right? I think this is the other thing that people should pay attention to. They can't see the mouse that's moving around on my screen, unfortunately. But if you go to the bottom third of the screen here, there's POP, there's X, there's P50, Delta, Theta, Max Profit, Max Loss, BPF, Buying Power Effectiveness. P50, that's the probability, Liz, that we're going to see, as TP has explained, and for some reason I'm just blanking on this right now.
It's the probability of getting 50% of your profit.
50% of your profit back, yeah, of course. POP is the probability of making like a penny profit.
Correct.
On the trade.
Of not being negative.
Right. And so those are two slightly different numbers here when you're thinking about this as well. I know people have often come through, it's like, why POP versus P50? POP is not, you're guaranteed to make money, but like, guess very lawyerly, if you make a penny on the trade, you've technically made money on it. And that's really what that probability is telling you here, that you're not going to lose money here on the position.
And so it's the POP, wouldn't you think, isn't it kind of counterintuitive that the P50 is higher than the POP? Because that's just saying, isn't it kind of counterintuitive? You have an 84%
would think so.
Chance of making 50% of it, but you got a 73% chance of making one. And
yeah, that does seem counterintuitive. Sometimes I pay attention to this stuff, sometimes I don't. Other times I'm like, hey, the chart looks good. Sometimes I look at the chart like yesterday with TP, it's, former highs, 1 month. Could I get filled on the short put spread? No. Is it up 3% today? Yes.
Yeah. But
so it didn't really matter what the P50 was or
But the POP is like 1 penny at expiration. So that's why it should be decreased, because if you don't take your profits off the table and you didn't get touched yet, then you still have that high probability of it coming back. So I just wanted to clarify that. I believe that P50, you can correct me with TP, but that POP is at expiration and the P50 is at some point during the cycle.
Right. And then that difference, when you think about rolling past 21 days, you're getting over the decay curve, and it's like, okay, now it kind of all fits together and makes sense. Hey, Liz, we have a market that's continuing to rally here. Is that NASDAQ going to try to get into the green today? Only down by 0.25%? Maybe.
I think
the
so.
Russell's up here. Hey, just a quick note. I did see a question come into me on Twitter earlier. Are you getting out of your long stocks? People think that I'm very long while he is very, very short. Kind of, not necessarily true. Look, 50-day moving average for me and the Russell at a lot of these things has been that key line in the sand. We bounced off of it yesterday. We're rallying off it a little bit more today. Short put spread, Liz, I call it my wedding crashers trade, end of the movie. Owen Wilson runs up to the altar, Bradley Cooper, standing there, and he says, I'm not asking you to marry me, I'm just saying don't marry him. Short put spread, we don't need this thing to rally, we just need it to not go down any further, and if the 50's holding, then it's holding, so not going to overthink it.
Any good movie quote that you can translate into options trading gets a gold star out of me, Chris. So good job.
You're welcome. With that, we are done here on Confirm and Send. Send in your questions. Research at tastylive.com. Research at tastylive.com. And you can put them in the YouTube chat. As always, we'll try to get through them during the trading day here. We're going to take a quick break, though. We have more Tasty Live programming continuing next. A little risk and reward coming up with the gentlemen, Errol and Gus. You're watching Tasty Live.
Have a good weekend, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
What is going on, guys? Welcome back to Risk and Reward. We've had a pretty volatile market so far today. Seems like NASDAQ is looking to recover a little bit here. We got a few positions in the portfolio that we'll get into. But as always, it's always good to see you guys. Big deal. Ranch, Nice Boy, Ashfin, Point. What's going on, guys? What are you guys looking at? And what do you guys have been trading? And as we get into things, we can go ahead and jump right into the Tasty platform. I just got a tip a second ago, where's LeBron going to be gone? I hope he can slide over to the Nuggets. That'd be really nice, but we'll be patient on the verdict. But no, we got a lot of volatility in this portfolio. It is official. This man LeBron is going to the Sixers. That's crazy. And I know most of the chat, right, is Chicago people, New York people. So we ride for Michael Jordan out here, but now this is going to be crazy. I really want to have guests that. And now that I think about it, on things like Polymarket and Kalshi, the prediction markets, there's no way majority of people were leaning towards the 76ers. So that's another interesting angle. So maybe that's what's reversing this market right now. I don't know, but we'll get into it. What do we got here? So there were a few trades that we put on this week. We put on the Google trade this week. We put on the Oracle trade this week. We also had a Micron trade this week. We ended up taking off yesterday just because of the Intel earnings. We didn't want any of that earnings risk. So we can just start with Intel as well. INTC. But a lot of these names have been volatile, right? And with with things like these memory names, it almost feels like whenever you're trading INTC, whenever you're trading Micron, whenever you're trading SanDisk, it's almost like we need to be aware of the binary events that's going on each one, because depending on what you're trading, you know, it might affect the volatility of it or just the overall sentiment in the space. And so far, SanDisk selling off, now trading at about 96.5. Just a few days ago, we put in a low at 89.50. So I think if we can keep making lows on SanDisk, or I'm sorry, on Intel, that will give us a little bit more idea for the overall sentiment of some of these memory names so far. But I'm hoping for a little bit more of a rally, because it does feel like there's been a little bit of a change in behavior or a change in character on these names. So it'd be really nice to get on some short delta. And again, reason being is just because we put in such a massive range as a whole on a lot of these names. And even though we've been seeing a little bit of a pullback, I mean, it's nothing in comparison to the rally that we've seen. So seems like these still have a lot of juice in them. We'll keep an eye on it. We also have Google from earnings yesterday. This one's recovering pretty nicely. One adjustment we did do yesterday was we rolled down our call side on our Iron Condor just a little bit. We collected an additional, what did we collect on there? We collected an additional 50 cents of credit. So we sold this one for $2.30, rolled the calls down a little bit more as we got that sell off into earnings, collected 50 more cents, widening out those break evens a little bit more for us. So giving us more breathing room to work off of, but these still have 28 days left till expiration. Google recovering just a little bit today. But the reason why we rolled those call side down was because our put side was getting tested at that 320 strike. So we're going to continue to be patient there. And then Oracle. Who right now is trading Oracle? Does anybody else in chat right now have an open position on an Oracle? Because I know we've still been sliding to the downside, so we got to make a little bit more of a decisive game plan when it comes to Oracle, because this is a naked put. We have 28 days left till expiration, expiring August 21st. But that down trade sustains on Oracle. I mean, this has been a little bit of a difficult trade, and this is more one of those behaviors where it can really feel like you're catching a falling knife, especially looking at where we put in that swing high and we just consistently make newer lows in this market. So it's one we're going to keep an eye on. It's nice to see a little bit of a wick on the bottom of this candle. Not that we're paying too much attention to these technicals, more so just from the options chain and what the premiums are telling us. But it would be nice to see a little bit of a pop, just a little bit of a pop. Even if we can pop to like 133, 135, 145 would be great, but we're not necessarily looking for a massive reversal off these lows. Just a little bit of a retracement pop with the consistent downtrend we've been on. And I know we also have, I know CME is going to be coming out with those single stock futures. I believe that's going to be July 27th. I know these single stock futures were launched originally in the early 2000s, I believe. And I believe there wasn't enough liquidity to sustain them, so they had taken them away. But they are back around 2 decades later. And I mean, the market environment is completely different. I'm sure the volume and volatility and liquidity is completely different. So maybe those will have a little bit of life to them. And I'm excited to circle back around to that next week whenever they do launch. But if anybody else was around when they originally launched, I'm curious to see how your experience was for those. But that would just be nice to get that asymmetric, that one-to-one movement. Because we still have the options in a lot of these underlyings. And then with PDT being gone, you're not going to have to worry about that intraday pattern day trader rule. So that's nice to think about as well. Amero Amigo said I'm long Oracle. Long Oracle. Bob is long Oracle. What's going on, Grumpy Mike? Good to see you, brother. Is LeBron really a difference maker at this point when you factor the money he's getting? I do believe so. And it's a really good question because, and we'll get back to you. It's a really good question because I think of guys like, if anybody watches soccer, the Premier League, like Liverpool, Salah is one of the best players on our team. And although some of these guys are getting a little bit older, they still attract so much attention. So I think a lot of teams still have to configure their game plan around these guys. So maybe it provides more opportunity for other people on the team because they just command so much attention. So I think from that aspect, I think it provides a level of energy and just distraction, having that type of name on your team. So anyways, we'll circle back around to it. 76ers is kind of crazy. I really want to have guessed that one. NASDAQ to 28,600. I know it's been extremely volatile today. Big deal. Here in a little bit, we're going to jump over to the TradingView platform, take a look at what we're looking at. I'm still keen on potentially putting on some micro NASDAQ trades today, depending on the volatility we get, depending on how large this reversal that we're getting off the lows right now is. But with that being said, we're in this Oracle trade. We'll manage this one together. I have a max loss in mind. If we go down $250 for me on this naked put, I'm going to cut the position. But if we can get the reversal before then, that'll be great. It is 28 days left to expiration, so we still got about 7 days until we hit that rule of thumb of that 21 days to expiration to really make a decisive decision on if we even want to be in this trade anymore. But it's just a straight directional shot, right? A little bit neutral to long. We sold an out of the money put. We'll let the theta cook. Maybe that can help us for a little bit. So even if we don't get the reversal, if we can at least just stall out a little bit, if we could just stop putting in consistent lower lows in the market, that'll help a lot. After that, we have the SpaceX position. We sold the out of the money put spread there. Just a quick update, $5 wide. We collected about $1.70. And I mean, SpaceX has been disappointing to say the least. I mean, all the volatility has been to the downside. So, I mean, if you've had short delta on in here or you were planning on fading the IPO, this has worked out pretty much every single day for you because similar feeling of Oracle, just consistently putting in lower lows into the market. SpaceX is an IPO, so still in that kind of price discovery territory, like where should this asset really be trading right now? So we'll be patient on it. We have 28 days left to expiration, and this is a defined risk. So what that means for us is we might as well just wait out the rest of the 28 days, see if we can get a little bit of a relief pop. And I mean, even if we can get this trade back to break even, that's going to be a win in my book when it comes down to SpaceX. So with that being said, let's take a quick look at volatility, and then let's take a quick look at the NASDAQ markets, and then we'll take a quick look at oil as well. But I want to point out some of these levels that we'll be keeping an eye on because yesterday we had on a QQQ position, right? And if I can go to QQQ real quick. QQQ, we had on a QQQ position where we ended up taking this one back off for a $7 loss yesterday. So we closed this one at like break even for the most part. And we wanted to get on a little bit more long delta at lower prices. It's looking like the market is reversing right now, but that is the out of the money put spread that we sold yesterday, the 685, 690, bought it back not too long afterwards. We rallied so aggressively off the lows. I didn't like the risk to reward anymore, but we'll talk about that here in a little bit whenever we go back to the trading view charts that has the levels that we're kind of working off of just for today. And then Sunday, we're going to reassess these levels and then trade off of those for next week. But with that being said, we got to get on some long delta in QQQ. It's only right. But volatility down on the day. Volatility trading at about 17.5. And I mean, volatility was trading at 20 just yesterday. So how quick the tables can turn. But I do like these kind of consistent higher lows we've been putting on in volatility. It's kind of nice to see those, maybe start to see volatility start to cluster a little bit. And whenever volatility starts to cluster, sometimes we get those random pops. So maybe that's a little bit of a warning to watch out for some of this downside action that we could potentially have in the overall market. But NASDAQ has been pretty resilient, especially around these previous lows at around 28,490. We continue to sweep those lows and get bought right back up. So this is going to be interesting to keep an eye on because it seems like this is going to be the line in the sand. I'm sure you guys have heard it most of the day. But what we're looking at over here on NASDAQ is pretty much this little range right here, right? Going to lean a little bit more bullish if we can start trading above 28,740. And I might be leaning a little bit more bearish if we start trading below 28,490. So we'll keep an eye on it. SJM, some small biotech stocks, a lot of volatility in those. We can look up SJM real quick, see what's been going on over there. SJM. Yeah, a lot of volatility to the upside. What is this? It's a, what price stock? It's about a $117 stock. Yeah, nice rally off the lows. I have to check out the premiums. I don't know if I've ever traded this one. This one's what, JM Schmucker? It seems like they're a little bit limited on some of the options chain or some of the durations on the options chain. But we'll swing back around to that. Oil is another market that we just can't ignore. I know we were talking about that one yesterday. We're finally seeing a little bit of a pullback, but what an aggressive move to the upside. Oil down about 4% on the day. We have the high on oil sitting at about 95.3. So again, we're going to continue to keep an eye on it. I wouldn't mind getting on some long delta in oil. I do like the pullback that we're seeing today. Go ahead and check out USO. Maybe thinking about selling some out of the money puts depending on how aggressive this downside move is. Again, I don't want to catch a falling knife. My kind of sentiment of the oil market right now is that the story just isn't finished. I think we still got to see a little bit of this pan out. So I don't necessarily see oil trading back down to these lows. Of course it could, but with that being said, the more of a pullback that we get, the more long delta I'm going to try and get in here. And if we continue to sell off the lows, sentiment seems to be really negative. It's an extremely headline-driven asset too, so that's another thing we'll keep an eye on. But I'm not going to be too trigger happy to get that long delta on too soon. But I do want to get some on at some point. And just looking at the options chain, looking at the premium side, I want to see what we could do with the $5 wide spread so we can come back and see if it'll still be attractive from an option standpoint. But even if we sold the 125, 120, it's looking like we'd still collect about $1.80, right? That's a 65% pop. That's a 75% P50, not bad. $100, $180 max profit, max loss 320. So this will be another attractive name to keep an eye on. But I mean, so far for this week, I mean, we really didn't get to do too much. I know over here, jumping over to the TradingView platform, one of the scalps that we had taken this week was yesterday. And we had a pop to the upside, a little bit of a relief pop on the way down, and then we covered at the lows. And then today, it's looking like we're taking out some pretty important swing levels that we had to the downside. One sitting at 28,410 today, and then we have some lower lows that we had put in on June 9th, so beginning of June, and we've reversed since that point, so we'll keep an eye on it. But if we can't make it back to these levels of value, I'm not going to be too interested. Again, I know we haven't been able to do too much in here. I don't know who else has been trading NASDAQ, but the short opportunity we took yesterday was whenever we started to trade inside this level of value, the market was looking pretty weak, and once we rebounded off of this value area low down here, we wanted to see if that bearish sentiment would continue. So we took a short at this value area high, which is at 1 standard deviation from a trading volume perspective. We had a pretty tight risk on this, just risking the highs. We sold out to the lows within 5 minutes. We were able to collect a little bit over 100 points to the downside. Of course, it would have been nice to have a runner on to the downside in case we sold off even more, but I'm happy with the little piece of the pie that we got there. But again, if the market can continue to rip towards these levels, I'm going to be really interested at this value area low at 28,720. We still have a few hours to trade today, and this reversal looks pretty aggressive. So maybe we can make it back up here. If we do, we will most likely be doing something in the micro NASDAQ. But if we continue to sell off lower, I'm going to be hands off. Not going to be putting on any trades for the day. Does TradingView show you the RR on the chart, or can it be 1-1, 1-2, 1-3? I'm not sure what you mean by that, big deal, if you want to clarify a little bit. But if you're talking about like the risk to reward tool, to give a little bit better of a visual on that, we can go over here. We can find that tool. There we go. The short tool right here. Put this here. And this is just nice for anybody that's a directional trader when it comes down to some of these futures assets, just because you can kind of visualize, right, what you might be risking on the trade, what your risk to reward might be. And I'm going to zoom in just a little bit more here just so we can get a little bit more detail within the chart. So just bear with me. Just bear with me now. But our entry was at 28,865. So I'm going to bring this tool right here down to 28,865. 28,860. If I can find it, there we go. So that was our entry. We exited this position at 28,761. It's gonna be 28,761. There we go, about 28,761. So you can kind of see on this one right here, our risk to reward on this trade was 3.38, meaning we made about 3.3 times more than what we risked on this trade. And as a directional trader, these are usually the risk rewards that we're trying to go for. Not always a 3-to-1, right? Sometimes you'll get a 4-to-1, sometimes you get a 5-to-1, sometimes you'll get a 1-to-2. But if the trade isn't at least offering a potential 1-to-2 risk to reward, if I can't at least make 2 times of what we're risking on this scalp, I'm not going to be super fond of it. I might, pass that, or I might just wait for a better entry to be able to get that risk to reward, because sometimes we can get a trade idea, or we can have a trade thesis, but if the risk to reward isn't lining up, I'd rather sit on the sidelines, even if we see the market move in the direction that we thought the market was going to move in. But if we're not able to snag the risk to reward, I really want to focus on that math and how that's going to crunch after about 100 trades. So whenever we pair that risk to reward with the probability of your win rate, that'll kind of give you the expected value on whatever strategy it is that you're doing. But this was one of the only scalps we took on the week. Again, not too much going on, but that one was a 1-to-3, and that can help you view that risk to reward a little bit better. Does that indicator have a name there? Usually it's just the risk to reward tool, or the long tool, or the short tool. But if you come over here to the drop down window, You can see it as long position or short position. So if you want to frame it the risk reward, depending on the direction that you have, you can change, or the directional bias that you have, you can change, or you can choose between one of those two. But man, I would have loved to see the market rip a little bit higher, because I would have loved to take a short off this value area low, except we started to sell off before we can even get up there. And one of the reasons why I took off that QQQ positions yesterday, or that QQQ position yesterday, was just because of the response or the reaction that we were getting off of this level. And I didn't feel comfortable holding long with me trying to anticipate a potential reclaim of this level of value. So if I can find this drawing tool, here, almost there, where did it go? There we go. Here, this is where we were starting to get long on QQQ, right? And this is right at our value area low. So if the market were to reclaim this value area low and maybe we start trading above that level of value, I'd feel a little bit more comfortable to have that long delta on in there. But with the consistent rejection off this value area low, I thought we might have a little bit more downside. Wasn't something I really wanted to risk, especially just because I think depending on the positions that you have in your portfolio can really affect your confidence and conviction for the next trades that you're taking. So another reason why I didn't feel comfortable holding this was because we're already down a little bit on Oracle, right? Catching a falling knife. Oracle's still making lower lows. We have the SpaceX position on. We sold an out of the money put spread there. And then Google was down a little bit yesterday as well. So considering the overall portfolio, I didn't want to add more long delta whenever I'm sitting in a little bit of drawdown with the open positions that I have. But if the market can continue to rally past these highs, again, this value area low at 28,719 is going to be very interesting in terms of what market participants want to do here. Are we going to take a long here? Are we going to take a short here? We'll see whenever the market approaches that level, but that's where I feel I'm going to get the best risk to reward. And again, the point being for that is because if we're directional traders, right, let's say you were looking to get long here yesterday. And let's say you have your stops in somewhere beneath that price, right? You're going to figure out you're wrong, or you're going to get stopped out fairly quickly, and then you don't have to sit. You don't have to sit in this further drawdown to the downside. We could just get out momentarily and then get back in whenever we feel confident and convicted in that position again. But that was the thought process. If we continue to rally, that'd be awesome. I know the day high is trading at around 28,622 just for that morning high. So, I mean, NASDAQ is resilient. It's such a volatile asset right now. I mean, it really is a testament to how quickly we have to manage some of these positions, because a lot of the times we're selling off to these lows and we're not even consolidating. We're just straight reversing, reminding me of oil a little bit there now. If you're talking about the Smucker's Jelly Company, then it's Wednesday, August 26th, something who's saying Sunday. I'm not sure. We'll have to circle back around to that one, E-Media. But what's going on? Good to see you in chat. Took a little bit of a different approach from you, Errol. Errol went in the money, debit, just because I feel like it'll keep falling. No, I mean, I like that. And I think, depending on whatever your convictions is, that's what's nice about the options too. We have so much flexibility to frame that trade idea to around our trading thesis. Even if you feel we're going to slide a little bit more, I love how you can kind of, adjust that position for how you're feeling. So I totally get that. And I mean, I was a little bit over the same sentiment as well. That's why I sold the out of the money put spread to give ourselves a little bit of extra breathing room. But the risk overnight just wasn't something I really wanted to sit in. Still stuck on watching the C&S. Oh, I got you. C&S, what stock is that one again? We'll jump to the Tasty platform. But I know we just pulled up Schmucker's over here. And this is one that started to look pretty bullish. Look, I'm not a technical analysis guy where I like to look for breakouts within the technicals, but I mean, this is looking pretty bullish so far. It seems like this price action is really starting to cluster at these highs at around 117, 118. Scalps versus mean reversion, opening range breakout. Yeah, we could definitely do some research on some opening range breakouts. That would be a fun one, big deal. So I'll take note of that. But yeah, a lot of directional momentum today on the day at least. But no, with that being said, we're gonna start lining up our QQQ trades with the levels of value that we have marked off with NASDAQ. So that's what we'll do moving forward. But again, sometimes those other positions in your portfolio can really affect that next trade idea that you have, whether that's your conviction level, your directional bias, or even just pulling the trigger as a whole. NASDAQ is supposed to be down 1%. What happened? Yeah, E-Media. And you know what? I'm not complaining too much because I hope we continue to rally. we've had to really be patient this week, especially when you're somebody that's scalping. It's such a short-term type of trade. It's such a momentum directional trade. It can be really easy to want to put on another trade. So, I mean, it took a lot to just be patient to take that one trade this Thursday. And I mean, I don't want to anticipate these moves in the market either, but I really hope we continue to rally, get to this 28,720. And again, not to say that we're going to automatically get short, but I do think that's going to be an area where a lot of market participants are going to be making some very important directional decisions in the market. So we'll keep an eye on it. But this rally off the low is extremely aggressive, especially for a Friday. AAPI is supposed to be by 290. Oh, I got you. NASDAQ bounce off of June's low. It looks like it so far, big deal. If we zoom out a little bit over here. And this is what's going to be interesting too. And I think this is something we should keep an eye on, just because NASDAQ has been consolidating or trading within that range at the highs for quite some time now. So one of the previous lows that we have is earlier in June, like you mentioned, big deal there, sitting at 28,217. So the way that I would perceive something like this is if we were to get a ton of weakness off this level of value up here and we were starting to sell back off, that would be one of the potential targets. It's like, it's nice. We hit the targets from last week, Friday, we took out that low. We took that one out today. But if we get more downside action, these swing lows is what I'm going to be paying attention to. And it's interesting because the more that we zoom out over here, if I go to the daily chart here, it'll make it a little bit easier to see. There we go. Where'd this chart go? There it is. Right. If we continue to sell off lower, right, there's really not many other targets that we can potentially target. And these targets are just helpful because it allows us to frame up our risk to reward trades. But I mean, I doubt the market just goes in a free fall if we continue to sell off lower here. But I mean, we've put in these steady lower highs on NASDAQ. So you could just imagine the short positioning is probably increasing to the downside, but that could add a little bit of fuel for the fire if the market were to reverse. And that's one of the reasons why I want to get on a little bit of long delta on QQQ or SPY, just in case we get that reversal that we're looking for. But with such a consistent downtrend, again, you could imagine that short interest might be increasing a little bit. People might be getting a little bit more fearful, but we'll keep an eye on it. Seems the days when semis fall, major techs rise, and vice versa. Yeah, it's kind of been seeming that way as well, especially with these memory names. And again, I would love to get a little bit more short delta on some of these memory names. It does feel like there's been such a change in sentiment overall. I don't know if we'll make higher highs in here. So I'm a little bit of the sentiment that we put the top in these memory names. That's of my sentiment. If the trade thesis proves to be incorrect, then we'll readjust. But with that being said, the higher that we pop, the more attractive I think it's going to be to get a little bit of short delta on, just because these memory names have been moving off of so much momentum. It doesn't even feel like they've been moving off of fundamentals over the last, 6 to 8 months that they've been running to the upside. So I think there's a little bit of air that could come out of some of these names, but we'll be patient. If we get a little bit more of a pop, we'll put on some short delta. But that's another reason why we were so quick to take off the long delta whenever Micron did give us that little relief pop there. And I mean, if these memory names continue to make higher highs, that would be insane. What a market that we're going to be in for if that's going to be the case. But I think oil is going to be top of mind for us before we go here. Oil, NASDAQ, and if we take any other trades on those positions, we'll keep you guys posted. But we will see. He's colorblind, so yeah, I am. So I'm not colorblind to where I only see black and white. It's just where a lot of different colors will look the same color, if that makes sense. So I need like a pretty large contrast on the screen sometimes so I can see what we're looking at there. But with that being said, guys, Rancher, Big Deal, E-Media, Black, everybody else, thanks for taking the time to hang out. Grumpy Mike, Point B, thanks for taking the time to hang out. We will be back for more amazing content. We'll manage these trades as we go on throughout the week, and we'll see you guys next time. Peace.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Welcome to Trading Trends. This is Ilya Spivak, head of Global Macro here at Tasty Live, and we've got a very special guest. And on just the right day, here to explain some things to us. Peter Bukvar is here. He's the Chief Investment Officer over at One Point BFG Wealth Partners and the publisher of the book report. Peter, welcome.
Thanks for having me again.
Great to have you. I wanted to go right to something you've been saying to anyone that would listen recently, the idea that what we're watching in the bond markets is not, in fact, an inflation scare driven by oil prices, but is, in fact, a function of real rates surging. Explain to the folks what this is.
Okay, so real rates being inflation-adjusted interest rates. So just to sort of quantify, the last Friday in February, so going into the weekend in which the conflict began with Iran, the U.S. 10-year yield was at 3.94%. Today, we're at about 4.65. So it's about a 70 basis point increase in nominal interest rates. However, the 10-year inflation break-even, which is in the TIPS market, where it's an implied inflation rate over 10 years, is little changed since that Friday in February, which means that a lot of almost all of the rise in nominal rates is in inflation-adjusted real rates, where inflation expectations have been pretty muted. Now, I'm beginning to wonder that this is just way too much of a disconnect, and thinking that we have this very wide spread between PPI and CPI right now. It's 200 basis points. And in the TIPS market, it's only measuring consumer price inflation. While wholesale inflation, business cost pressure type inflation, is still pretty notable. And so while, yes, that's a rise in real rates technically within TIPS, I think maybe it's also a sign that the market acknowledges the inflation situation, and now pronounced with this rise in oil prices. But maybe in the TIPS market, it's just skeptical to the extent at which companies can pass it on, because that's an issue here. If you have pricing power, you can absorb these persistent price pressures. If you don't, you're going to eat it in margin. And when you have this 200 basis point spread between PPI and CPI, there are a lot of companies eating it in profit margin. And I think that is an issue here. But I think putting that all aside, I do think when we see the rise in rates in Japan, in France, in the UK, in Germany, that markets for the first time in our lives are concerned about the huge amount of supply, and that debts and deficits in these countries now matter, and that we're just getting flooded with this paper, and investors are just reluctant to take too much duration risk in lending money to these governments. And I think that that's a big deal, and that's an issue for all these governments. I mean, the JGB yield lifted when Takaichi talked about passing their fiscal program. The gilt market has been very sensitive to the new prime minister. And we know financial issues in France, and the extra spend going on in Germany. So debts and deficits do matter because investors are telling us it does. And that's a big step change when it comes to the pricing of capital globally.
When we look at the TIPS market, because I think this is fascinating, and if we just look at, let's say, the iShares TIPS ETF, which is kind of a basket across maturities, the TIP ETF, we see that, I mean, obviously, we can see real rates are surging there because we can see this thing has broken something like a 3-year up move and is now aggressively coming down. The top on that move is about the same time that you get the sort of war trade divergence initially, where the war starts, you get bonds and stocks come down together, gold comes down, the dollar soars, and it's a very clear kind of, this is an inflation risk, the Fed's not going to be able to cut, that kind of a dynamic. And then once you get the first quarter reporting season, stocks and bonds diverge, where bonds keep going down, stocks go up. That's exactly the spot where real rates seem to bottom. and tips start to sell off? Is it possible that some of this run up is the AI capex numbers themselves, where the companies come out and go, listen, we're going to shower 750 billion on everybody? Might that be beckoning higher rates? Because of course, with that kind of money, people are going to want some inflation compensation.
Well, from an economic perspective, all that spend, we're still stuck with the 2% growth rate. Now, in terms of bond supply, in order to finance all that spend, yeah, maybe the market is beginning to choke on this stuff. I think 400 billion is the amount of bond issuance we're going to see this year. And it's important also to understand, and I'm going to go off on a tangent here for a second, that's on balance sheet. We know a lot of the financing that's happening here with a lot of these data centers is off balance sheet. Mm-hmm. Also, from an obligation perspective, hyperscalers, including Oracle, have committed themselves, and this is only going to grow, to about $250 billion of lease obligations, on top of the north of 400 billion of debt, and then, of course, all the other off-balance sheet liabilities. So there is a large pool of debt obligations or debt-like obligations that these hyperscalers have created for themselves. Now, I don't think people should be concerned about Google paying you back, but it does highlight the complete 180 balance sheet and capital structure that has taken place here, and certainly the complete 180 that their free cash flow statements have done. I mean, Google just reported its first quarterly cash flow loss since it went public. I mean, Google now is expected to spend this year 47% of revenue on CapEx. It was 11% in 2022. Oracle is going to spend all of its revenue on CapEx, 100%, gross of some prepayments, and that was 10% in 2022. So maybe there is some indigestion going on here because of this corporate paper, in addition to all the government issuance that's taking place in the U.S. and abroad.
Well, indeed, Nikkei, I think, published a study earlier this week where they said, on balance sheet, these guys have 1.3 trillion. Off balance sheet is another 1.6 trillion. That's kind of in the liner notes. I'm wondering if this significant rise in real rates, I mean, we're at something like the highest in 16 months. I wonder if, in your mind, that starts to choke off the economy because, of course, real rates going up this hard, this fast becomes an economic risk. You mentioned we're only growing 2.1% as of the first quarter. We'll get next quarter's numbers next week. The internals there are pretty damning. Consumption is very weak. In fact, the last two times that we had consumption contribute this little to GDP was contracting. The first quarter of last year, the first quarter of 2022. And the difference maker this time is, of course, this incredible business investment boom. But if that's feeding real rates, it becomes kind of a vicious cycle. Do you think we're looking at a growth risk here?
I think a lot will depend on whether this rise in real rates can be sustained. Because if oil prices keep going up and we go north of 100, you're going to quickly reverse that rise in real rates because inflation expectations are going to rise. Mm-hmm. So I'm not sure yet. In terms of the economy, so much will depend on the sustainability of the CapEx spend. Now, it looks like it's going to be sustained. If you listen to Google, we'll see whether that gets confirmed next week when we hear from the others. A lot certainly will depend on the direction of the stock market because that is certainly buoying upper income spending. So a lot is to be determined about the economic response. Now, small medium-sized businesses, many are still challenged here. They're still challenged by the cost of doing business, whether it's labor, raw materials, and et cetera there, the cost of capital, that area of the economy, I'm pretty focused on because I think they're losing some pricing power here. And that from a margin perspective, everyone looks at margins and they see the S&P. I think it's more important to look at margins X tech, X semis, X hyperscalers, and those profit margins are more flatlined. And I think that's more at risk. And that's where I think also we've seen a slowdown in hiring the last 2 years. I think a lot of that has to do with tariffs, raising the cost of doing business. And I think that, hearing a lot about, just keeping a tight lid on costs and productivity enhancements to absorb what's happening with the expense side of the P&L.
Very interesting you mentioned the tariffs because actually the real rates are the highest since early April last year, which was, of course, that bond market kerfuffle around the rollout of the tariffs. It's a question, of course, for what's happening at the top line indexes. At this point, NASDAQ's erased almost everything since May. It's interesting in particular because you have basically the two top line indexes that reflect this tech move, S&P and NASDAQ, kind of stop moving by mid-May, top out in June, and sort of drift sideways from there. And interestingly, that's also exactly the spot where the tips break down from the trend. So I wonder if we're getting to a place where even the fact that the markets were forecasting and still are Fed rate hikes suggests that this is actually more of a excessive capex kind of a thing, because after all, what would rate hikes do to resolve the oil issue? Not a whole lot. Surely the markets understand that. Do you think the Fed is actually going to hike rates this year?
So similar to, in a way, Kevin Warsh, I don't have the crystal ball out to this next meeting next week. Mm-hmm. And I agree, the Fed's not going to hike. First of all, Trump would have a conniption if Kevin Warsh hiked rates. But I think that what is going to hamstring the Fed right now are two things. Number one, because geopolitics are, pushing oil prices up and down, how do you calibrate monetary policy around geopolitics? Because let's just say the Fed hikes rates and then tomorrow, there's a deal with Iran and oil goes back to $75. Then why'd you hike rates? And then the second thing is, Warsh created these task forces, right, to try to refine the collection of economic data, to improve the measurement of it, to make the inflation analysis more precise. So what are you're gonna move rates before you even see the results of the task forces? Now, unfortunately, the task forces aren't going to be done till the end of the year. So I think in a way he sort of hamstrung himself. I agree and respect his decision to create these task forces, but then how do you move before they tell you what they're thinking? How do you move on data that the task force may tell you is not good?
I wonder if that might be a feature and not a bug. How do you tell the president that you can't cut rates immediately? You tell him the task forces aren't done yet.
Yeah, I guess maybe, but I think I like what Kevin Warsh is doing in terms of wanting to, again, refine and make more precise the analysis to this. Because at the end of the day, if you're going to price fix the cost of money, you better get all your stats lined up correctly. We know the Fed has not for the last 25 plus years. but it's still a hard job trying to put your finger in the air and say, okay, I think the right interest rate should be, X.
Absolutely. I think it was Chair Powell that said, "We know the neutral rate by its works."
Or when we see it.
Yeah, one of the great pronouncements of monetary policymakers. I want to wrap up with a view on gold because I think it offers an interesting dimension to this whole thing. Real rates surging, nominal rates up, dollar, let's say, much stronger than it started the year. Oil is jumping again. Gold does not want to participate, seemingly, in this conversation at all. You'd think it would be selling off in this environment again. And it was in sort of the earlier innings. But for about a month now, it is refusing to budge. Is this a tell? Is it attempting to say something here?
Well, it could be to what we talked about earlier. It could be a tell that this rise in real rates has sort of run its course and that inflation expectations just got too low. And I mean, I think they have. I think tips are a great buy here. And maybe the gold hanging in here at around 4,000 is sniffing that out. Also, with respect to the dollar, the dollar index, obviously it's euro heavy, but it's barely rallied. It's rallied from 90 to 101. Big deal. And I do want to say one thing here with the dollar, which will obviously tie into gold. The whole world owns U.S. tech stocks. If you are an asset manager on this planet, you own U.S. tech stocks. If this AI trade, which is already splintered between the massive spenders and the recipients of that spend, every asset manager, they own the Mag 7 for sure. If that trade continues to falter, if the semi trade breaks because supply eventually catches up to the demand, and this tech trade really blows up, the dollar is going much lower because the whole world is going to use these tech stocks as a source of funds, which would then tie into creating a bid for gold.
That's an interesting perspective on it, for sure. I was thinking that it's either something like gold is saying that inflation is undervalued, or gold is saying whatever damage there is from these real rates to the economy is already starting to get sniffed out.
Could be that too.
And maybe the Fed isn't going to hike, and for the wrong reasons. Peter, thank you very much, as always, for joining us. There was a ton of information there to process. Tell the good folks where they can follow more from you.
On the wealth management side, they can learn more about us at our website at onepointbfg.com. And I write a Substack called The Book Report and daily commentary on markets, macro, micro, economics, and so forth. And they can trial it.
Perfect. Peter, thank you very much. We're going to go straight to friend of the show, Chris Vecchio here. Peter, thank you very much once again.
Yeah,
Chris.
Appreciate having me.
Hey.
He returns. I leave this in your capable hands as the markets continue to churn, and I'll be with you for our futures conversation in just a few hours.
Yeah, we'll be back together in, I think it's just over an hour's time, 1:30 Eastern, 12:30 Central. So I'll see you there for futures. We're doing a brief retail check-in here, folks, to see what the crowd is trading today. Yesterday we had Marty Vennick come on the show. We have a smaller window here, only about 5 minutes ago. So we're going to take a little bit of a different crack at this. I'm taking a look at the top mentioned tickers on Reddit right now over the course of the past 24 hours, as it were, and sorting those by mention. So what's really driving up the, what's been rising rising in people's interests here. Believe it or not, Intel sits at the top of the leaderboard for this chart alongside Johnson & Johnson. So we're going to start with Intel here, Ben. We can go right to the charts here where we do have an post-earnings reaction. Shares are down $4.66 here today, 95.60 right now on the screen. Once those charts go up, you'll be able to see it too, folks. There they are, 95.60 or so here on the screen right now. The market overnight, though, I think that's what's the prime interest. We see here that we hit a high of 113.70 after those earnings did come out. So where does that leave us here? I'm looking out for the rest of the day today. If you're trading this, the expected move is still about $1.58, so that does bring us down into about, we'll call it 94 on the nose, and perhaps up to about 97, 98 or change there to the upside. The bigger picture, though, going out, is this a good opportunity to look to sell some Intel volatility right now? I'm looking at 28 days because that's the August 21st expiry here. Currently, the expected move extends out to 113, 114. This big reversal after earnings piques my interest as a potential short opportunity. Looking out at that expected move, $2 wide. Are you getting paid for it, though? That's the better question. The answer is no, you're not really getting paid for it out here. When we talk about typical tasting mechanics, it's usually looking for a third of the width of the strikes that you're trying to capture in your credit. And this here being $2 wide, we'd be looking for, well, a little bit more than that. 67 cents would be ideal. So at 47, it's not really even the ballpark right now. On the downside, if we were to flip this over and look to sell the short put spread, where there's still a little bit more opportunity, perhaps, $5 wide? No, we'll go $2 wide and still only 52 cents a credit. So maybe from the option selling perspective, maybe it's worth waiting until next week. Johnson & Johnson is a name also at the top of the leaderboard, as mentioned here. A lot of folks are starting to talk about this here too. A decent trading volume, 2.34 million, but it's up 1.5% in this tape here today. It's a name that we've talked about here because it did hit the criteria last week where it was trading in between that 1 month and 50-day. I personally couldn't get filled on it, which is obviously unfortunate given how it's traded. So is there a dip buying opportunity or way to latch onto this trend right now that may be something acceptable? I see a 50-day at, we'll call this and pull this back to the daily right here. I see a 50-day sitting in at 245 or so. 245 on our screen is just beyond the expected move at 28 days. So kicking out a little bit further, let's say to 42. And can we find something appealing there? Now at $5 wide, $1.58 of credit, ideally we'd be looking for $1.67, but $1.58 is doable. $1.58 at a potential max loss of $3.42 at a 73% probability of profit, and something that's not so growth sensitive or related to this semiconductor move, that finds some appeal. A few other tickers here that are popping up on the screen as generating new interest. At New York Times, perhaps today, this doesn't seem like it's a good stock to trade though, from an options perspective. I see 542,000 shares here traded. There's not any weekly expiries, so you have to go out to 28 days, which sits just on the other side of your earnings release here. In terms of that expected move, what kind of credits are you getting? $2.50 wide at the expected move, 13 cents. No thank you. Nice trade you have there if you're trading it or talking about it, but we move on. Robinhood, likewise, one of these other tickers popping up today, 5.83% to the downside, back to about $95 or so, a level that we've had marked off on the chart here, just we'll call it 93, being a level of support and resistance in recent months. It does have an 80 IVR though right now, with earnings coming up here on July 29th. Certainly an interesting play, but if you do place a trade, it has to be at 7 DTE. So thinking about an earnings crush trade here, what would a short iron condor look like? We're going 84, 86, 106, 108 there, 57% probability of profit. 80 cents a credit on $2 wide strike is actually pretty good. Risking 120 to make 80, I think that's something that we should take a look at. So, hey, check out what's going on. See where the crowd's going sometimes. If folks are talking about interesting tickers, there may be trading opportunities in places you don't look. I certainly haven't traded Robinhood recently, and I don't think I've looked at Intel or rather, the New York Times of interest. But you always got to poke around and explore because you never know what the market may hold within. Hey, we're done here. This was a quick retail check-in on tastylive, midday lunch break, if you will. We're going to take a 2-minute break here, though. More tastylive programming continues next. We have more live trading ahead. Stick around. Explain pot odds.
pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario, or something that would give us pot odds to stay in.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty fam, what's going on? Thanks for watching Trade of the Day. This has been a fun little segment that we've been doing here, and done a couple of trades over the last week. I know I did a cattle trade, I did an oil trade, I did an Intel trade for earnings yesterday that I think kind of worked out pretty well. I mean, stock is doing what we felt like it would do. It's going to be inside to down. Meaning an inside move and trading down, and that's exactly what's going on. So that's worked out pretty decent. It's also been just such a wild week overall, right? Just lots of earnings, just the beginning, really. Tesla and Google, and markets swinging all over the place. Storage names going all over the place. Rotation still fully in effect, where you see chips up one day, you see them down the next, and you see the rotation into and in and out of the software names and the consumer staple names. It's been one heck of a ride, and it's about to get even wilder when we get into next week. And amongst all of that, we've seen this move with crude oil more recently, right? Over the last couple of weeks here, really kind of since the beginning of the month, we've seen the rise back in the crude oil, which is on the heels of more talks about a ceasefire ending. Remember, we came out of the 4th of July break, and basically Trump was saying that Iran wasn't doing their part, or whatever it is. I'll be honest with you, I don't read a lot of those headlines. I can't. I mean, how can you follow along? There's just so many different things going on with that. I mean, at the end of the day, I'm a trader. I'm an options trader. I'm not a political strategist. I don't know the ins and outs of what's going on with war, but what's dope about what we do is that we use volatility and price action to kind of figure out something is up, right? Something's wrong in those situations, or something is right in other situations. We do it all the time with the VIX itself, volatility. And for a while there, earlier this year, going back here, oil was like the VIX of the stock market. I mean, it really was. It was operating very similarly. On the days where oil was up, stock market was down, and vice versa. And we've seen these things at other times. I can remember back in 2008 when there was this big push and pull between financials and energy. Oil, if you remember, maybe you were trading, maybe you weren't, but you did know that oil shot up big time in 2008. It was trading about $150, almost $200 at times, and it was wild. And being in the trading markets, one of the things that we saw was there were some days where financials were up and all the oil energy names are down, and then other days where you see the financials down and all the oil and energy names are up. And we saw this kind of similar dynamic this year with just the whole entire market. Whole entire market would be down and oil would be up, and vice versa. And to be honest with you, we haven't seen that a whole lot this time around. I mean, the market has still been fairly strong into this move in oil. It's just been other things moving around. So just wanted to give some context there on that. But I did place an oil strangle the other day, and I'm looking at crude oil again because this first sign of weakness in crude oil is fascinating to me. And so I feel like, I'm beginning to wonder if we're going to see a similar de-escalation in crude oil like we saw here in July, or is this just the beginning of a big move higher? Not entirely sure. But I think one way to sort of play this is doing a sort of downside spread in case we do see more continuation to the downside. I mean, look, all it takes is some mentioning in the tweets, some mentioning over the weekend, which I'm sure is going to happen. We're definitely going to see headlines over the weekend, and maybe that's what pushes it higher. Or maybe we see some headlines about potential ceasefire, and they're starting to talk again. Maybe that's what pushes it lower. Nevertheless, again, I don't care about the headlines. In that I don't care about the details of the headlines, but I care about them and how they move this product. So one of the things I'm looking at is where could we see some de-escalation to, right? So we got as high as, I think, 93.5 yesterday. And even in the overnight session, it was still trading around 92.83 was the high in the overnight session when it reopened yesterday. And now we're right below 90, which I'm actually a little bit surprised by. So I thought it would be interesting to play downside, but then also get a little delta. Now, here's the interesting part about crude. And again, I'm looking at the big CL contract. The ratio spread I'm going to do, I'm actually going to do an MCL, but I still like looking at dates. And I'll tell you, I'm actually going to make this. Today, we're going to talk about one trade, but I'm thinking about making it a potential two-part trade, similar to what I did a couple of weeks back. If you guys remember, if you guys pay that much attention to me, I don't know if you do or not, but it's always interesting to look at the crude curve, right? And so for those of us, for those who know, we've talked about this a lot, but it always bears mentioning because you never know who's watching again or not watching or watching for the first time. But just the difference in the futures contracts, right? Again, at the end of the day, crude oil is a commodity. And so a lot of times commodities, almost all commodities have different futures expiration. So when we look at the U contract here, which is for September, crude oil for delivery for September is trading $88.31. V contract, which is November, $84.34. So almost a $4 difference between those two, which is to be expected considering the big move up we've seen in oil in a short time period. That's what creates these dislocations when you talk about backwardation, which is what this futures contract is. If you were to see this thing on a curve, you'd see, obviously 88 for the September higher, and then you'd see a little bit lower would be that V contract 84, then another one 81, then you see it starts to kind of flatten out. It'd be that kind of weird curve you'd see there. And so that's what we're seeing going all the way out to June of next year, even though it's the May options, that's June, CL M7, kind of small, you can see there. And then we see the changes in the volatility, 64 volatility in the front, 59, 53, 50. So, as much as we talk about trading volatility and selling volatility in a 45-day window and then closing or rolling in a 21-day window, this is a little bit different in that, when we talk about that, that's for Microsoft, say, for example, and all of the options contracts are trading based on the same underlying, which is the stock price, right? Commodities, it's a little bit different, and you do have to be aware of the futures contract that's you're trading those options in. So going to MCL here, I have a trade idea. Considering how fast oil is moving, I do want to keep it in a shorter cycle. And I'm going to go with this August cycle, which is the September future right now, right? Which is trading 88, which is the one that's most responsive to the moves in crude oil at the moment. And we got 24 days in this cycle, which actually I like. I like for my trade. And I like that it's going to be fairly quick one way or another. You're going to know if you're right or wrong. So originally I was going to do this with the 80 contract and then maybe sell 3 of the 75s. Oh, excuse me. Hold on. I did 3 and 3. Let's do this. Because I can't sell 2. I want to get a credit for this, right? Anytime you do a ratio spread, you want to get credit. Buy 1 to sell 2. And I'm not getting a credit in this situation with the 80, 75. And I'm also already short this 80 put that I rolled from my original strangle. I have the 80-95 strangle on. I originally had the 75-95 strangle on, but after the move yesterday, I rolled this put up. So luckily for us, they have these half strikes. So I'm going to go with the 80.5. and I'm going to sell the 75.5. I mean, essentially still the same as $5 wide, right? And again, I still can't get a credit on this. So I'm actually going to go with a 1x3 in this situation. And luckily, that does beef up the buying power, I will say. Originally, if I was just doing a 1x2, this would be $68. But again, I do want to get the credit, so I'm going to go with the 1x3. Before you hit trade on this thing, you do have to look back at the chart. And again, I was curious. I was like, okay, I am obviously, you saw the P&L graph, and my break even is around 72. But let's pull that up. And I'm just before even we talk about break evens, I just always like to know, what are the chances that it's going to breach my strike, especially when I have a ratio spread? Like, what are the odds and what does it look like? Now, we can look at options math on that, but then we also I like to look at charts. How believable is it that oil is just going to slide and completely blow through my strike? Well, last time we were in this range, 89 or so was on June 11th, and we did see a quick 4-day slide, right? You kept hearing these headlines come out as well. There's going to be de-escalation. Well. So it happened pretty fast, I would say. I mean, if it happened on June 11th, about 5 days later, we were as low as $74, and then a couple of days after that, low as 72, low as 71, about almost 2 weeks later, right? So it can happen fast. This trade is such that you don't necessarily want that fast of a de-escalation. You'd want it to be a lot slower, right? And so let's look at, I know we just had the P&L graph, but I can pull it up for you again in real time here, looking at this analysis. And go back to our trade here. Let's go back to the curve and then go to analysis. And then let's just zoom out some, right? Now, again, you'll always see in these, I got to take on I got to take my strangle out of there. We don't want that in there. So, like we said, I mean, we could see some quick de-escalation. I am long that 180.5, right? Obviously, if things were just completely awesome, this thing would really go fairly slow over, we got a 27-day expiration over the next 2 weeks, right? We could find ourselves in a situation of possibly de-escalating and possibly slow drag down, right? And again, you have to factor in, the big thing you got to factor in is the vol component of this, right? What do we know about crude oil? When it rockets up, volatility starts to go up and skews to the upside. When it starts to come back down, there will be a volatility contraction. So you can start to look at different scenarios. Let's just say 2 weeks out here, and let's just say the price slides. And let's say volatility, you can move these volatilities with expiration, right? So right here we're moving this. Right now it's about a 71. Let's just say it drops 10%. Let's just say it drops to 55 volatility, right? Now all of a sudden we're actually doing okay in this spread. We're not too worried. Say we're down at around 78 and volatility has come in. Our theoretical P&L is only about $20 or so. Again, you can look at the expiration, but we're not holding this to expiration. It's just something that gives you an idea of what's going to go on. But ideally, this is kind of what you want. You want volatility kind of come in. You want this slow drag down. And, this is kind of the best thing you also need to really consider and think about. Your break even real to the downside is somewhere around 73 and change. It's not like, it's pretty far away from where we are right now. Again, that's about $15, $16. So we're pretty safe from that. But again, we could see some quick de-escalation like last time. We just hope it's not as fast. I mean, even more recently, it's been somewhat of a slow buildup over the last, 2 weeks. I wouldn't say it's slow, but we do just want to see this thing pull back, and we want to see volatility kind of get crushed along with it. And then I know somebody asked a question here. Let me take a look. What is the benefit of a ratio spread on microcrude versus a traditional debit or credit? So I want to take advantage of the volatility collapsing here, right? And so that's my idea behind the trade. As a matter of fact, let me put this on before I forget, see if we can get filled. I'm trying it for 82 cents. I may eventually have to step down to 80. Let's see. Replace. It's being difficult here. Let's see. Can you gonna give it to me for 81? See, because we got three legs there. I'm gonna leave it at 81. I'm definitely not. Oh, there we go. We got filled. Awesome. So I'll post that to the follow page. So the idea here to answer this question before we head out is to take advantage of not only the price sliding down, but the volatility. And we're doing it in a product that we can withstand the size of it. Again, if I were to do this in just the regular crude contract, it would be a whole lot more expensive. So, but the other thing I think I'm going to likely do as well, and I don't know if I'm going to do it just right. So just looking at the credit spread, this is a $600 spread. You could totally do that as well. My MCL, the reason why I'm using MCL for that spread is just because, again, it's a smaller price point. And also, if just to show you, I definitely couldn't really withstand a 1x3 in here. It's going to be a lot more expensive, right? This is going to be a $15,000 trade. I wouldn't do that. And so that's the reason why we did it in the CL contract. But the other thing I might add on to this is a traditional just downside put spread. And I'm probably going to eventually decide on the strikes. It might be something on the order of 78, 76. I might just do this as well. $400 trade. This also will work in tandem with that other trade. If we do get the big slide to the downside, then I can make money on this. So that's my trade of the day is the ratio spread. But I might add on this crude oil spread as well for $400. And that's a nice little fail safe that makes me feel good if we do get the big move down. So there you have it. This has been fun. Trades of the day for the week. And we'll be back with next week with more. But right now, Mike Butler is up with his trade of the day.
What's up, Tasty Nation? We've got a brand new market, it looks like, from this morning. We were selling off quite aggressively, but the E-minis have ripped higher, up 30 points, NASDAQ down 120. I'm going back to the well in Micron here, and I already got filled in this trade. I posted it to the follow page, so check out the follow page if you're looking for any of our trades. We've got them all flowing there, but yeah, I think this is where I want to be at this point in time with Micron down 5% today, down 50 points. I've got this pulled up on the analysis tab, and we've got a nice visual for you too. But basically, just looking to get into this product in a way where I can make a lot more money than just a short put spread on the way up. And that, of course, is going to be achieved with something like a Super Bowl setup. So I sold the 800, 780 put spread to buy the 1100, 1120 call spread. The entire thing was completely financed. I actually was filled for $1.04 exactly. So right around $1 here. So I've got $100 of neutral premium that I will keep at expiration if Micron lands between 800 and 1100. But as you can see by the expiration graph, much more max profit than just the short put spread. Max profit of $2,000, $2,100 to be exact, if we get a move all the way up here, which is actually within the expected move. So just taking a little shot here to the upside. And from a theoretical standpoint, you can always use that as well on the analysis tab. If you were to do that, I would say, let's kick this to like the end of the month, maybe even into mid-August. Let's go to the 15th or 14th, which is a Friday in August. If you get a slight rally here from 930 up to 960, 970, you can see a nice profit higher than the credit received. So ultimately, this is one of those trades where just like SPX, we do these Super Bulls and Super Bears and SPX. It's going to be a fast moving trade simply because you've got a short put spread that loses value on the way up if it does rally, and a long call spread that gains value at the same time. So that's how you can route these for a credit on the open if your put spread is worth more than the call spread you're buying. And then if you do get a rally higher, you can route it for a credit on the exiting portion because your long call spread that you bought is now worth more than the short put spread that you sold that you'd have to buy back. So kind of confusing that you can route it for a credit on entry and exit. But when you break it down in these isolated pods of what is the short put spread doing relative to the call spread, it helps you make a lot more sense of it. So that is ultimately the trade here in Micron. And again, looking for a rally in the short term. If that happens, the sooner that happens, the better that will happen. That will be for this trade because if it takes a long time, these options are going to lose a lot of value over time. But if you look at the raw value of these options, $7,600, $7,000, $6,500, like this is a really expensive option by itself. So the fact that I've routed it for a small credit of $100, it also tells me that in the middle here, like the P&L is really not going to change all that much. To the downside, we could take some heat if we continue to sell off here. But in the interim, because these options are trading for so much more than the credit I collected, it's not really going to be a huge loss if we do move to the downside here. And we probably won't see a massive gain unless we get much closer to this long call spread here, because we want to see that short put spread deteriorate. So looking at Micron, talking about strike selection here, we talk about this all the time, but really just focusing on the 800 and the 1100 strike. So if you go to the September cycle, you can see thousands of open interest contracts here at 1100 relative to the 1120 here. A little bit less liquid, but really just focused on this long option, which is the asset in my trade. And then the 800 strike, same story. 4.5K open interest, 1.3K open interest. So that helps these markets, even if the bid-ask spread is a little bit wider. You can see these are $2 wide in some places, but I know there's thousands of open contracts. I was filled pretty immediately on this trade. So always just keep that in mind. Like these are options that are worth thousands and thousands of dollars. So you're just simply not going to have a penny wide market here, even if they are super liquid. Something like SPX is a good example. SPX, these options are thousands and thousands of dollars. They're still $100 wide between the bid ask, but you can get filled pretty immediately, just like Micron. One of the most liquid products these days anyways. 21 million shares traded today. Kind of crazy. So looking at the chart, going back to that strike selection, if we pull up the Micron chart here, you can see, okay, we got as high as 1250. We sold off to 800. So just drawing a line here at where my short put strike is, right around 800. That's a comfortable level for me in terms of where I'm okay taking some downside risk. We haven't breached below that level since April or May of this year. So plenty of time where we spent trading above it. We bounced off of that a couple of days ago. So comfortable here, especially into this sell-off here, down 50 points today. That gives me a lot more premium in that short put spread that I sold compared to if I sold it yesterday where we were trading for almost 100 points higher. So I'm expecting this trade to be a fast mover simply because we've got realized volatility like crazy here in Micron. And to the upside, same story. I'm within the expected move to the upside. If you look at the expected range here in the September cycle, we're also within the expected move on the downside with a 255 point implied range for the cycle. So expecting some quick movements. I'll keep my eye on this thing. Anytime Micron rallies in a big way, I'll look to close that position. I'm not looking for a max profit here. I'm just looking for a couple $100, maybe $300-400, and that can certainly be achieved on an out of the money move when you consider the put spread losing value and the call spread gaining value. But the 1100 strike isn't anything crazy. I mean, if you wanted to pick up more of a profit for the middle of the trade and not pay as much of a debit, you could have done something like a 1200, 1250 or 1200, 1220, where you're getting really far up here to where we saw Micron trade just briefly. But the 1100 strike is right in the middle of that range. And that's kind of what I was looking for. You know, would I be surprised if Micron got back to halfway, the halfway point of where we saw the recent high? Obviously, much higher probability that we get there compared to back to all-time highs. But if we look at this trade, we can see this would be a much more aggressive trade to the upside, where I would sell the same put spread for about $700. And really, you can construct the call spread however you want, as long as you're collecting a net credit, meaning you're paying less than $700 for the debit spread that you buy here. It's going to be a high probability trade because you have that neutral out of the money premium here. So let's say I went with the 1200, 1220 instead. I would have picked up $3 and change and had a much higher max profit in the neutral zone, but you have a much lower probability of getting up to these strikes. That doesn't mean it can't appreciate as the market moves, but I just went with the 1100 because it's inside the expected move, much higher probability that we get there. And we can look at the probability in the money here, 27%, about 50% probability of touch, where this one is about 40% probability of touch. So nothing wrong with either of these, but if I were to go up here to the 1200 instead of the one I went to, I'd probably make this wider. And get into this kind of territory where you're still routing it for a credit. which means going no further than the 1200, 1230. If you were to use the 1200 strike as your anchor, that gives you a $1.50 credit. And look at the pop, 60% pop. The second this turns into a debit trade, where if you would have gone 10 points higher and you're paying a 30-cent debit, now you have a 20% pop because you lose money in the middle here, as you can see by this big red bar, where just one strike lower, where you're collecting a net credit and you have a similar max profit, now you've got a green neutral bar here all the way to your put spread. So we're always routing these things for credit. I think if you are utilizing strategies where you're selling something to buy something else, you want to make sure you're routing it for credit, because worst case scenario is, of course, your spread moves in the money and you have that loss, but you still have that neutral premium. In this case, it's $1. It's nothing crazy, but it's better to have a $1 win than a $1 loss if I was paying a $1 debit on the other side of the coin, especially if I'm routing these in a number of different underlyings. And let's say I get a ton of occurrences over time. I want to be collecting small premiums on the trades that don't, or the trades that expire worthless, versus losing money on the trades that expire worthless. Over time, that can be a difference of thousands of dollars as you accumulate occurrences in a year. So that is the trade for Micron. And yeah, I went to September. You could have gone to August if you wanted to be a little bit more aggressive. Looking at the same strikes, we could just pull it up here, the 800, 780, and then the 1100, 1120. This is actually at the expected move. Still picking up $1 here. So it's a very similar trade. And going to the curve analysis mode, if we isolate just this trade that I have on loaded on the screen, we can see the expiration risk graph is going to be very similar, but you have a lot more P&L Theo because this is going to be even faster moving than the September cycle. I didn't go to August just because we have a lot of earnings on the horizon. We have a ton of tech stocks reporting next week. And if for whatever reason this market just goes nuts and sells off to the downside, I'd be much more comfortable taking a pretty big risk here. It's a 20-point wide spread, so the risk is about $2,000. I want to give myself more time for this thing to work out, more than twice the amount of time in September compared to August. I'd hate to put this on in August, and then next week maybe the market sells off aggressively with weak earnings, and I feel pressure because I don't have a lot of time for it to work out. Or at least in September, 56 days out, even if we sell off next week, still have plenty of time for this thing to reverse. And again, these are both within the expected move. So even if we get down to 800, 780, we'll still have a ton of premium potential and a ton of movement potential with a 56-day cycle. So that is the trade. Hopefully that analysis helped you. Let me know what you think in the YouTube chat. We'll get to that a little bit later as well. But yeah, I think Micron is an interesting product to trade. It's had its realized volatility, so I can't trade it with undefined risk, but I'm not sure I would really want to anyways, given the realized moves here, even with a larger account size. Of course, you can pick up premium, you can manipulate those strikes a lot more easily, but I think in this kind of market where you've got 100% implied volatility across the board, defined risk just feels a lot more natural with the realized moves that are happening every single day. I feel like Micron hasn't moved less than 50 points on average. And we could probably pull that up if we look at the chart. But yeah, huge intraday moves here. And defined risk, short put spread at the low of where we reached just a few days ago. Prior to that, we haven't seen that level since April or May of 2026. So a lot of time we spent above it. And then again, the call spread, I went with a more conservative in the money probability with the 1100, 1120, right in the middle of this trading range that we've seen over the last couple of months. But again, if you wanted to go higher and pick up a lot more premium in the neutral zone, you could do something like the 1200, 1220 and really just play for that upside move in this product that seems to be moving like crazy and kind of pushing and pulling the equity space, as it were. Real quick, with the Micron trade, I told you I did post it to the follow feed here, but really wanted to just let you know also this Intel butterfly, it's a 0-day butterfly. I just closed it just a little bit ago for a $215 hedge winner. So I still have that Intel inverted strangle on, but just wanted to highlight that in case you're following along. This is going to be a sensitive trade. Intel is up like 75 cents from when I closed it, so maybe you don't see as much of a profitability here, but it should be profitable nonetheless. But close that out for $215. Just wanted to secure that value, and that just reduces my cost basis another $200 anyways on the remaining position that I have. So yeah, I think all things considered, Micron is the trade of the day. 780, 800 short put spread, 20 points wide. You could do the same thing here if you wanted to, make this a little bit more narrow. Micron doesn't have the best strike selection in September. It's 10 points wide, so that's the minimum. But if you were to narrow this and go with a 10-point wide put spread and a 10-point wide call spread, you can still pick up around $1. You cut your risk in half, you cut your max profit in half. It'll still be a trade that moves, but it will be a slower moving trade, of course, than a 20-point wide because you've got less delta exposure on the upside if you are getting that rally. Same thing with the put spread that deteriorates. You have less delta exposure with the most narrow spread possible in the September market. So again, let me know what you think in the YouTube chat. Feel free to reach out to me on Twitter if you'd like to do that. I'm at Trader Mikey B there. But we're going to pass it along to E for the next trade of the day.
What's going on, guys? We're back. We've seen a little bit more volatility into these markets, and if you've been keeping up for this entire week of the trades of the day, earlier this week we put on a Micron trade. Then later this week we put on an Oracle trade. And with that being said, we'll get into this. I got another trade idea on the day. I know we took off the QQQ position from yesterday. So I want to do a little bit more in QQQ again. It's not that I didn't want any exposure to the NASDAQ market, but because of the uncertain volatility from overnight last night, I didn't want to sit long in that position. But now that things have cleared out the way a little bit more, I feel a little bit more comfortable doing something like that. So that's what we're going to dive into. But again, just a quick update. We have the Google earnings. Our put side is getting tested right now. We were able to roll for an additional credit. So we sold that for 230. We rolled the call side down since that was a side that was untested. Collected an additional credit there. So now our credits are sitting at 280. So if we just subtract that, if we subtract that to one side of the trade and add it to the other side for the Iron Condor, we can calculate our break even. So it's nice to widen that a little bit. And with such a bearish sentiment coming out on Google, I was comfortable reducing that range a little bit, but at least having the break even a little bit wider. So that was the thought process there on Google. Shout out to Google. I'm still curious to see how Google is going to stay in the game as we get into things here. I'm curious to see how Google is going to stay in the game and kind of innovate a little bit more. I know, like, just the Google search engine, I've even seen my own behaviors change. I don't know if you guys recognize, you use Gemini, ChatGPT, Claude, whatever it might be for your go-to kind of search engine, right? Like Google is something that I use when I'm looking up maybe places, or my time using, right, the Google search engine has definitely changed a little bit. So I just could imagine from the grand scheme of things how others might change as well. But with that being said, we got Google on. Put sides getting tested right now. We sold the naked put in Oracle. This thing just continues to chug lower. And look, this is a naked put. So like I said 1,000 times today already, I'm going to risk about $250 maybe on this trade. We were able to hedge a little bit of that potential loss with some of the Micron positions with some of the micro NASDAQ scalps that we took this week. So hopefully that can play out. That's going to be 28 days left to expiration. And then we got the SpaceX. If you were here for yesterday, I sold an out of the money put spread on QQQ. So if I pull up QQQ here, we sold that for $1.78, right? About 12 minutes later, I ended up buying that back for about a $7 loss. So pretty much a break-even trade there. Just wasn't comfortable with holding that one overnight with all the earnings overnight. And then also the market had rallied off of the lows whenever we did put this trade on from yesterday. So one thing that I really like to do is get long into weakness and get short into strength whenever that trade idea might be warranted. So that was the whole reason for that. It's not that I don't want long delta on. I just didn't like the positioning. And some people might say, yo, that's not a big deal. But, you know, losing about 50 cents on the contract on order entry when if you would have sold that spread, just 30 minutes earlier. Not that we have to time every single trade, right? Selling premium gives us the ability to not have to time the directional moves in the market to the T, but I do still like to frame up the risk to reward best as possible if I can. And one thing that I hate is I don't like to sit in drawdown if I don't have to. So if I could reduce the amount of drawdown, from my perspective, that's going to be better for myself at least. That allows me to be a little bit more emotionally comfortable throughout the duration of these trades. So that was just the reason for that. And it's kind of funny now because we're going to go back and look at QQQ. This is going to be our trade for the day. And I want to put on a little bit more long delta, right? And if we jump over here to the TradingView platform, you could see throughout the duration of this week so far, we had most of the trading activity occurred around 29,350-ish and 29,000, just above 29,000. And right now we're trading at 29,480s. So if we can get a little bit of a relief pop, a little bit of a retracement, at least back into where most of the trading activity took place this week, I'd love to get off that long delta if we can get that pop. But for now, we're going to go back into the Tasty platform, try and get on a little bit more long delta. But that's what we're looking at right now. Market's been pretty weak today. We've tried to rally off the lows. It was looking pretty promising, but we still never got back to some of the levels that we would want this market to be at to take any additional scalps. And as you guys know, we like to use the profits from those scalps on the micro NASDAQ to help hedge a lot of the other options positions that we're putting on at the same time. So that kind of gives us a little bit more emotional flexibility whenever we do those two things. So we'll continue to do that. But just looking at the trade page here, I'm still going to be looking at the 28 days left to expiration, August 21st cycle. And I'm looking at selling the 685s, maybe selling the 680s. I know yesterday, if we look at the order chains, I had sold the 685s and bought the 690s. Right now, they're going for almost the same exact price of which we sold them yesterday. Yeah, about $1.80. I guess we could get maybe 2 pennies more price improvement. But I mean, at least, I guess if we look at the bright side, we didn't have to sit through any of this drawdown. So we didn't have to take on the emotional toll of, sitting in the red overnight, even though we're about to sell this spread and it's going for pretty much the same price. So again, with that being said, the market's been pretty weak this week. Good Lord, I see why English is so difficult to learn. It seems so natural for us, but I see why that's such a tough language. Anyways, the market's been weak so far this week. We put in a high near 29,000. And interestingly enough, whenever we got to these levels, we had the most trading activity all week. Like all week, these are the price levels that had the most transactions. So whether that's retail, whether that's institutional, no matter what it is, that's where most of the interest was this week in the market. It'd be nice to get a little bit of a retracement pop. But that's why we're going to put on a little bit more long delta here. So looking at the August 21st expiration, $5 wide, we might sell this for the same exact price we sold it for yesterday. So let's see if we can get a quick fill here. There we go. Instant fill, 178. So we're putting this back on 178. We initially sold this for 178, but at least we have a little bit of that, a little bit of those binary events out of the way now. So we'll sit patiently for this one, see how this one responds by next week. It is 28 days till expiration. So although it is a shorter time kind of directional move that we're looking for in the market, we have a little bit of extra time on the contracts just in case the market decides to start consolidating at these lows. Who's to say we even get a large, weekend gap? Maybe we consolidate around these levels a little bit more, maybe into the beginning of next week, into the Sunday futures open, maybe we come back and we clear out the lows that we put in today. Right now, for a little bit more context, I'm on the 30-minute chart. Now I'm going to go back into the 5-minute chart just to view the trading activity from today. And from today, I mean, the market's still looking pretty weak. Right now, most of the trading activity has occurred at around 28,500 today so far. So once again, we'll pay attention to these ranges. We'd love to see the market stay propped up a little bit longer here, but since we're selling the out of the money put spread, it's still giving us a little breathing room on that trade, even though we got a little bit of long deltas onto the upside. But this is what we're working with. So we sold that one, got that one through. We're not going to take this one off right away, although the market is still continuing to sell off. Let's see, we're down a few bucks on this trade so far. But that's what we're going to add to the portfolio. We'll hold that one over the weekend and into next week. I know there's still some more names. Like this was a difficult choice, right? During trades of the day, it's like, all right, you got a handful of trades that you like. You have a handful of trades that you could potentially put on, and which one is it going to be? I was really debating on getting a little bit of long delta on in this oil move right now. Would love to see oil drift down just a little bit more, but at the end of the day, we might still get on some more long delta here. I'm just very hesitant just because of how aggressive this move went up in oil to the upside. I mean, just continuous gaps, consecutive gaps to the upside on about 4 or 5 days in a row. So, I mean, just taking a quick look at the options chain, I don't know, I might get enticed as we look in this options chain. I might get enticed. But if we look at the 28 days left to expiration, if we wanted to get some long delta in here, we could look at it selling the 130s, maybe buying the 125s. That's going to give us about 220 worth of credit, right? 58% pop, 68% P50. We are a little close to the strikes here. Let's see if we were to go down a couple strikes. Let's see, we'd still collect about $1.90 on this spread right here, which isn't too bad. I think lately, whenever I was trading USO, I think I was just outright buying the calls and the puts. Like whenever I had a directional bias, I was just buying I think I would buy maybe like 5 points out of the money, but I would just buy the calls or buy the puts. But with all this volatility, I'd rather get on some defined risk, especially just in case we consolidate a little bit. I mean, oil has these insane runs in one direction, but it is definitely used to chopping around a little bit here too. So I don't want to get caught up in the euphoria. I don't want to get caught up in all the momentum and on all the hype. So with that being said, I'd rather get on something that can, benefit from some neutral movement in the underlying. But no, with that being said, this looks pretty attractive as well. Do I want to get this one on today? Do I want to give oil a little bit more time? And I mean, I really like the pullback. Hasn't lasted very long. Will we keep chugging to the upside? We'll see. But we're definitely going to keep an eye on it. But with the overall market not being able to hold its gains so far, it's looking like volatility is trading at about 820 right now. So I mean, so premiums are definitely decent, and I could imagine any other traders that have been trading for at least over a decade are probably like, these guys are so spoiled with volatility trading at 16, 17, 18, 19, 20. I come on here every day and Errol's just complaining about how low volatility is. And it's like, guys, I had to trade volatility at, 9, 10, 11, whatever it was. So I know we're a little bit spoiled given the volatility we've seen, but it would be really nice to see vol above 20. But this is interesting, right? Because we've seen a pretty decent sell-off in the market. Yesterday, we had a pretty aggressive sell-off at its lows. Today, we sold off and made newer lows, but volatility didn't make higher highs, which is interesting because it's like, what kind of move does the market need to make to the downside for volatility to really expand above 20? I feel like these moves that we've felt, on QQQ and NASDAQ over just this week alone felt pretty aggressive. We've seen the divergences between both of the indices, right? ES and NASDAQ. But if volatility is barely popping above 16 and we just made lower lows on the overall market, what kind of down move is the market going to need to price in for volatility to expand above 20 or 25? So that's something that crosses my mind. But again, I don't have any positions on VIX. I'm not going to try and predict when that pop is going to come. But it does make me question a little bit, especially just because we started to trade outside of this range that we started to trade inside of at the beginning of June. So, I mean, wow. If this isn't a testament sometimes for the June type of price action we can see or expect sometimes, I guess, because this is the beginning of June, right? We put in a high at the beginning of the month. What is today? Today is July 24th. It's near the end of the summer. This was pretty much the price action we've seen all summer. So, I mean, if you're somebody selling premium, if you're somebody getting on or keeping your portfolio delta neutral for the most part, but still give yourself a little bit of breathing room, this is probably a really solid month for you. But I'm just curious to see when things are going to get a little bit more directional, whether that be a downside move. Maybe we sell off a little bit lower. Again, I'm not trying to be the bear of bad news. But I mean, given the rally we've seen from the lows, a little bit more downside I don't think would be too aggressive. But again, with that being said, we'll see whenever we head back on course. Things have been pretty choppy for these markets. Maybe a lot of rotation this summer as well, especially considering the memory names like we have so many times already this month. Micron, SanDisk, Intel, all those guys. Another name I was taking a peek at was Dell. I believe Trump had said something about Dell. And you know what? I might get to the point where I start taking Trump's call-outs because this guy might be 10 for 10. Like, I can't believe he's actually like putting the tickers in some of the tweets or calling out some of the companies outright. But with that being said, I heard a little bit of bullish sentiment from Trump, whether that was a Trump tweet or a press conference, something along those lines. And at first I wanted to get a little bit of short delta on Dell, but when I hear something like that, I don't know if I want to fade the overall sentiment, especially when he's making comments off it. So we'll stay hands off for now, but this is another one that's just continuously consolidating at the top of its range. I mean, we gapped up from 317 to a high of 420. We pulled back a little bit inside that gap to 356, but since then we've steadily traded inside this little mini swing high that we created over here. So Dell's still going to be on the radar. Dell was from the overextended watch list that Gus and I had built with IBM, SanDisk, AMD, Intel, IBM, Apple, Nokia, BlackBerry, Riot, and a couple others. We just want to pay attention to these names that are very overextended. Riot looks a little bit more attractive to get some short delta on. Yesterday would have felt better. I know, hindsight, coulda, shoulda, woulda. But it's always nice to get short into strength. But with that being said, we'll keep an eye on these names over here. And then we got Intel reporting earnings. I want to see how that has been panning out for the rest of the day. It looks like we've continually just sold off. We tried to consolidate for pretty much the entire morning. Now we've made a lower low, but we really haven't moved anywhere. We're just slowly sliding to the downside. And then we got Micron selling off just a little bit here, a little bit of a gap down, but for the most part, holding most of its gains. It kind of looks just like Intel over here. And I'm wondering which one is going to be the leader of the pack, right? I know we would call those, sympathy plays whenever there's a head of the snake, like whenever we had all the EVs popping at one time. Usually Tesla is the head of that snake, and then we have sympathy plays like Neo or Rivian or kind of secondary.
Hey, how's it going? Can you hear me?
Secondary movements that we'll get. Yeah, what's going on? What's going on, Andrew? Can you hear me okay? Oh,
yeah, what's up?
What's going on, brother? Let me see if I can adjust this. I know we're just jumping into things. I was just talking about some stuff we got going on in the portfolio. I know Oracle's sliding a little bit more here. SpaceX has been so disappointing, Andrew, in terms of just volatility in both directions. It's been nice. Not a lot of volatility to the downside there. But no, with that being said, brother, always great to see you. Andrew Radar, everybody. I want to get just quick thoughts on the market, what you got going on, and how's the week been for you, brother?
Good. Really, to your point, some boringness this week for sure. It was quite quiet on the desk here. A lot of guys I trade with were super hands off this week. But there were still some opportunities in low floats, especially. Seems, when the market gets boring, a lot of tension, dispersion, right? Flows start to go to some small caps. And so we had some crazy runners this week. And today specifically, we were really watching that 387 breakdown on the market. For the rollover in Qs, just kind of an unwind of positioning. So I was really short this morning, but when we made that new low and we couldn't drop any more after consolidating under it, that was kind of the trigger for me to really cover and start to flip long in some hyperscalers. So really interesting. Just two-way trading has been the entire kind of backbone of the market over the last few weeks. And I don't think any of that's going to change unless if the narrative does.
Yeah, no, 100%. I think you made some really good points there. Definitely a lot of volatility. It's looking like the Qs were trying to get out of that range. I know we've seen a little bit of a rotation, but it's looking like the Qs might roll over a little bit here. I really wouldn't mind. I wouldn't mind seeing the Qs sell off a little bit, maybe SPY sell off, see an expansion in volatility. That'd be nice. Higher premiums on some of the options. That'd be great. But, we'll trade whatever the market gives us. I know you mentioned low floats. Any specific low floats you have top of mind? We can take a quick look.
There were some interesting ones. I typically don't short low floats because of the horror stories. But for example, one this week was SkyQ. So SKYQ. This one was an oil-related low float, and this week it was super interesting that you had oil running, and this was also kind of a sympathy trade. And low floats, a lot of people look at this and go, "Well, how does this make sense? Oil doesn't really benefit them going up in price. Like their balance sheet is horrible. Why are they going up?" Well, that's the beauty of low floats is they don't go up on anything most of the time. It's just purely emotion and positioning. And so one of the plays yesterday specifically was going long this over the highs as oil made its biggest gap up of the entire trend almost. So just low float plays like that, they're all scalps. They're nothing too super crazy. Another one was ZYBT. This was a China related low float, a few days ago that just went crazy. And so yeah, capturing kind of those plays has been, can I get long in this hot cycle? Low float cycles don't last more than a couple days even. They're hyper cyclical. So it's good to step on them long when you get a hot cycle. And right now, I'm guessing next week is going to be a slaughterhouse for a lot of these.
You know what? I feel like low floats don't get a lot of love, but I really like how you mentioned how the cycles, they're very cyclical and it happens very quickly on a faster time basis too. And it's really nice to see that play out because you can kind of see that human nature play out in a faster manner, I guess you could say.
Yeah.
I know right? You know what I mean? But I know we've seen
100%. Yeah. And like, especially like, even if you guys know Market Wizards and everyone else, a lot of Market Wizards and phenomenal traders start with low floats, because when you try to train your brain, which is a muscle, you want a lot of frequency, and frequency and of opportunity doesn't always come in large caps. I mean, even recently, right? It's been a boring market. How do you get reps? How do you keep your mind fresh? How do you develop your skills faster? It's in a lot of low floats, even if it is super challenging and competitive. So low floats are a great opportunity to build that muscle memory and really get a lot of reps, because every week you're getting 3 to 5 opportunities minimum, maybe even each day. And that takes time. It takes, of course, risk tolerance to understanding that your variance is much higher in low floats. But of course, when you get better, the end path is always large caps, options, and scalability, right? There's a wall to low floats, and that is liquidity.
100%. And I mean, you did mention that low float, right? So always a limited amount of supply available, but it's always nice to provide that extra volatility. But I got to ask you, do you kind of prefer the front side of these moves, the back side of these moves? How do you kind of perceive some of these low floats before we move on there? I know the front side can be a little bit scary to get short, maybe waiting for that top to be put in before you do anything else. But, how do you kind of approach these ones?
Yeah, so my playbook is really just looking for in-theme low float longs. There will be times, for example, that Sky Q, which is related to oil. And, when it's in theme, for example, if you guys remember BIRD a while ago, this was a stock that had converted. It was a shoe company that converted to an AI data center. And that story is so crazy, so astronomically insane, that a shoe company would sell their entire inventory and go to AI data center. And at the height of the data center AI build out hype, those are the kind of trades that I look to scale up in, because those are the really, really in play ones. And so I typically like the front side long with those in theme. And then backside, what I'll typically look for is some type of dilution play. You guys ultimately know that low float companies are horrible fundamentally, and for them to stay on the markets and continue to raise money, which is why they're still listed, they need to raise capital. And how do they do it? Oftentimes, whether better or worse, talk to your local regulators, but they pump it up with a fake PR and they do some sort of dilution event to raise capital. And so those are very opportunistic trades to be able to know in time and have the technology to capture in those type of dilution events, which are like breaking news.
No, it's a really good point that you make there. And just kind of how those little details add to the cyclical nature, that we see in a lot of these low floats. But no, with that being said, I mean, what are your thoughts on the overall oil market? Is it kind of just watching those sympathy plays? I know oil is probably one of the most resilient type of products that you can trade, right? I mean, we've seen one of the most insane rallies earlier this year on oil. We had a pretty aggressive pullback, right? We gave back about over 50% of its gains to the upside. We don't even consolidate at the lows, and then now we're trading just shy of another high on oil. So, I mean, how do you grasp this oil market right now? What are your overall thoughts?
Yeah, it's super interesting. I think, as far as the commodities point, a lot of people are looking at oil, is this going to keep going bid? I think there's, we talked about it earlier, but I think there was always going to be a floor to oil because you have, Trump stalling this out to midterm elections. And we saw over and over again that a deal really wasn't on the table for both sides to come clean. And, it's kind of funny that a no deal stall is as close as a deal that we probably will get. And that's just kind of what the market has accepted. But as far as moving forward, right, it's like, it's a toss-up. I don't know if the puck is in play necessarily, as Lance B says, in oil right now. If there was some sort of crazy oil overnight event, then I think so. But right now, I think it's just rebidding what was squeezing shorts out. I mean, there was historic levels of shorts on oil just a few weeks ago. And, I think you're seeing some of that unwind as long as this conflict continues to ring out.
Yeah, 100%. And, I wasn't short oil, but I mean, I don't blame them. But you can definitely see the psychology play out and, see that increase in short interest. I mean, again, this has to catch a lot of traders off sides, right? I mean, we rally all the way to the highs and we give back more than half of its gains. And then we're right back to all-time highs within just less than 2 weeks. So insane markets here, a lot of volatility going on. But what do you have top of mind going into the next week? What's kind of been on your plate today or, throughout the duration of this week? I know you mentioned some of the small caps. Is there anything else that's been top of mind for you?
Yeah, really looking at the daily levels on a lot of these names. I mean, picks and shovel names we saw this week, just reiterating over and over again that good news the market does not like yet. We saw Google, kind of crush earnings, and all of a sudden they gapped down. We saw them raise guidance, and yet we still saw picks and shovel names like SNDK and MU gap down and stall out and not really rebid all that aggressively. Yeah, sure, it was off the low, but how much of that was positioning versus actually, from the news? But over and over again, even Intel, if you look at INTC, just over and over again, you're seeing big beats, big raises, but I think the expectations into this earnings was higher than I think even 2020, maybe the highest since 2021. And so this is a time where you're seeing these, big expectations already priced in. We're probably on the backside of a AI cycle, and that doesn't mean short. It just means we're entering a more mature state to where you need to be looking out for different themes. A while ago we saw new deals with OpenAI. Everything OpenAI was in February, January. Like if you saw an OpenAI headline, you buy the stock and it goes up 20 points in 2 minutes. But now that's not the case, right? And so it's this transitioning period where you're seeing a more mature cycle. Valuations are compressing, and because they're compressing, you need to be more selective in finding what is the next theme. Is it going to be something AI related? Probably. It might be, this new cost effective model is bringing in way more users. Okay, then maybe it's cost effective models moving forward. You need to keep a key eye out for that, because those little things are what are repeat catalysts and other companies are going to try to replicate.
100%. And I know you've really been touching on SanDisk, INCC, Micron. Maybe we're seeing a little bit of a rotation there. Sometimes I feel the overall sentiment whenever we quote unquote put the top, I'm not saying we put the top in, but it does feel like we're a little bit more on the backside of a lot of these moves, just in overall sentiment. But what do you say about the given opportunity? Do you still see a lot of opportunity in these names, even though we're not putting in continuous highs on a consistent basis like we were seeing at the beginning of this year? Do you still view that as a trader as a lot of opportunity still in play with these names?
Absolutely. They are hands down, both long and short, often most days, my number one charts to have up, because they are the most in play as far as positioning, as far as meaning to the market. Everyone cares about picks and shovels right now, especially if you look back to the Iran conflict when we were just starting off. These were their own economy. CapEx spend has created its own economy, and that is the downstream beneficiaries. And those are going to be SanDisk, MU, all these guys. So Wall Street is most caring about these names right now. And so both long and short, most days, these are going to have the highest beta, highest return, cleanest charts. Is that always going to be the case? No. But, other than breaking news and things like that, these are the day-to-day movers that you can really rely on.
No, I'm looking forward to it. I know just a few days ago, I had gotten a little bit of long delta in Micron. I sold an out-of-the-money put spread there. Once we seen a little bit of a pop to the upside, it was one of those ones I just wasn't trying to overstay the welcome. It just seemed like the sentiment shifted a little bit. Maybe we put in a new low, but catching a little bit of a pop on the backside, I'll take it, won't overstay the welcome. And I guess we'll see what we get into the end of this summertime, I guess you could say. It's kind of crazy just looking at the Qs and things like that. I mean, if you look at where we started at the beginning of this year, I mean, a lot of the consolidation started beginning of June. We kind of just traded within that range all summer so far as well.
Sorry to interrupt, but especially like positioning this summer is going to be huge. I mean, it's no coincidence that you're seeing such two-way trading. And shout out to the GOAT, Jem Carson, of course, who's been on your guys' show a few times. It is the summer of flows, right? Summertime, even if you look at last summer, September, just massive position-based trading and taking advantage of the breaking news, the washouts, and looking at reversals. And it's really difficult. Not a lot of traders actually a lot of traders, both professionally and on a retail level, do worse during this segment because you can't just buy a high anymore and it works. You need to be looking at buying weakness and buying or selling strength, which feels emotionally just extremely wrong. Like, we're expecting, if I buy a call, it better be on a strong stock. But in reality, you need to be buying dips on huge washouts, and it's a very difficult environment for sure.
No, 100%. And to the point that you made, offering that two-way trade, it's exciting. We got a lot of names moving, a lot more volatility into the market. And even if some of these names top out, I'm sure there's still going to be a lot of opportunity on the backside of some of these moves. So we'll keep an eye on them. We are coming to an end here. Anything else top of mind that you want to leave us here before we head into the last hours of trading the market?
No, just moving forward, definitely be watching a lot of the biggest levels on Qs. Of course, we're coming down to weekly lows. Does that mean it happens today and, we rebid and therefore it's not going to go down? No, you can entirely expect maybe over the weekend as well. If we see further rollovers and weakness and Trump continues to let this Iran conflict go, raises the probability of hikes, and tech's going to keep unwinding. So be open to anything, even when there's no news. Just let the market tell you what to do, especially like this morning. If you just wake up, don't even have a game plan. Just say, hey, let the market tell me what to do. And you see the SPYs rebidding or not being able to rebid over 387, then it's just short until it looks like a good long. So that's kind of the game plan each morning I've been rolling with.
I love it. We'll keep our minds open. I know we got a few hours left to market open here. We'll see if we get a complete reversal. We kind of been trading within a range on NASDAQ today so far. And lastly, before we go, I got to ask you, what's the first market that you look at when you open it up? Is it IWM? Is it SPY? Is it QQQ? What's your go-to? It's all personal. It's all everybody's personal.
It's always Qs, man. It's always Qs.
There we go.
Tech. I'm going to look back and I'm not going to regret not trading McDonald's in the morning. So it's always Qs, man.
That's funny. Amazing. Andrew, we'll appreciate your time as always, brother. We'll see you here soon again. Everybody else, thanks for taking the time to hang out. Be sure to stay tuned for more amazing content coming on next. We'll catch you guys next time. Peace.
Ciao, guys.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see the star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We're back. You're watching Tasty Live. This is Futures Power Half Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's your co-host, Ilya Spivak. Ilya, we got a bit more volume in this market today. Things are kind of stabilizing a little bit. Oil down, stocks moderately up, yields lower, which is ultimately good. How goes this Friday?
I'm starting to develop something of a theory about what these markets are up to here. It's not that novel from my thinking around what this AI thing is doing, but I was really interested to see how the markets reacted to, in particular, Alphabet's response. And as I've been kind of digging around, the thing that stands out to me is what's going on, not just with bonds and not just with rates, but with real rates. Take a look at the TIP ETF here, because
Laura, I think, can you go to the chart?
I think we might be looking at something here that maybe we haven't touched on. I wrote a big blog on it last night in the dead of night because the ideas were just coming fast and hard. Take a look. This basically tells you that real interest rates are surging. Now, why are interest rates, real interest rates now, why are they surging? Because that really reframes what's happening in the bonds. We might have said to ourselves, well, hold on. Surely this is Iran war and blah, 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 and inflation risk. Yeah, break-even rates didn't rally with oil this time. They're still down. In fact, they're down at levels lower than they were in January. Or certainly they're flirting with that. And so you go, wait a minute. So there is no inflation scare. Why are yields up? And you look at real rates here, and they are at the highest since early April last year when the president's tariff rollout made for a bond market tantrum. That's not insignificant. Now, where this move starts is really interesting. Just take a look at where the top in that most recent move is. And what you find is that is exactly the spot where first you start the sort of onset of the Iran war. That's that first top. Then you get the first ceasefire. That's the bottom in the bonds and the bottom in stocks. And then you get a secondary top, and real rates then start surging and tips start selling off. And that's exactly the spot where stocks and bonds diverge. Stocks go off on their hyperscaler chip stock binge. Bonds keep going down. Gold keeps going down. Dollar keeps going up. Maybe we're talking about the wrong inflation here. Maybe what happened there and that divergence isn't that bonds and the dollar and everything else went off to go trade the war and stocks were coddled in the warm embrace of hyperscalers. Maybe it's actually all the hyperscalers move. Because when companies tell you they are going to rain $750 billion on the economy at a time when the business investment sector is already red hot, maybe what's going on is the markets go, you know what, I'm going to need some inflation compensation for all this. This is crazy. All this money is going to be astronomically hot in the economy. And what we're seeing then is real rates rise since that point, which would be exactly the ingredients for how the AI boom would start to crush growth. And indeed, just look at the Atlanta Fed GDP Now model, which is sinking like a rock.
It certainly has come in. It's still 1.7% right now. Last time I checked.
Yes. Having
3.
gotten there from about 3.5, 3.7 over the course of about 2 months. And really the downside escalation comes with the economic data that's come out over the course of July. We were still kind of in the 3s zone before July. The economic data just over the past month has really done the lion's share of damage.
Yeah. I'm looking at the line chart right now. It bottoms at 1.1% in the first week of July. It's back to 1.7. So,
yeah.
I mean, depending upon how your time scale is, marginally the data's been getting a little bit better in the past few weeks, but it's still much worse than it was back in May and June.
And below where we were for the growth rate in the first quarter.
Right. So, look, where this all shakes out, the PMI data that was released today, Ilya, which I know is a focus point of yours, was pretty a little bit better, was pretty good across the board from the UK, from the Eurozone. The markets are getting a little bit of relief. I mean, I saw them getting a little bit of relief around that this morning, that we're not going into
the
weaker
service
growth.
sectors came back pretty much across the board, and it seemed like consumers really got some relief from falling oil prices in this data. But as we know, oil prices are back up. So I'm a little bit, this data is a bit suspect now.
Sure. Well, let's start with oil here today. There's been a lot of stock chatter, but oil's down 3.5%, $89 a barrel in the CL U6 contract right now, Ilya. One thing has not changed here in a few weeks. It's been oil's desire to keep closing above its 1 week average, that light blue line in the chart. You can see it hugging it pretty closely here since the war resumed back at the start of July. Is this a dip buying opportunity? First and foremost, 39.8 IVR, so volatility's come in. But if this market's been following its 1 week, do you use today's pullback as an opportunity to get long deltas?
I'm actually a little bit suspect here. Look at the 4-hour chart, because that's what I've been kind of staring at all morning. Is that a break of former resistance turn support? Just the very near term kind of stair step higher? Did we just cross a bound here? That's sort of what I'm trying to figure out. I'm not convinced that we have yet. I think we might yet be holding. But if we were to, let's say, slip under 88.5 here, maybe, something like that, and end up in the low 88s, I might want to take some profits. I think we might still be holding. I think the line you've put there makes sense, but I'm not looking to add anything right at this very moment. I think we're going into the weekend. Who knows what Axios is going to publish?
Wouldn't the pain trade be for them to announce wouldn't the pain trade
Listen here. I'm still long. Don't you do nothing now.
Yeah, but exactly. Wouldn't the pain trade be with oil up near 90, stocks having come off? Wouldn't the pain trade be to announce another ceasefire over the weekend?
Yes. Yes, it would be. Yes, it would be. And so I'm not adding anything else. I'm watching this 4-hour chart closely. We tried to get through, it looks like, what maybe was a level of significance near term. It looks like we didn't make it yet. Looks like we're holding. Let's see. I'm generally still constructive on oil, but you know what? If the name of the game is buy low, sell high, might need to start thinking about the second part of that equation.
Yeah, I mean, I'm sitting at 24 days to expiration right now in some trades here. I have enough oil exposure at the moment at 24, 55, 116, and even some stuff out in MCL, which is a little bit longer dated at 116, Ilya. So we're just going to let that simmer and sit out there for a little while. But in terms of the CL positions, 24 days to expiration does mean at the start of next week, going to be looking at, where are you? Where did you go? We're in that expiry. We're going to be looking at roll period, basically at the start of the week.
Yeah.
So this is a good consideration, right? What are the odds, given the strikes that I'm looking at here? 71, 63. What are the odds that over the weekend some news comes out that brings us below our short strikes? Do you think that we get to $71 with even the most optimistic of news come Sunday? Or has this market been boy who cried wolf into the war is over, Iran is begging for a deal 15 too many times by now?
I think you're onto something here. I think the boy has cried wolf too many times.
Okay, so we're not going to take an elevator down then, most likely.
I don't think so. I mean, maybe, sure, but it doesn't seem like that's where we're headed.
Probably get to $80.
Could be.
10% move in one day? 20% move in one day? I don't know. I don't think so, especially for the 63-61.
You got to start moving molecules through the strait. I think the lesson in all of this is that never really picked up. We got a little bit of an uptick in traffic, but we never really got off the ground.
Yeah, I mean, like 30 to 50 ships a day-ish when we were...
For like a little bit, though.
Right.
And, of course, the question then becomes, who in their right mind is going to send an empty VLCC into the Gulf?
I suppose if Trump is saying that he's going to backstop all of it...
with our money? Is that what's going on?
No, with the frozen Iranian funds.
How much frozen Iranian funds does he have? I saw that headline and was wondering, like, okay, so the Europeans are going to use frozen Russian money to fund Ukraine. We're going to use frozen Iranian money to fund oil. Yeah, okay, but money runs out.
I just pulled the 30-day traffic for the Hormuz here. I'm just going to get this up on the screen real quick. It's a rolling 30-day average, which is updated every 30 minutes, Ilya. It's 48 hours ago, given the time delay here. So we are at 11 ships crossing the Strait of Hormuz when typically it was in years. This is going back to 2021. We're looking at like 60 to 70 30-day moving average.
Yeah.
So that little bit of recovery we had, it's already starting to tilt back over, in part because the traffic is dying down again. And then this doesn't even account the fact that we have the Bab el-Mandab, which is now the Houthis targeting, is still in the equation. So I guess my point is, Ilya, knowing what we know about the situation on the ground, if this was a month ago, and it's like, okay, we're at 24 DTE, this was 2 months ago. This is now the middle of May. We're at 24 DTE. The war seems to be winding down. Do we want to wait until Monday with our short put spreads? I would have probably said no.
Different
here today,
conversation, yeah.
Here today, it's a different conversation.
Different conversation.
Now, what would turn the corner? I think you and I are looking at the same exact chart here. $88, we'll call it. I mean, this is a 4-hour time frame. I like that last swing high. It's been a sequential. That's a monthly chart. We don't want to go there. When you go down to the hourly, though, you can see how it's been like a very sequential stair-stepping up or down, as it were, and the market's trying to catch itself on one of those stairs. If you get below 88, 88.50 and change, maybe reconsider, particularly short-dated longs, right? If we get down below 88, I might take this stuff off going into the weekend, but if not, why not? I'm not going to get caught flat-footed in a flush, is the point. So 40 IVR, we know where it stands. Volatility has come in a whole bunch today with prices declining. Ilya, I put this in the morning.
IMF 7-day average, by the way, on tonnage transiting Hormuz back to the lowest in a month, which was basically a hair off the total shutdown levels.
Yes. So in terms of that curve today, just keeping an eye on the CL U6 Z6 spread here, you could see that the backwardation is coming out of the market a little bit, 3.5% down in the front month, 1% down in the Z6 contract there. So, I mean, there's some positive. I point this out in the morning note here, Ilya. Trump's been talking about he has a big surprise for Iran, the biggest bombing that they've ever seen.
That's what you want to hear.
But it reminded me, my first instinct was to go back to what he said at the end of March about how a whole civilization was going to die tonight. And that was seen as an egregious comment, and yet it was what exactly preceded the ceasefire. So do you think that maybe the market, there's a part of the market today that sees Trump's escalating aggressive rhetoric as merely him having crossed a threshold to where it's kind of like contrapositive signaling?
Yeah.
That he's ready for a deal?
Yeah.
Because this isn't about oil getting any more traffic today. There's no more ships moving.
No. I think one of the critical kind of elements in the president's way of communicating, just generally, is he seems to use the tried and true, I know you are, but what am I, playground defense, but preemptively. Which is really a very interesting way of communicating, where he basically says, okay, if I accuse people of things that I myself have done or will do, then I build out, then when they protest, I build out for myself, I know you are, but what am I, having gone first. And it's a very interesting approach. It's really served him in a lot of ways. Just think about fake news as a thing, as a conversation piece. And so when I look at what he's saying here, you're right. It has this essence of, if I sound really, 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 really aggressive, maybe I can avoid actually being really, really, really aggressive. And
the opposite of Teddy Roosevelt.
Talk my way out of it. Well, I mean, Teddy Roosevelt said, "Talk softly and carry a big stick." This would be bizarro. Teddy Roosevelt.
This would be the exact opposite of Teddy Roosevelt.
Yeah, this would be the bizarro Teddy Roosevelt. Yeah, and so I think you look at this and you go, yeah, okay, the president doesn't want this war. The president's been trying to off-ramp this war for a long time. This is why Iran won't off-ramp it. They realize they have the whip hand.
They do, and that's why we're getting another headline here. The European Union the administration expects to impose a substantial tariff on the European Union as soon as possible, directly from President Trump.
This is what we need. Don't see again. I know you are, but what am I? Preemptively.
Yeah, preemptively. Costs are famously low for American consumers right now. So why not hit them with another tax? Why not hit them with another tax, Ilya? Let's go back to the stock market.
Real rates are surging as we were saying at the same time. So the cost of borrowing, net inflation is surging. Prices are up. I know. Let's tax Americans on consumption. That's going to help.
Yes, the beatings will continue until morale improves, which it really isn't today for volatility. 1905 in VXQ. We hop over to the U where it's sitting at 1989. So the curve's pretty flat. It was about 70 cents wide yesterday. It's 80 cents wider today. So a little bit more contango. I don't know if there's anything to write home about there. Ilya, the market, though, I think stability is the name of the game today. We get back to 74.70 here in ES. We're trying to get back to, former swing levels. You probably want to see north of 74.90, 7,500 if we're really going to feel comfortable. The NASDAQ looks worse. It's been probing down below 28,500 here with deeper and deeper tests at this point in time. So, I'm going into next week. I have some shorts that are sitting here in the NASDAQ that are hanging on just by the skin of their teeth, which famously teeth don't have skin. So as we know, that's a really ridiculous saying, and yet that's where we find ourselves. I may have to jettison a bunch of this stuff come Monday, even later today, depending upon how we close. I just don't want to, even if it's in something smaller like M&Q or triple Qs, I just don't want to deal with a market that's moving below my short strikes. And while I still have all this time on my side, I'll just take the smaller loss and just move on.
I mean, you look at this and you go, okay, so look at how soggy NQ is here, and just take a look at a daily chart, because I think it really tells the story. Even the little baby former support turned resistance here from 4 days ago isn't holding. Like we can't even get back over what was we're talking about, maybe that's a morning star. Can't get back over the morning star's bottom here.
No,
that's very telling.
That low comes in at 28,408. We're just trying to skate above it, and it's not. Little things like that, Elliot. There's messages in the price action right now. Yeah. And it's not reassuring. And I'd like to look around and say something like RSP is giving you a little bit of hope. And yeah, it's up 0.8%, and maybe QQEW, it's up by 0.07% here. There's a lot of technical damage done right now. And this is a pretty crummy time of the year that we're heading into, as it were.
NASDAQ has erased all of its gains since May.
Yeah, well, it's, you know,
I mean, this is somebody earlier today was commenting on my LinkedIn post saying the stock market is not scrambling. 3 months of price action are gone. Just FYI, because just because they're gone slowly doesn't mean they're not gone.
If there was a period of time in which bulls had a chance to make this thing run a little bit more, it probably was July. This has historically been the time of the year coming up around the corner when markets like to, people go on vacation in August and the junior traders run the desks, so people get a little cranky and crazy because they don't know what they're doing. So August, September, October, Ilya. August, last 10 years. Volatility has expanded 60% of the time, up by 3.7% on average. So, you'd be talking something in the neighborhood of what? Not that we do technical analysis in the VIX or anything like that, but, that could mean the VIX is getting up towards, we'll call it like another 80-cent bounce from here. So be going towards 19. But then September, we've seen an average gain of 7.76% in the VIX over the past 10 years. In October, 13.74% in the VIX over the past 10 years, 70% of the time. Volatility just tends to go up in this window that we're approaching, is the point. I don't know if you want to take the seasonality so serious for something like the VIX itself, but over in ES, which is something that we tend to take a little bit more seriously, yeah, August gains cool down from 3.29 in July to 0.84, and then negative in September, minus 1.16%. So this streak of 4 consecutive months of gains north of 1.5% has come to an end, and we just get into more difficult waters right now. Now, I made the mistake last August of thinking that the seasonality was going to hold, so I don't know if you recall, but I certainly remember every single trade I do, and I don't blame you if you don't remember every single trade that I do, Ilya. But end of July last year...
The one that I do, and I would say a great many of yours.
Well, last July I was really bulled up. The market ran. Going into August, I capitulated.
I remember arguing about it.
I capitulated in August. We got about 10, 11 days into August, and I go, this thing is just not respecting the seasonality. I got to flip and get back long. Yeah. And it ultimately proved to be the right thing to do.
That's right.
At what point do you, if you're a bear, do you look at the numbers and go, volatility is not going up. I have vacation before kids go back to school. I'm going to toss in the towel and see you in September. And I mean that as a bull as well, because a lot of this is calendar.
That's not a thing I do. I stay glued to the quotes on my phone, and I stay trading. It helps that I don't have to trade short term. I don't care what it does on a given day. My average winner I sit on for 4 or 5 weeks. My average loser gets cut within about 2 weeks. A vacation is not going to derail anything.
Ilya, I'm going
to stay engaged here.
I'm looking at pricing because I did see some things come in. If I wanted to buy a dip, where could I go out? I'm looking at the end of months. I'm looking at the NASDAQ here. Triple Q may be the better place for this just because of the liquidity in the NASDAQ futures. Yeah. But if we went to the end of, let's just do August 21st because that's the round number. The expected move is $37, so that's going to bring us down to about 651. And you can see here on the platform this brown line in the middle of the strikes. That's basically the expected move. Are you getting compensated for let's just go for a dollar wide right out there? Not really.
No.
Right? A dollar wide strike, again, the tasty mechanics, it's worth the risk when you're looking at around a third of the width of the strike. And right now it's only 18%.
I mean, you're 4 times off in the wrong direction. I mean, you've got a 4-to-1 adverse risk reward here. The market is pointedly telling you, hey, don't do that.
You're just not being compensated for it properly right now. So that is one of the takers. Friday is a day, I know you and I both have had this rule because we've both traded together for a long time. We don't really like deploying new capital
enough times, so that's for sure.
And putting new positions on a Friday.
Yeah.
If I was a dip buyer in this market today, I actually don't see the dip worth buying just yet, even if things are stabilizing. Because you're not being compensated for it properly on the right time horizons, knowing that we're going into a window where, Ilya, 28 days to expiration, you're telling me that I want to be short puts with that kind of compensation into a window where vol typically expands?
No, thank you.
No, thank you. Nice try. Ilya, we're done here in a minute. I guess the last thing we should just take a quick peek on. Rates are down a little bit today, but that's not really stopping the dollar here. You and I can talk about this a little bit more. I'm long the dollar a bunch of different ways right now, but
I'm short
but still. The fact that this keeps going up, though, we should discuss more later on because it's going up and gold is still able to go up today, which is a really nice development. But hey, we're taking a brief break here on Tasty Live. More afternoon programming is coming up next. Ilya, we've got a great run of show here. We have TP. We have, of course, Dr. Jim, and then Tim Knight before finally last call where you and I return it. Then we close it out for the weekend. Ilya, there's about 2 hours left in this trading day, so we're going to take a 2-minute break. You're watching Tasty Live.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Welcome back, everybody. It's 1 p.m. on Friday afternoon. It's Flame Shirt Friday. Get my popular shirt on today. And let's get trading here. Well, actually, let's check the market really quickly. S&P's futures are at 25, up 2550, 7470. SPX is the same thing right now. SPX up 27. You know, while we're at it, and while we still have 2 hours to go in the market, and by the way, I'm able to see now comments on the YouTube chat. So if you want to, if you have a stock you want me to look at, bull, bear, either way, just post it up there. If you have any questions that I might be able to answer quickly here, go ahead and ask them there. You know, just to play, let's go into the options and SPX options. You know, it's not like I have a huge hunch either way going into the close here. They're selling off a little bit at one bit. Again, we're not at the close yet. We still have a couple hours to go, but they're a little bit weaker. Maybe there's some selling into the close. Maybe people are starting to short it. Maybe they get caught, you know, as we go towards 3 o'clock. If they have to buy them back. What do you think about a broken wing butterfly on the downside? So let's try the 74.25 puts, buy those, sell 2 of the 20s. And the way you do it is, so I click on the 74.25, click on the 74.20s, increase the quantity to 2, get off of that, and then buy just for the sake of argument, the 74.15. So this is a 5-point butterfly. What I then do is, so it's 30-cent debit. Drag this down to the 10s, 40-cent credit. You know what? Let's just try. So this is going to have an embedded 5-point vertical short put spread. Yeah, all right. So should you? Okay, yeah, let's fire away. Let's try this for a 30-cent credit. Let's see if we get it. If we do, great. If not, and this is the sort of thing, am I going to be able to buy that 410, 415 put spread back for less than 30 cents? Probably not. I'm probably going to have to hold this all the way through till 3 o'clock. But I just like to play. And if it does start to sell off a little bit, maybe miracles can happen. And if we settle down below 74.25, it'll be a nice little winner for the day. So this has been a pretty busy trading day for me. This rally has turned a lot of losing trades into winners. I was able to take off a losing now trade, NOW trade. I took off for a profit, took that off at a 50% profit, took my IBM call spread off for 40-cent profit. Took off just a bunch of stuff that just worked out. So there's a lot of trading activity in around a lot of different symbols. Let's go into the watch list. Here are some of the things that I've been looking at: Rocket Lab, Lulu, Dow, Nvidia, Boeing, AXP, PFE. Let's take a look at Dow. Why Dow? Well, I was looking at the drug stocks, PFE, Pfizer, and Dow Chemical. I don't know, is Dow a pharmaceutical stock? I don't know. But it's Dow, they're chemicals and all that jazz. I was thinking they had a pretty big sell-off today. It's down 3.3%. They popped up in my list of stocks with larger standard deviation price changes. So if we look at, let's just go to a chart. In Dow, here's Dow. Here's a tick chart on the right-hand side, Dow. Chart on the left-hand side here. Stock had a nice little rally. Now it's down. Maybe, let's check the liquidity on the options. 28 days. Not bad. Could this be a potential, what do they call the wheel strategy? Maybe 4.5% dividend. That's not bad. Let's check the skew. 29.86. So right in between 29.5 and 30. Let's go down a point, up a point. So 28.5 puts at 90. 31 calls at 113. So the skew is pointed to the upside. What if we sold these 28 puts? Let's check the metrics on this thing. $417 of buying power requirement, not bad, manageable number. The 83% probability of making half its max profits, about $31 before expiration. That would generate a decent return on capital. Theta is 219, and the number I like to look at is 219 divided by 417 is equal to 0.005, so that's 0.5% daily return on capital. Let's fire away. Let's see if I get 68 cents for this. Again, do not hit bids or lift offers in a stock like this. There's some decent open interest around it. And one of the things to keep in mind is that just because there's not a lot of open interest here at the 28s, there's a lot of open interest at the 27.5s. That can indicate decent levels of liquidity and trading activity in all the options. If these were zero up and down the board, I'd be a little bit more nervous. But let's try this for 68. Submit. Working. Okay, fine. We'll let them chew on that for a while. Another stock that I'm looking at is Lululemon. And again, what do they make? Yoga pants or whatever. They're up today. They pulled themselves up off the bottom. Don't know what the story is. don't really care, but it's Lululemon has been having a tough time. Apparently people don't like its spandex or whatever the heck they sell. I don't even know. I guess they have stores. I think I remember being in a mall at one point seeing a Lululemon store. I don't go to many malls, so I don't know. Or maybe it's all online. I don't really care. Let's check the SKU because it bounced up today. Again, that's why it popped up on my radar. Earnings coming up on September 3rd. Decent IV rank. Decent volatility here. It's 47%. Is relatively high. And if you can look at the chart of Lululemon, the overall volatility has been pretty stable. This almost certainly was an earnings event. Let's go in here, 28 days. What's the SKU looking at? 114.53, right in between, very easily, one in between 14 to 15. So down to up to, SKUs pointed to the upside. Not a huge amount of liquidity in these options. Decent. Kind of like Dow. Let's check at some of the other expirations. Not bad. I mean, I don't love this. Isn't bad. Some of the other ones aren't great. Let's go. I'm not going to find it 7 days. Well, actually, 7 days are pretty good. This might be the place to look, especially with 2 points in between, or the single point strikes. Let's see what we get for the 11.9. If you're bullish on this, if you're bullish on Lululemon. Yeah. So the only reason I'm choosing 7 days is that the liquidity is better here. Even the zero DTEs, not worried about the zero DTE. How are we looking on the SPX? Working 27. I missed it. They're not giving. Let's check the SPX. So this is what so they're up a little bit from where I entered the order, and they're just sucking the premium out of that far out of the money put spread. Let's go back into Lulu. Might have missed our SPX. Lululemon, again, SKUs pointed to the upside. Okay, fine. Volatility is reasonably high. Getting a 64-cent credit on this trade. 63% probability of making half the max profit. 64, so about $32 before expiration. So we have a week to go. So this could happen fairly quickly, maybe, if we're lucky, because verticals don't always generate a lot of profits quickly. Versus $136 of buying power effect. By the way, if I just did a naked short option in here, the margin requirement is $2,000. I don't love that. So let's just do this. Defined risk trade, routed at 64 cents. See if we get filled. Working watch list. Let's go next. How about Boeing? BA. What I saw, BA had a nice little rally today. That popped up as one of the with something with a relatively high standard deviation move chart. Let's take a look at a chart quickly here. Again, bouncing off a low. Don't have much of an opinion of Boeing, but let's check the SKU. 211.72, so right in between 210 and 212.5. Let's go down $5, up $5. Yeah, so the 205 puts are 585. 217 calls are 690. So the SKU again pointed to the upside. I got to tell you, folks, this is the year of upside SKU. This is the year of upside SKU. Oh, we'll talk about. We could talk about. I'll talk about Qs maybe. Maybe sell call spread in Qs. Oh, SpaceX, yeah. Here's what I did in SpaceX. So SpaceX, I put on a long put vertical yesterday afternoon. Took it off for about a 50% profit on that. I bought a 2-point vertical for $1. Took it off at $1.50. That's what I did. So I was short SpaceX, just a hunch. That's it. We can go in again maybe and try it again. So Boeing, I know they make a lot of munitions and stuff. They make airplanes, things that fly, things that zoom through the air. So are they going to be used up, or are they going to have some big orders as we start continuing to, flatten Iran? Maybe Maybe that's why it's rallying today. Of course, the broader market's up, and that always helps a stock like Boeing. So liquidity is pretty decent in these options, considering it's a $210 stock. If I can get, so again, here's the basic math. 2.5 divided by 3 is about, or 25 divided by 3 is about 8, a little over 8, 8.333. So if I can collect about a third of the width of the strikes, which in this case is about 83 cents, that's the metric that I look at. So if I'm, I try to get that number. If I went a little further out of the money, yeah, actually, I could try this. I could try the 200, 205. I don't think I'm going to get 87 for it. If I pull it up, you'll see what happens, $1.10. So let's do, let's try it. Let's go for 85. No, let's give him a penny. Let's squeeze him a little bit. I don't think I'm going to get it. I don't think I'm going to get that. We'll see. We'll see. Let's go in. There was a question about the SPX Iron Condors. What I do, let's go into the 3-day. What I do is I generally go out to the $2 option and I buy something $25 out. So I'll buy the 60s. So I'll say if I sell the 72.85s and I'll buy the 72.60s, it's 25 points on the put side, and then I'll find another $2 option. And I don't trade these through the weekend. Let's fudge it a little bit, do the 7,500, 75.25. So I'll set an Iron Condor up like this with 0 DTEs, and then I'll do size. I might do 20, 25, 30 of them, depending on what volatility is. And I can execute those trades. And I'll look to buy if I get filled. 240 is a little cheap. It's just the wackiness of a Friday afternoon going into the weekend and all that with 3-day options. I try to get a little bit higher credit than that, maybe around 260, 270, 280 if I can. Volatility was a little bit higher over the past couple of days with the market selling off, so I was able to do that. Volatility lower. I have to be more flexible with the credit. But I look for I generally base it around $2 options and give myself plenty of room, and I'll take it off at 50%. So if I get filled at 240, for example, I would put an immediate order to buy this Iron Condor back for even 0 DTEs. That's what I'm talking about, 0 DTE SPX options. Buy it back for $1.20, and I just let it go. I don't manage it. I don't do anything with it. One of the reasons I like to match up the prices of the options is that's the market's way of telling me what they think the expected range, what the expected move of that SPX is going to be. Okay, I don't look at implied volatility. I don't even look at the probability numbers. I don't look at deltas. I don't really care. It's 0 DTEs. The price is what informs me. So that's why I try to match up a $2 put with a $2 call. The market is telling me that's how much the SPX might move. So that's how I set it up. And I do size in those things. And it's, I don't do them on here, partly because at 1 o'clock in the afternoon, there's no premium left in those 0 DTEs. And, it's a big product. It can get expensive. And I like to keep this a little bit more manageable. So let's go back to trading here. Because I could talk all day long about volatility and SPX and all that jazz. You don't want to hear that. Let's go into NVIDIA. NVDA. NVIDIA's up a little bit today. Has been pretty flat. NVIDIA, for being the bellwether stock for AI, I guess it is, or chips or whatever, but it seems to be the most important AI stock out there. It really right now is the same price it was back in April. So 3 months and the stock is pretty much, it's a Rip Van Winkle trade. So, you go back in April and say, oh, what's the price of NVIDIA? You go to sleep, wake up 3 months later, it's the same price. I can't tell you how often that happens. Let's check just for the sake of argument. Let's pull up the Qs. Somebody pointed out the Qs in the comments. Okay, right now, is 686. It's the price it was back in May. Okay, about 2.5 months ago. So it's the stuff. Yeah, the Nasdaq's drifting down a little bit, no question. And you can always do this. There's a certain amount of curve fitting with what I'm doing. Yeah, find a price that it's already been at. Okay, the price here was, of course you're going to find something. But the markets tend to not move nearly as much as you think they will. So this is the bottom end of its range in the Qs. The range is probably, average price around 715, 716, and it's kind of stuck in this range. Like I said, the bottom of the range is here, top of the range is here. Let's check the skew on these things. I know it's pointed. I was looking at this before. Stocks at 209. So in between 207, 210, down 5 points, up 5 points. 202 half call puts are trading at 570. Again, markets are pretty tight. Lots of open interest. This is hardly a surprise with NVIDIA. It's one of the most popular traded stocks out there, understandably. What did I get filled? Hey, filled in my SPX for 30 cents. Keep our fingers crossed. And this is what I do all day long. So I got to get off NVIDIA, check SP. Yeah, got it on the sell-off. Remember, they were up about 25, 26 bucks. Looked dead, nothing done. And then they drop $8, filled. And what's driving that trade is the short put spread. Let's go back into NVIDIA. NVIDIA trade. Sorry. As we say, first day with the new hands. So the skew is pointed to the upside. So $5 down from 207. The 202.5 puts are at 575. $5 up from 210. The skew is pointed to the upside, even though it's leaned a little bit towards the 210 strike. There's still some extra premium in these calls up here. So I would be just kind of bullish on NVIDIA. When's earnings coming out? Let's take the strikes down a little bit. Yeah, earnings are coming out in August. This would be ahead of earnings. So if you don't want to take risk through earnings, I don't blame you. If I can get this again for about 82 cents credit, that's about, take my price off here, 82 cents is about where I want to get this. Bet I can get 84. Let's try 84. Third of it with the strikes, 71% probability making half the profit before expiration, so about $42 versus 166 of buying power effect. Not bad. Generates 45 cents a day. Review and send. What do I have here? Submit. Nothing done yet. Nothing done. Let's go back to the watch list. Boeing AXP. Oh, by the way, and yesterday, towards the close, when I was on last call with Chris Vecchio, I sold an Iron Condor in Intel, INTC. I took that off. That is sold a put spread or an Iron Condor about, I think it was about the 86, 88 and the 12, 14 Iron Condor with 0 DTEs. Took it 80 cents for it, bought it back for 6 cents today. Intel announced earnings last night and went up a little bit, down a little bit, and basically just sat there this morning. It was largely unchanged. Sucked the premium right out of the options, and I was able to buy my Iron Condor back for a good profit. And that's filled on NVIDIA, 84 cents. So it's that was a decent trade. Let's go back into, I was looking at AXP. AXP had earnings today and got whacked. Apparently, it had good numbers. And again, it's one of those situations where, the earnings come out positive and the stock goes down. Okay. The liquidity is not awesome in AXP options. So let's take a look at it. So this is American Express. And the only reason I'm talking about it, the only reason, don't follow American Express. I know what they do. You know, the Amex card. I get it. But it just popped up because it was a big standard deviation price change. That's it. And right now, trade price, let's go into stocks at 323, right in between 22.5 and 25. Okay. Down $5 to the 317.5 puts 269, up $5, 284 and 330. Yeah. All right. So the skews point to the upside. Again, if you go out to 28 days, there's decent liquidity, I guess. It marks it a little. I mean, we could try, right? 315. What do we get for this 5 points? $1.48, not quite enough. I'd like to get about $1.60 for this spread. Let's clear this out. Let's go back into, and I don't want to go too far out. 42 days? I don't know. Let's try this one. No, see, the markets are wide in here. Let's go back to the 7 days. This is where I was when I first was looking at this stuff. Go to the 17.5, 315s, 60 cents. Yeah, I mean, it's cheap. How about the 20, this one? Yeah, let's try this one for 80 cents. Buy the 317.5, sell the 320s. 60% probability of making $40, $170 buying power effect, $2.19 a theta. Let's route it. See if it got filled. Hey, filled at 80. I like it. That's called price discovery, kids. Let's go to QQQs. So let's look at the Qs. Oops. QQQs. They're down today. Nice. Look at that. SPX. Yeah, versus that's interesting. You want to try just for kicks. How about we sell an out of the money call spread in Qs? What do you say? Are we bullish or bearish on Qs going into the close? Give me a number, or no, give me an outlook. East Coast Enduro. What do you think? Bullish? I'm bullish. Sun salutations. Yeah, well, so put him on the follow page. Trying to do it's a lot of steps. Bearish into the close, bearish into the close, bearish into the close, bearish. All right, it's too many bearishes. Let's go in bearish. Let's sell a call spread. Now let's put on the 688. Don't be a wuss. Get in there and sell some premium. 40 cents. Let's ship it. Ship it. Come on. They're taking it away from me, guys and ladies. Let's try. I'm going to do this at 36 cents. Maybe we can get it on a bounce. Filled at 36. So we're short the 688, 690 going to the close. The reason this is not for everybody. And the reason I say is you can get assigned on this stuff and end up buying or shorting, shares of Qs, and that can get a little pricey. Let's go in and take a look at the SPX. Wouldn't it be fun if for the show we nailed that center strike where I'm at right here? Yeah, right here. I'm right there. Jeez Louise. If we can hold on to this, this would be a winning trade. This would be a winning trade. So let's see our activity here for the half hour. Qs filled, AXP filled, NVIDIA 1, 2, 3, 4, 5. 5 trades, 4 trades. If we can get the rest of this stuff, maybe Lulu, I'll take that down a little bit. So one of the questions that comes up, BBB fine, earnings come out positive, and then morons running the company say something stupid. Yeah, that's just it. It's the market doesn't know who to listen to. I would just skip the whole earnings crap. Let's see. Do you end up having 100% winners always with those SPXs? No, not at all. I have about 80%, 85% winning trades on those things. Sometimes the losses can be huge. I got caught in April having a couple of big losers in a row. Took me, a month to make the losses back. Maybe not quite a month, but that's just the nature of it. So the other point is, the other question is, can somebody review the SPX conversation? Fade the chat. I thought there was a question about the 50-50 on these. What, read my RSP, once you refer to research around that, zero DTTs are really just a 50-50. I wonder if you can clarify that. I don't remember what I said that in reference to. The zero DTEs, if you trade them really close to the at the monies, they can be 50-50 shots. Or actually, the stock price is more of a 50-50 thing. I'd have to look at the cherry bomb, what I was referring to. Anyway, this could be an interesting day. So right now, on my SPX, it's threatening my short put spread. So this could actually turn into a loser. What I need is a little bit of a rally in the SPX going into the close. That would be nice. So that said, none of this is a trade recommendation. If you do decide to do this on your own, that's your call. And please, when you do not take any more risk than you are comfortable with.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
It's time to trade smart, post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Friday edition of what it is we're trying to do. I'm glad that you are here because it is only because of you all that we can do what we do. So thank you guys so very much. If you're watching over on the Tasty Live Network, that's a good decision, but a better decision, an uptick, as we say, would be to hop on over to the YouTube chat and join the conversation, join the discussion. You can communicate with your brethren who are also watching the show, man. You can celebrate, man. I don't even know. You can celebrate, just celebrate being here. There's no commiseration on a day like today, and hop into the chat with your questions and your comments and your stories and your jokes, because you have one job and one job only today: to pump that
algo. So Laura, bring us in. And yeah, you mean the S&P's up 2 on the day. You've got the risk-free instrument, also known as the NASDAQ futures, which is an extremely high risk, extraordinarily high risk product if you're brand new to trading. You got the boomers up 183. You've got the Russell 2000 these days. That 3000 label, that thing is over and done with. Down to 29.48. You got bonds up a little bit. You got notes up a little bit. You got oil down $3 today. You got UB40 up a little bit. You got the Shifties up there, out there, whatever, up 7. You got the Hunt Brothers. I've actually never had Hunt Brothers pizza. Let me know in the chat. Is it any good? Like, I have to imagine, just by the simple fact that you can only find it at gas stations, correct? Like, do they have standalone, like, franchises? Like a standalone building? I'm pretty sure it's kind of a gas station type of kind of co-packing deal where it's Hunt Brothers and Shell. Like it's Hunt Brothers and Amoco. Like that's your only shot at Hunt Brothers. I would just assume, given its gas station status, that it's some pretty high quality stuff. That's just what I'm guessing on the outside. But you guys let me know. I've actually never had it. But yeah, silver up 60 cents on the day. You got British pound is flat. You got the euro is flat. You got volatility is flat. Man, throw one out there for our Bitcoin bros. You got these guys down 1,100 today. Down to 64,000. I haven't looked at Bitcoin, haven't even thought of Bitcoin in many, many months, but they're still out there, man. They're still doing it. Got Ethereum is down a little bit, $14. Again, no idea what that means because I am not a crypto bro, but VIX, I do know that guy. Up 3 cents on the day, up to 1873. And so there's a little market commentary for you. Is it going to make you a better trader? No, it probably made you a slightly worse trader, but now it's over and we can all kind of move on. So, all right. So what I want to do, let's go through a couple of things happening in the portfolio here, and then I know what I want to do, man. I hope you guys are ready. Right now, the show just started. I'm imagining you're halfway through your banana natty already. So once that guy goes dry, I would follow it up with a Ghost. I would follow it up with an LMNT. You can even grab one of those little Monster Ultras that I've been rocking lately. For those of you that might follow me on Twitter, I'm at JSchultzF3. If you guys want to connect over there, they're not too bad. Like, they're not amazing. It's not going to change your life, but it's, it gets the job done in a not really kind of way. But what I'm going to do today, so if you guys saw Inside the Trade this morning, so what I want to do is Inside the Trade this morning, I was assigned on Tesla, but what I did on Inside the Trade is I closed out of my assignment. So if you want to see me close out of my assignment, I'm still trying to navigate, right? Trading in the morning, trading in the afternoon. Like, this is a learning process. There are going to be lots of bumps and lots of bruises. I can show you next week, there's going to be lots of bumps and lots of bruises for reasons that will become clear next week. But from a Tesla standpoint, we closed this guy this morning and I just went through the unwind process. Right, I went through the unwind process. We closed out the shares and we closed out each individual option. And I explained why I was doing that way on the show. And so go back and give that guy a look. What I actually want to do with you guys, let's actually work out our basis on this trade. Let's actually roll up our sleeves, get out the pencil, get out the paper, i.e. have your AI agent do it all for you. Let's go ahead and let's knock this guy out here live on the show. I mean, I don't have an AI agent that I can give you guys here live on the show, which is probably better because they're wrong about 107% of the time. And so we're going to go ahead and we're going to crank that guy out here in just a couple of minutes. But man, I see you guys in the chat. You guys are telling me that the Hunt Brothers pizza is a D? Is that what I'm getting? Are you guys grading the Hunt Brothers pizza at a D? Jumbo Life, I see you, man. I see you 100%. Is it really a D? Man, that's not really, that's not in my lane. Like you guys know, I mean, B- is where I flourish. Like right there, settled in right about that 82% marker. Man, that is where we are absolutely at our best. I can assure you of that. But looking at the rest, oh, look at Intel, man. We had them right where we wanted them. Who gave me Intel? Wait, I got receipts. Hold on a second. Sam L gave me Intel. Sam L, man, come on now. I don't even know if you told me which way to play. In fact, I'm pretty sure you didn't, so I'll let you off the hook. But yeah, Intel, man, brutal stuff. Because we thought we had them last night after the bell. Like if you go to the, if I look at the chart of Intel, is that a daily chart? No, I don't want to see a daily chart. Let me look at like a 1 minute. I would do like a 3 minute. That's fine. Actually, nah. I need a broader swath. exposure. Yeah, there you go. So, I mean, going into the morning hours, I mean, we had them up to 106, 107, but then last night, weren't they up to like 110 or 1? Yeah, there you go. That's what I want to see. There's your final boss green candle. And by final boss, I mean, clearly it was not over yet. But if you look at the, if you look at the high of Intel, you know, they ran them up to 113, right? And then all of a sudden, you know, we had the Trump pump there. We needed a second Trump pump here, and we did not get it. And so as a result, it looks like our Intel long call spread is going to go out to the nothingness of all the long call spreads that have come before it. And so Intel, unfortunately, is not going to work. ServiceNow, unfortunately, is not going to work. That's another one, just light and stacks of cash ablaze. Intel, ServiceNow, Tesla obviously ended up being a loser. And then we did okay on the Google trade, but it's not really enough to kind of carry the tide. I see. Hold on a second, man. Wow, look at Laura, man. Laura. So let me tell you guys something. Laura's pace on the surprises and delights is something I'm also going to have to get used to. Like Laura's pace on these surprises and delights is quite significant. And so let me see here. We've got, yeah. I see, oh my gosh, I got to see this one. Wolf, I see you. So Laura snuck in through the back door and surprised and delighted me with the comment that I told Wolf to plant in the stream at this time. And there it is. Liking the new lineup of From Theory to Practice remains the best part of the day. Man, I'm going to send you that cash that we talked about. That crisp 10, it's coming your way. And by coming your way, I would not wait by the mailbox. But it'll be there when it gets there. So let's go ahead and, but I appreciate you guys, man. I appreciate all you guys. Let's go to, okay. So here's what we're going to do. Now look. Full disclaimer, right? I am well aware that this is not the only way to do this. It's probably not even the best way to do this. We're going to figure out the basis on the Tesla trade. But whenever I'm in a situation, I used to do this with my students all the time back in the day. I used to teach them. I said, hey, listen, if you're up against a problem and you know clearly and cleanly what to do, then do that thing, right? If you're ready, if you're skilled, if you're studied and whatever, just do the thing and move on. But if you're ever unsure about how to proceed because something looks a little bit off or you haven't done it in a while or whatever, then break it down to its component parts. Like strip it down to the chrome, man, like nuts and bolts and washers and Allen wrenches and whatever else you might need. I don't know what Autumn uses when she fixes things, but I think it's, those things and maybe more. Break it down to those basic parts and then build it back up. Build it back up slowly but surely, and that's what we're going to do. And this is going to be a painstaking process. Okay, so let's go ahead and let's go to the history tab. Well, actually, hold on. We're going to use a combination of the history tab and the activity tab. Because the chains are going to kind of lead you astray a little bit right now. Like, I got to be honest, right? I mean, like the chains, they almost never let you down. You can go rooster, you can go I stay away, you can obviously go woods, you can clearly go man in the box. These are all amazing choices. But every once in a while, you got to be in a certain type of mood for dem bones. Like if you're not in the right type of mood for dem bones and you hear dem bones, it's not going to work. But if you're kind of thinking, man, I could really use some Taylor Swift, and they drop some dem bones on you, it's not going to work, right? And so that's kind of the situation we're going to be in here with the chains. So if I bring up my chains, you're going to see it looks like, man, those are a lot of dem bones because it looks like we made a whole bunch of money in Tesla. And that could not be further from the truth. Like I can assure you that we lost some money in Tesla. But when I looked at that, I'm like, okay, that does not appear to be right. So let's go in a different direction. And again, there's assignments and there's all kinds of things going on. So I got it. I understand. But let's go ahead and let's go to, so first and foremost, I just want to draw everybody's attention to this 376. So 376, that's what we bought the butterfly for. Now, these were our closing trades that we did this morning on Inside the Trade. You can see them all right there, timestamped during that show. We got rid of our shares at 315, and then we had our two options that we have right here. So what I want to do, and I have it all in front of me, because I was working this out before the show. I'm like, there's no way I'm going to do this live on the show. That would be an absolute train wreck. And it's already going to be at least a relative train wreck on the show. So let's try to stay away from the absolute train wreck. So if I go to my, I can do a couple of things. So number one, if I go to the trade page, well, actually, let me just do the history tab now. Let's go ahead and bring this guy up. If I go to history tab and let me see here. I go to the history tab and I do, man, there's just so many things to keep up with, man. I don't know that I can do it. Man, where's my intern at? Where is my intern? I think she's watching Fancy Nancy, actually. I think this is Fancy Nancy time. And so this is not a good time to be calling on the intern for some work. But if I go into Tesla and I go back, let's just go back like 7 days. So what I'm really looking for here is I want to know what was my transaction price on each individual leg of the butterfly. So when you're in the activity tab, I actually like it more because it goes ahead and it kind of collates together the individual legs of a strategy, and it just gives you the price for that strategy. Most of the time, that's going to get you what you need. That's going to get you where you're trying to go. But in a situation with like a butterfly, where it's like, okay, I was assigned on 200 shares. I've got one leg over here. I've got one leg over there. I'm like, all right, again, let's go strip it down to the chrome brass tacks to kind of figure this guy out. And I think this is a worthwhile use of our time because A, the content's not going to write itself. And B, I know that many of you out there are getting assigned from time to time. And you're looking at your account. You're like, what in the woe mahojis is going on in my account? How do I figure out what happened? So hopefully this will help a little bit. So, okay, so we know that we were assigned at 359. And I also know that my puts, so my 337, I bought it for 80 cents. My 372, I bought it for 931. And then each individual short put, let me grab a different color here, if for no other reason than we can. The 318 and the 317. And so these are all the options that were a part of my butterfly. Okay, so keep all that. I just wanted you guys to see where I got the numbers from, so it will all make some sense. So now if I go to my activity page, I'm just going to stay here because I mean, look at this broad expanse of area that we are able to work with the Final Jeopardy pen and the scribbles and the chicken scratch, and it's gonna be amazing. Okay, so first and foremost, I'm gonna start with my 200 shares. So I've got my 200 shares, right? I was assigned on the shares at 355, but I had to buy them back right here at 315. And so, actually, no, I had to sell them at 315. I bought them at 355. So if I'm trying to figure out, where I'm at on the shares, I should say, here's where I'm at. I'm 315.06 minus 355. Now, we are going to go for a Julia Spina level of precision today. So we are going to try to do it, no squiggly lines, exact measurements. So here's what we got. We got 39 minus 39.94. Now, I need to be mindful of the fact that this is 200 shares, though. So this was 200 shares. So I need to multiply this by 200. And that's going to get me, again, this is what I mean by brass tacks. We're taking this all to the total cost level so that we make sure that nothing gets miscounted or double counted with, one lots and two lots. Like I want to make sure that everything here is squared away. So if I go 79, ooh, that's a negative sign, believe it or not. It's a pretty aggressive negative sign. But that's 79.88. Okay, so I lost 79.88. Essentially the polar opposite of what the chains would lead you to believe. Okay, let's grab a different color for the long options. Let's go Glacier Freeze. So now I know that this is my 372.5. I know my 372.5. I've got it written down in front of me. I know I paid $9.31 for that. And then this morning it went to, that's an Errol, 56.95. So that is a total gain on that of 47.64. So if I go ahead and take a total cost on that, that's going to be a positive 47.64. If you're nodding off, express apologies that we have to do this, but we got to do it, man. We got to do it. That's the 372. Now, the 337, these are obviously 372.5, 337, but I want to make sure that, or 337.5, but I just want to kind of move a bit more efficiently through this. So I should probably stop talking about moving efficiently and just actually do it. And so 80 cents, which is extremely difficult for me to do, but we're going to try. 80 cents, and I sold that guy, I sold that guy for $22.50. Again, an amazing trade in its own right. The problem was it was part of a larger package. For that one, 2170. So that's going to be plus 2170. Okay. And then my short options, which are going to be in the magenta. These ones are really simple because I just sold them and then they just essentially expired, right? They just, I'm sorry, they didn't expire, but they morphed, they evolved, right, into the actual shares. And so I don't have to think about, what did I buy them back for? There was no buying back. They just kind of, materialized into my share position. And so for my 355 short options, it was 317 plus 318. So 317 plus 318 is equal to, I actually didn't add that up. I didn't add it up in this method, but it looks like about 635, give or take. So that's going to be 635. That was easy enough to figure out on the fly, so that's good. So that's going to be 635 plus 635. So now what I need to do, man, look at this, man. It's almost like we've done this before. It's almost like we've spent a lot of time around blackboards and chalkboards and whiteboards, and we have a tiny little corner left to give us our final answer. So if you net all these numbers together, what you should get is minus 419. That is our overall P&L on the position. So we bought the butterfly for 376. We essentially exited the butterfly for 419. So now that we've done it on a total basis, we can go ahead and just convert that to a per share basis now. Now that everything has been accounted for, nothing has been miscounted or double counted or whatever, like I feel very good that these numbers are accurate. I'm about an 80 delta that these numbers are accurate. And so if we look at that, it's like, okay, we lost about what we thought we would lose in a worst case scenario. Okay, there is a difference, and it's not a totally insignificant difference of about 40 cents. So where did that come from? Well, again, if you watch the show this morning, you will see there's a bit of a lag between when I close the shares and then when I close out of the options. Not a big lag. In fact, you don't even need to see the show this morning. I mean, go back and watch because your boy needs that watch time, but you can see it right here. Right, you got about 13 seconds between the shares and the first option, and then another 13 seconds between the first option and the second option. And so that's a total of, 30 seconds lag? I mean, Tesla was moving like crazy this morning. And so that could easily explain a 40-cent slippage in the cost. And so hopefully this makes a little bit of sense. Hopefully this is somewhat clear to you guys. And yeah, that is how you figure out your basis on an assignment. Hopefully it makes a little bit of sense. I see people nodding off in the chat. I don't blame you at all. I yawned. I had to fight back a couple of yawns while I was going through that myself. But let's go ahead. Let's see. Let me try to, man, can I surprise and delight somebody before Laura surprises and delights me? Here we go. I'm going to surprise and delight somebody new. Let's see. So Code Codger, what's going on there, Code Codger? Afternoon, Dr. Jim. I'm pumping that algo, my man. I joined you in your DIA mullet trade. It's my first diagonal. So far, so good. Okay, so I've got this diamonds trade, this 525, 515, and this is a bearish trade, right? Like this is a bearish trade. I want the diamonds to go down. And so I really, having the diamonds down around 518 is a good scenario for this position. Simply because, we're up a little bit of money. And so we're up a little bit of money on the trade. And when we put the trade on, I want to say the diamonds were maybe 520 or 521. So it's moving in the right direction. Like it's moving in the right direction. And, this is what I want to see when it comes to, the diamonds trade and this diamonds diagonal. I want to see the diamonds moving lower because that is the direction that's going to line up with this bearish put diagonal. Now, should I do anything right now? I mean, I'm not going to do anything yet because right now everything is still kind of cooking. Like right now, everything is still looking pretty good. I mean, in terms of my theta and in terms of, just still having essentially the spirit of the trade kind of intact, which is really, really nice. And so the way I see this trade, I mean, Code Codger, obviously you got to make up your own mind and make your own decisions here. But the way I see this trade, I really think it's a do nothing scenario. I really think this is very much a do nothing type of situation. And so hopefully that helps a little bit. And so, but let me see. Udara's in the house. What's going on there, Udara? I see Udara is here. If I don't have capital in my account by the time of the assignment, what would happen? This is a great question. So if you don't have enough capital in your account and you get assigned, your buying power is going to go negative. So your buying power is going to go negative, and that can be a very, very, very scary thing. Well, let me let you in on a little secret. If it's only like a little bit negative, and by a little bit negative, I mean it's, let's say, less than 10% of your account. I'm not sure if Tasty has like a hard cutoff. I'm just speaking anecdotally here. If it's less than 10% of your account, like if you've got a $30,000 account and your buying power is $3,000 negative, then as long as you clean that up by the end of the day, I think you're fine. Now, again, if you have any questions, I would call Tasty and get confirmation on all this, but I think you're fine. If you are negative buying power, like, 30%, 40%, something like that, that's when they're going to go in and start liquidating positions to make you whole, to make themselves whole in a lot of ways. And so when it comes to the actual buying power flipping negative, believe it or not, it's not necessarily panic mode. It's not necessarily, I have to act right this second. Clean it up by the end of the day, and it's not typically an issue. But is it something you can carry indefinitely? Of course not, because you can't carry negative buying power for, too long. And so clean it up by the end of the day if it's only a little bit negative. But if it is more negative, that's when you start getting emails, phone calls, people coming by the house, stuff like that. And so hopefully that helps a little bit. But here we go. All right, here we go. Surprise and delight part 1. Laura, what is up? Joel James, Doc, Hims is getting smacked, but warning next week. Anything to do in there? Thanks for all that you do, but warning next week. Earnings next week, maybe you said? Hims. Yeah, let's see here. Yeah, August 10th, after the bell. Hims getting tossed around. Isn't that what Hims does? I mean, this is like a Hims thing, right? I mean, this is like 100% a Hims thing. And so, yeah, I mean, from a Hims standpoint, let me actually zoom out a little bit. Yeah, I mean, you've got a little bit of, I don't know, is this what they call an uptrend? I mean, I see a low, I see a high, I see a higher low, I see a higher high. Even I can do this. I see a higher low, I see a higher high, I see a higher low. Joel James, right? I don't know, man. I mean, you've got to draw your own conclusions, of course, but I see an inverted blue. I see a black to the upside. And so, I mean, I'd probably be bullish on Hims here, I think. And so, I mean, that's how I would view Hims personally. And so, yeah, so hopefully that helps a little bit. I'm not going to do anything yet, though, because his earnings are too close. And so let's see. Point B, Doc, do the assignment of stocks happen anytime, or is it just post earnings? I ask because my Palantir strangle. Hang on a second. My Palantir strangle is in the money. I'm unsure if I want to wait till the earnings before closing, the 130, 140 strangle. Yeah, let's take a look at that. It all comes back down to extrinsic value, right? It always comes back down to extrinsic value. And so when it comes to Palantir, so from a Palantir standpoint, let's see here. From a Palantir standpoint, what are we in August, you said? I don't know if you said. You didn't say. It's probably August though, right? I'm just assuming it's August. I think that's a reasonable assumption to make. You've got a 130, 140, so you're probably 130 put, 140 call, I would assume. I could be wrong on that, but it might be a little bit odd if I was wrong on that. And so let's make that a strangle. Okay, so you're 1597. Like this is what you're, right now the strangle is $16 to go ahead and close that guy. If I go into the extrinsic value, and you look at the extrinsic value, the 140 call has 387 in it. And then if I go down to the put has, 657 in it. So there's still a ton of extrinsic value in these options. The likelihood of assignment is very, very low at this point. And so, of course, you're only in a situation where the put is going to be the option that is in the money with the stock at 124. So the call is obviously not going to be assigned. The question is the put going to be assigned? Again, when you have a short option, the likelihood of assignment is never zero. You can never say with certainty that you won't be assigned, but the likelihood is very, very low because A, I mean, it's in the money, but B, it has a ton of extrinsic value. And so because of all that extrinsic value, that's a significant amount of extrinsic value. That is a significant amount of economic significance. And so because of that, I think that the likelihood of assignment is incredibly low, but it's not zero. And so hopefully that helps a little bit. And then lastly, man, look at Sam L. Doc, $19 million aggressive purchase of the Qs, 685 strike put option, contracts expiring 8/7. The volume is 15,000. Are we contrarian? We are always contrarian. We are always contrarian. Every single time you have to be contrarian. So if I take a look at the Qs and I go to, let's see. Did you say 685 expiration 8/7? Okay, so it's a weekly. 685 right there at the money, man. That's a power move. That's all I'm going to say about that because I don't know anything else to say. Right? As far as depth of market and order flow and volume profiles and things like that, and potentially, gamma flips and gamma levels, I'm not as well versed on those things as some of my own brethren might be. And so for a 685, I mean, it's right there at the money. And so you said they bought the put? Yeah. I mean, at the money put, that's a power move, man. That's a power move because you're buying all premium at that point, and you are buying the maximum amount of premium at that point. Right. So whether it goes higher or lower, I mean, it's anybody's guess, in my opinion. This individual or entity or institution may not feel that way. But I look at this and I'm like, it's anybody's guess, man. And so it's kind of like, man, you're really getting after it because if you buy an out of the money option, it's kind of like, all right, I'm taking my shot. And I don't like that trade at all. But if you do it, at least the losses are typically contained because you're only buying, a little bit of extrinsic value, relatively speaking. And if you miss, whatever. If you buy an in-the-money option, you pay a lot more, but you're picking up a lot more delta. And so, you don't have to battle the decay and you get more of the move. And so, to me, the worst possible choice on the board is the at-the-money strike. The worst possible choice on the board is buying that at-the-money level. And that's exactly what they did, man. And so I just got to tip my cap. And just say I'm quite impressed with the move there. And we'll see how it works out for them. But that's a bull strategy there, Cotton. And so let's go ahead and let us see what's happening at the very beginning. Man, let's go. I see BBB Fine is here. Hey, Dr. Jim, I thought you nailed intel. Me too, my friend. I was counting my money. Then the market opened and boom, loser, Wawa. Yeah, it was pretty bad, but you should hit up some Wawa because I'm pretty sure they got plenty of ghosts there. I mean, if you've got a Wawa near you, that's some solid stuff, man. I don't think they have a Hunt Brothers Pizza, so that's a little bit of a downtick. But Wawa is pretty solid. So, Orgdenu, hello, Dr. Jim. When doing a covered call, should I focus on the break-even, assignment minus credit received, or the price it was assigned? Thank you for teaching us this morning how to close such a complex position. You're welcome, my friend. And this was kind of like a part 2 of that, I guess. So, a couple of things to keep in mind. So, you're saying if you get assigned, obviously, right? So, if I get assigned on a covered call, then I am going to be mindful of a couple of things. I'm going to be mindful of both of those points. Number one, I'm going to be mindful of where I bought the shares. So without any premium factored in, I'm going to be mindful of where I bought the shares. But then also number two, I'm going to be mindful of what my break-even point might be. So that's going to be my purchase price on entry, less any credits that I've collected along the way. And so because of that, I am able to kind of navigate what happens next because I'm in a situation where I understand, okay, in order for me to really be profitable on this trade, I'm going to have to clear the hurdle that is my original purchase price on the position. Okay. But then secondly, in terms of, the purchase price and then, the credits that I've collected, that puts me in a situation where if the stock has fallen significantly, so now maybe it's a big drop down through the strike, a big drop down from earnings or some binary event or just random market behavior or whatever, I may be looking at this now and I'm thinking, I just really want to scratch. I really just want to cut my losses. I really just want to try to maybe stop the bleeding to the best of my ability. So if that's the case, now I'm not really looking for any splashes of green in terms of my P&L. I'm just looking to kind of keep the lights on. So if I'm just looking to kind of keep the lights on, now I'm looking at, okay, what is my break-even point? What is my total basis on the trade? And I personally use the magnitude of the move in the stock to help me determine which one of those is more appropriate. And so hopefully that helps a little bit. Sam L is here. Happy Friday, Doc. Weekend mode is almost here. Just one more hour and a half of convincing the algo to behave. Good luck with that. It's a very, very difficult thing to do, but we are going to try. And so point B is in the house. Afternoon, Dr. J. Fun fact, scientists still can't explain how you juggle two shows. Yep. Natty gains, I don't know about that. and alpha this consistently, someone should study you, man. I appreciate you so very much, my friend. Appreciate you very, very much there, Point B. Daniel, hope you have a great weekend. You are the best, man. I appreciate you too. You are the best. And hope you have a great weekend too, my friend. Although you're over in Italy, it might already be the weekend in your neck of the woods, which is pretty awesome. Brian Rakuten is here. What is up there, Brian Rakuten? Wolf is here. Wolf. Wolf says, Doc, today in the original Cherries Discord, I was accused of being your burner account. Do you have any comments? I have no comments, actually. And y'all better watch out for that burner account because it is coming for you sooner than you expect. And so, but that's pretty good. Joel James is in the house. There's the Doc Hims question. There you go. David C is in the house. What happened to Intel? Blowout earnings and tanking? Nobody knows, man. Nobody knows, right? I feel like that Nate Bargatze skit on SNL. Nobody knows. Like, why don't we have a word for half a ton? Nobody knows, right? Nobody knows what happened to Intel. Nobody knows what happened to, Google or whatever. It's all just it's all in the eye of the beholder. And so nobody knows. Sam L, Doc, not getting bumped by a croissant this morning is the way to start the day. That's correct. I agree with you all. Point B, Doc, that was the Palantir. Man, I'm clearing Laura's surprises and delights with the quickness. Right? We've only got one more to get to, I think. And so there you go. Ryan LP is here for the algo pump. There is my man right there. Ash Finn is here with the algo pump. Ash, check out this bond position, man. Check out this bond position. It's looking okay, right? It's looking okay. And there we go. And so Mikos in the house. What's going on there, Mikos? Vicky Zags is here. Got the old war off bloop in the afternoon. There you go, my friend. That is correct. Badger Dono in the house. Dr. Jim, and now the fun begins. Yeah, it's something. And it's almost over, actually, isn't that crazy? I mean, once I get through, you get me working through a basis, you get me working through some bloops, some inverted bloops on the charts. I finally get to the beginning, and the show's almost over, man. That's crazy stuff. And so point B, Doc show comes on, and it is like falling. It is like a falling knife on the yes. I don't know if you mean my show was like that, or if the beginning of my show actually triggered that in the market, or maybe a little bit of both. DMZ is here. Laura, be honest, who's harder to moderate, the chat or the Doc? I would love to know that, actually. That's a very good question. There's the third surprise and delay. There we go. Liking the new lineup from Theory to Practice. Best part of the day. Appreciate you so very much. The Jumbo Life is here. A for Algo. There you go. Mikos is here. I thought today was going to be a rally day. Holy rug pull, Batman. That's correct. Except for the boomers, man. Like, look at the boomers. Still putting in work. When the rest of us are looking for time off, the boomers are working. When the rest of us are asking for unlimited PTO, the boomers haven't taken a day off in 19 years, right? And so the boomers are leading us into the promised land, as we all know that they should. And so Ash Finn is in there for the algo. Appreciate that. Sam L, the chat. There it is. Nice. That's good. That's good. FN Trades. Dr. Jim, I'm curious what Tasty thinks of trading exclusively futures, particularly with prop firms. Well, I can't speak for the entity that is Tasty. I can speak for myself. I don't have any experience with prop firms, like none. I've never used them. I've not even really looked into them too much. I understand the basic idea and the basic concept. I think there could be a use case for them. I think Jermal actually has more experience with that. I think he came from that world, and so he would be a better person to ask. I do think futures trading, just with your own account, it can be a really nice complement to an already balanced portfolio. Again, you have to decide what makes the most sense for you, of course. But I think that futures can have a home and a place in a lot of different portfolios. And so, And so those are my thoughts, just generally speaking, on futures. And so, there's Sam L, another surprise in the lab. I thought there was only 3. Oh, no, there was. Oh, yeah. Laura surprised and delighted me through 2 different channels in Teams. She did it through the Green Room channel, but then she did it through the back secret passageway, to just me directly. And so, there's a lot happening behind the scenes. That is for sure. The Jumbo Life, Badger Down, Hump Brothers, terrific if you seek soggy and overcooked. You're speaking my language. Sitting on a heating pad, now I'm really interested, for 3 hours before you dig in, where can I get some? I need to know where the nearest Hump Brothers is. I'll give you my zip code, 33710. You guys need to scout that out and find me the nearest Hump Brothers pizza, because I need it stat. I mean, you already sold me on it, man. I'm ready. Daniel, we love to see you more than once. Yeah, be careful, man. Be careful. And so, because a lot of things might be coming your way, you ain't gonna be liking it all. Sam L, Doc, for a change, I'm having tuna and an apple today. No sauce, just plain tuna. Okay. So if you're brand new to trading, you're trying to make your way, you're trying to figure things out, you're trying to understand like the language and the lingo. Like you'll hear us saying a bunch of things on the network and you're like, I have no idea what that means. Like rolling, I don't know what that means. Like the NASDAQ, I don't know what that is. Right? Like a scratch, like unch, like what does that even mean? Okay. Down tick. What is a down tick? That comment is a down tick, right? When you go from, forget about the apple, right? The apple's a great move, always a great move. But when you go from tuna and applesauce to just straight tuna, that's a falling knife, right? That is a falling knife with no stop in sight. There's no stops. There's no support. Like it's just going to keep going down. And so that is a falling knife. Man, that's a power move, Sam L. Nice job. So Sergio's in the house. The Jumbo, the D is for the Doc. Pump the algo. Yeah, I appreciate you so very much. Sam L, Doc, it was obvious. Intel, I can't believe they're still doing it. I really can't either. It was so obvious that it surprised everybody. And so there you go. Let's see, Ranch. The Trump pump, that's right, 100%. But we didn't get it. And so maybe our boy can come through for us here in the last 45 minutes. Happy Friday, Ron Vishar. Happy Friday for the algo. There you go. Hope your butterfly nets, it didn't burn up on those Tesla puts. They got scorched a little bit. They got singed a little bit, but it wasn't too bad. It's definitely been worse. That's for sure. Point B, good afternoon to Laura. Yes, that's correct. Good afternoon to Laura. She's doing an amazing job. I mean, the whole production team, man. I mean, they work so hard. They really do. And so hats off to the entire production team. I mean, we couldn't do what we do without them. And so they really do a tremendous job. And so Laura's our favorite moderator. You're moderating the Doc, the Penal Open Bros, the Shifties, and somehow the algo too. She's doing it, man. She's absolutely doing it. Keeping Doc on his toes. That's correct. She is definitely doing that too. Mr. Pillows is here. What's up there, Mr. Pillows? And Ranch, I see Laura's in there. That's some nice work. Ranch, nice getting a fresh Hamilton in the mail. There you go. Hamilton is wait a minute. Hamilton's not a 10. Hamilton's a 20, right? No. Let me think. Abraham's a 5, right? Oh, man. George Washington is the 1, right? I'm positive that Abraham is a 5. I'm about 70 delta that George Washington is the 1. I'm going to say, I don't know. Wait a minute. Hold on. This is so much fun. I haven't thought about this. It's been 30 years since I thought about this. I'm going to say that the 100, wait a minute. The 100 is Ulysses S. Grant. I think that's right. So hang on. I need to keep track here. Hold on. We got to do the basis again? Hold on. George Washington is a 1. Abraham Lincoln is a 5. I'll come back to the 10s and the 20s in a second. I'm pretty sure that Ulysses S. Grant is the 100. I'm also pretty sure that Andrew Jackson is the 50. Is this correct? Let me know in the chat. I have no idea, but I think I'm warming up. Now, the 10 and the 20, one of them is the Hamilton. I think it's the 20. Who is on the 10? I can't. Who is on the 10? Is it? Oh, I can't believe I missed it. It's Trump. Trump is on the 10, right? No, he's not on the 10, but I'm sure he wants to be on the 10. I don't know who's on the 10. That one has me completely at a loss. Let me know if I've mixed these up. And then the $2 bill, I mean, I think that's Daffy Duck. Like, I have no idea who's on the $2 bill. I'm pretty sure those are just some Scrooge coins on the $2 bill there. But let me know. Hold on. I'm going to scroll down to the end. I'm going to see if I got it right. Are you guys helping me out? Okay. The 20 is Andrew Jackson. The 50 is Grant. The 100, I botched this whole thing. The $100 bill is Benjamin Franklin. Wow. Okay. So thank you there, Laura. I did get the $1 bill right. The $2 bill is Thomas Jefferson. Okay. The $10 bill is Hamilton. I got Abraham Lincoln right. Okay. So I botched. I got a couple right. I got a couple wrong. And yeah. And so, yeah, I don't know. It's just like, yeah, I don't know. Whatever. But man, it looks like I'm just about out of time. I see you guys in the chat. iPod Touch is here? Hold on a second. iPod Touch is here. iPod Touch, what is going on? If there was a problem, I solve it. Check out my hook while the DJ revolve it. That's correct. I mean, you're taking me back, man. Like, you are taking me back tell me that you didn't get home from school and you were glued to MTV waiting for Carson Daly to come out, Total Request Live, and you knew what number one was. We all knew what number one was, but we were waiting and we were dancing in our bedrooms, and it was awesome. And that was a little Vanilla Ice. But I appreciate you, the iPod Touch. I got to run and get you guys to Tim. Man, I appreciate you guys so very much. You guys are the absolute best. If I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Investopedia says we're the best for options trading. Stockbrokers.com says we're number one. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Well, hello. Happy Friday. End of a very, very, very good week. It's been a pretty big week for earnings, and next week is the tidal wave. We're going to get the biggest of the big, and in the midst of all that, we're getting Kevin Warsh with his first FOMC, and I imagine if the man's got any sense, his first interest rate bump higher. And the charts have been working great. If you joined us this morning, I was talking about that, and it's just been, everything's been clicking. It's been just all cylinders. Let's jump in and see what I'm talking about. We've got a pretty red day on our hands, and it wasn't always that way. There's been a lot of fight back. And here, on, the spider is still very range bound and fairly inscrutable, which is why I'm really focused on individual stocks. If you look here, we've been banging around this range for months now. And the event which happened this week, which made things a lot easier for me, is what happened between Wednesday and Thursday. Because a price gap was created on almost everything. And it clarified a lot of the charts. And it also really dispatched with the terror that we were looking at on Wednesday of a potential push above that range. And everybody's worried about Taco Tuesday. Everybody's worried about Trump, surrendering and to reality and saying, oh, well, Iran really wants a deal, saying that again, and getting a big rally to try to prop things up. Or he may just be resolute about what he's doing and not worry about the stock market, which is kind of hard to conjure. But, it takes two to dance. And in spite of any bromides about how great things are going and how many boats are at the bottom of the sea, this may be a intractable mess at this point. And we're heading into what historically, August, September, has been an era of surging volatility and bearish conditions, especially September. This week has been helpful for the bearish cause with respect to AI concerns. And in spite of dynamite earnings, as Jim Cramer has told us all, it isn't working. You know, you saw Cramer on Wednesday afternoon after Google announced record earnings, record revenue. And I think his quote was like, the numbers are pretty darn good. And then, of course, when he closed his mouth, everything started to fall. It's been a catastrophe. Then yesterday, Intel reported. Intel exploded higher, like 13%. Everyone was running around screaming about this amazing result. And Tubby came out and said, Intel is the one, something like that. And that marked the millisecond when it fell to pieces and collapsed. So, you know, I appreciate it, Jim, really do. Although I don't think that's the intent he quite has. But yeah, the fantastic earnings, it's not working. It works for a minute. Then Jim comes along. So I'm counting on him next week as we get the big reports coming out from Apple, from Amazon, and so forth. Although I'm not going to pick on Apple. I don't mess with Apple. Apple's at a record high. It's perceived as like the last well-managed company on the planet. So it's about a $5 trillion company now. I don't know how it's doing at this moment because I don't really pay attention to it, but it's been exceptional because they haven't followed this AI rabbit hole. And good for them. As far as the diamonds go, this is an example of the sort of intraday strength we've seen. If we change this to, for example, let's make this like a 5-minute chart. Yeah. So this is the diamonds, and we went zipping higher. And on my own site, slopeofhope.com, in case you haven't figured that out yet, I did a post around here saying I'm shorting the diamond in size. Why? Why is that? Because of the gap, because of the price gap. Look right here, right there, doing. So right near this gap, biggest position I've got, shorted the DIA in size with a stop just above that price gap. That's worked out. Now, the diamond is still up 0.39%, but the entry price was good. And it's a clean stop. So that's one of my ETF positions. And I've definitely increased exposure quite a lot. The screen's almost entirely red. And it's not like, it's not like there's a crash day. The ES is down 0.13%, but that's okay. Because on the individual level, there's a lot of stocks that are falling 5, 6, 7, 8, 9, 10%, which is what I'm after. Over in crude oil land, I don't know. Who knows? We're at an important trend line now. We got above it yesterday. We're wrangling around with it today. I'm not trading energy. It is obviously completely at the mercy of whatever happens with Iran. And we were talking about it this morning, and Thursday might be its first little poke to much higher prices. If things do spiral out of control, we could just keep sailing higher from here. I'm not banking on it. I have no insight into what's going on with energy. And XOP, XLE, we can look at those real quick. Here's XLE here. It's monkeying around with its trend line. XOP here. It's well above its broken trend line. But it's also fairly inscrutable. I got to get a thesaurus because I keep using that word. But a lot of charts are tough to read right now. And those are among them, so I'm not touching them. Well, shield your eyes, Frank. Here's SpaceX again. It's red. We're down to 114, having been at 229 a few weeks ago. We're trying dollars in losses. I've actually composed a post for this afternoon, and just to spill the beans on it, I essentially draw an analogy between Facebook and SpaceX. The most popular video I've ever done here on Tasty was my pre-IPO on SpaceX. And what I offered in that video was Facebook as an analog, because it was the only thing I could find which smelled kind of the same. You got a really famous, charismatic founder. You've got a very hot sector, a very anticipated IPO, and it comes out with a lot of hoopla, and all the guys on CNBC have their hoodies on, and then the thing just barfs. And that's exactly what happened with SpaceX. So kind of called that one, I would say. All right, great, good for you. Now what? Well, if Meta, aka Facebook at the time, is any guide, we're getting close, because Meta, I keep calling it Meta because that's its new term. It was Facebook back then. FB was the symbol. It lost about 61% of its value from its IPO day peak. And from then it went on to a 4,200% gain. Now, so SpaceX holders might take heart in that. But the trick is, like, when does it bottom? It took way more than a year for Facebook to recover its losses from the IPO. And within that year, there was a really important event, because they had an earnings announcement that was really positive, and the stock gapped way higher on huge volume, and there was kind of no looking back after that point. But I'll say it here, about 15, 16 months to even match the IPO price. And from then on, the rest is history, as they say. So in 7 trading days from now, I'll be talking about this afternoon. SpaceX is going to have the first earnings, and so all eyes will be on SpaceX on Tuesday afternoon, the 4th of August. Should be interesting. I would not be at all surprised to see this in the double digits, just because it takes some battering to kind of establish a base. But I don't know. And don't say double digits are ahead. I don't know. But all I'm saying is that if you look at Meta here, which hasn't been having a good time lately, but it did peak last summer at $800 plus. Maybe there's hope. As far as Bitcoin goes, I had declared myself giving up on that, but I don't tend to give up for more than a few hours, so I got right back in earlier this week, and it's going okay. I'm not as strident about this because it was so strong for a few weeks. But yeah, long BITI and short IBIT, and it's tiptoeing the right direction for the moment. It's definitely kind of following the path of equities, and things that are associated with crypto had there also brief pops, but have resumed their bearish ways as well. American Bitcoin falling again. Tom Lee's Bitmine immersion falling again. You get the idea. And of course, over in Michael Saylorland, STRC is relatively stable. It's actually up right now. That's surprising, but it's been the past month or so banging around that range. MSTR itself, which I remain short, is down again today, not quite 2%. So that's tiptoeing the right direction as well. But with the SpaceX wipeout, as I've been mentioning, the ETFs, and they're still running ads weirdly. I saw Tom Lee's Fundstrat is still paying for advertisements on Twitter about the SpaceX IPO is coming and you can still get on board. It's like, Tom, I don't think that's really going to draw people in anymore. Why are you paying for this? There are instruments out there that purport to give you the inside track to these IPOs, and people don't care anymore. I mean, here's XXI. This is 21 Capital, lifetime low. I mean, the whole thrill of like, can I get in on the ground floor? Well, you're not getting on the ground floor. You're parachuting into the top floor of a skyscraper. People sort of get it now. And so the interest in this has vanished. Same with not Chevron, I meant to type CXV. Little typo there, but there's another related instrument that does that. The other collateral damage from the SpaceX demolition has been the companies that deal with satellites and with basically anything related to that field. Here's Planet Labs, for example, PL, which is slipping for months now. The losses are, 70, 80%, that kind of vicinity. Rocket Lab, RKLB, this was a SpaceX proxy for a while, and it peaked here late in May when everyone was kind of on the edge of their seats about the SpaceX IPO. And so that's descended from like 140 down to, like about a third of that. And even ETFs, which kind of roll up all of these associated items in the sector, obviously down to UFO, having fallen from 70 down to the lower 40s. So you get the idea. A lot of collateral damage around that. Even though today's down only a little bit, the kind of shorts I'm in right now are doing really, really well because they tended to be focused on semiconductors and memory. The heads up on this was South Korea. AWI is down again today, over 6%. And more germane is SMH, which as of Wednesday, I was kind of scared to pieces about what was next here. We had a bullish engulfing pattern. We were just teasing resistance right there. We had an inside day yesterday, but today really fell hard. And it helps that Intel just again, thank you, Jim. It helps that Intel just went bleh after that 13% pop. And it was annoying too, because it's our own government, your taxpayer dollars at work, just this largesse throwing money into Intel that propped them up. They would have been a dead company otherwise, but it's eventually not going to work. We've gone socialist on Intel. But semiconductors are down nicely, and I'm short a ton of semiconductors, and of course those SMH puts I keep mentioning. What are some individual items just real fast here? Things like AXTI down over 12%, Corning down over 6%. I know it's not semiconductor, but it's tech related. Micron down almost 8%. WDC storage here down over 8%. VSH, Vishay down almost 7%. So a lot of good stuff going on there. And some newer ones we haven't looked at as much. Applied Optoelectronics, AAOI. This is down over 10%. Another nice short. Here's a really new one, ALAB. It's so new I haven't even drawn a picture on it. This is, what is it, Astera Labs. This is also down almost 10%. So a lot of good stuff going on beneath patterns that are very, very similar from chart to chart. And our old friend Credo Technology down over 10%, resuming its winning ways. And Marvell, one last example, down almost 8%. So all kinds of juicy goodness happening. So the last chart we're going to do to close the week out is our old friend NQ. This has been an important week. And next week could be also quite interesting because we zoom in here. We were range bound for a while, and it was really annoying, but we broke the range. And what's happened? Friday, Thursday, Wednesday, Tuesday, Monday, we have spent the week within this lower portion of the range. Here's the key. If we can get one more cut below on Monday, that will break below this lower bound, and I think set us up for a whole new leg of this selling. Maybe we're at support. Maybe this is a fantastic time to buy all the tech stocks you can find. I don't know. We haven't broken support yet, but we're right at the cusp of this. So Monday is going to be really important. So we'll see if we taco out on Monday or not. And of course, next week is going to be absolutely riveting with all that news coming out. So I'll see you here on Monday. Have a good weekend. Bye-bye.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools, and place trades in a single click, all on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Final 30 minutes of the trading day. Final 30 minutes of the trading week. TP, we're back. It's time for last call. You're watching Tasty Live. He's Tom Preston. I'm Chris Vecchio. It's getting ugly out there as we head into this close, Tom.
Where is Ilya when we need him?
Late. Restarting his laptop.
Really? Wasn't he talking about a sell-off here? So this is a late sell-off. So I tell you what, this is, again, people ask, Tom, what do you do for a living? I stare at things, okay? I stare at numbers. And right now, during my little 1 o'clock segment, I did let me make sure I get my strengths right. So I did an unbalanced butterfly in the SPX, 0 DTEs. And I'm rarely doing this late in the day, but I did this one anyway. I bought the 7410 put, sold 2 of the 7420s, and bought 1 of the 7425s. So I just did 1 of these. I didn't do size. So that's the embedded, that has an embedded 7410, 7415 put spread. So right now, this late sell-off, and they did this when they were about, I don't know, 7430 or so, 7440. They were higher. Okay, they were up about $30 when I put this on. Now they sold off completely, and I just need. All right, fine. I don't want to lose money on the trade. Did it on a 30-cent. Did it for 30-cent credit. My loss would be if we settle down here about $470. That would stink. I don't want to do that. But what would be really cool is if this popped up another $10. $15 ideally, up to like $74.20, and actually maximize the value of that butterfly. I can't tell you, Chris, that I can count on half a finger the number of times that's happened for me, and to be able to do it this afternoon, that would be kind of nice.
Yeah, there was a trade that we were talking about this morning when I first popped on with Jermal and Mike when the day started. The SPX Short Iron Condor. I was looking at the calendar, the earnings, the macro, oil being in it, felt like the market may get pinned here and not move. Ultimately, that was filled when I was on with Liz. I was able to pop that off here for $1.45. So 90% max profit on that Short Iron Condor. SPX just did not move. So it turned out nicely today, TP. I really like SPX as a trading vehicle.
And there's lots of other things to trade, Chris. You know that. I know that. Our viewers know that. There's lots of stuff to trade, but the bottom line is the SPX, because it's a high-priced thing, and it moves around still, even though volatility is relatively low, that you can get decent credits for selling verticals in there, for selling condors. That's the trick.
I didn't push this through, but let's take it off. The 7365, 7370, 7460, 7465. Some of them are no bid right now, but hey, it's cash settled, so what's the worst that happens?
Well, and you got to find somebody, at this point, finding somebody willing to play with you with 25 minutes left to go. Sure.
Anyone out there want the 7460, 7465s? I don't know if we're going to touch them.
Going twice.
I mean, if this thing gets pinned, not the end of the world. But yeah, that actually turned to work out today. Sometimes you get better to be lucky than good. Or actually, it's always better to be lucky than good, TP. You and I have already settled that debate here. One person who's been good about this, they were just preceding us. There's another one of those types of folks that are joining us here now. Noted bear, Ilya Spivak.
Do we have Ilya on board finally?
We do. Who's probably delighted by this Ilya. This is a bad close for the NASDAQ here.
Period. We were just talking about how we don't like to initiate positions on a Friday, but I couldn't help myself. And frankly, It's not my fault. The price action did it. It's the price action's fault. My hands were tied. When you look at what NASDAQ was doing into the close there, I was looking at the 4-hour bar and saying, oh, it looks like we broke the range. We retested it, and then we couldn't get back over. I've got to sell more calls.
Ilya,
I got to do it.
Ilya, we are brothers from different mothers. I sold the QQQs, 0 DTs, 68 or 688, 690 call spread, took in 36 cents credit. I'm not looking for a big win. What is it now? I think that thing's worthless now. The Q's at 684. I have $4 of room on the upside. I'm just going to hang on to that stupid thing and see if.
I gave myself lots of duration. At this point, I'm looking basically to duration as kind of delta exposure management, where if the stock market decides it wants to rally in my face again, I am not that exposed. So I've got them out at this point. My shortest one is like 38 days, and then I added some 56s today and already had some 68s from before. So I'm going to give myself time. I'm going to let this market figure this thing out. But it looks like some kind of an avalanche is building here. It looks like the wave is trying to roll over.
Okay, so can I get into a question here, because TP, the way that you're structuring your position is obviously very different than Ilya's right now. For you to get to a 50%, profit threshold, that could be achieved a lot quicker when you're operating on a 1, 2, 3 day time scale. For Ilya, if he's at 38 days or longer, for him to get that decay to get to 50%, it's going to take a little bit more time here. So how do you think traders, let's just say they're trading it both ways, right? They have a little short-term bear on, they have a little bit of something that's a little bit more in Ilya's time horizon. How do you conceptually manage them both differently right now? Because you have a different time decay function working for you or against you.
So if with zero DTE stuff or very, very short-term trades, I'm going to be a lot more aggressive in taking off winners, capturing winners, even though I'm going to let this one go just because it's a one lot and I don't really care about it. But generally, like you're talking about the SPX Iron Condor you did this morning, Chris, you take those things off, you get the profit because you don't know what's going to happen in the last hour of trading, the last 15 minutes of trading. Okay. You don't want to have one of those trades turn from a winner into a loser. Pushing it out like Ilya did to something with a few weeks to go, I'm going to let those go. I'm going to wait for them to come to me. If I get a little bit of profit, I'm not going to panic. I'm going to wait till that develops. Or more to the point, if it's a losing trade right off the bat, as Ilya was saying, does it rally right in my face? That's called a face rally, Ilya, by the way. I'm going to let that go, particularly if it's a defined risk trade. Then I'm going to manage it differently as we get towards that 21-day window. I'll look to roll it maybe, adjust it to fit a better risk-reward parameter. But the nature of, Chris, I think you hit a very good point. The nature of managing those trades is very different. And I don't think I'm that different from you guys. You guys would probably do it the same way.
That's absolutely right.
You're basically describing exactly the way I manage, because for me, from a macro lens, timing for macro is terrible, notoriously. And so you have to kind of roll with the price action and let the price action stress test your thinking. So you have to give it some room, but also you have to not lose a lot, because you might lose frequently until your thinking works and that big win comes. Right.
So everything's rolling over right now. I mean, it's 1.2% down in the close, but guys, I mean, I look at this on a short-term basis. I'm not finding any sort of momentum that's pointed higher or even chop. A lot of things are starting to deteriorate a little bit more. Even crypto down today. Looked like we're getting back through 66K this week, and we couldn't hold that there either. TP, I know that you've been trading in and out of bonds recently. We're getting a little bit of a bounce back here. Unfortunately, we got so close. I had an out-of-the-money put spread that I put on weeks ago, just as a little bit of a flyer, because I was trading stocks on the long side. We got close. It was a 108 long strike. Got so close for this working out today. But we move on. The ZB trade that you and I were discussing is still at 28 days to expiration. The 110, 109 now, as I've been kind of just rolling this forward a little bit with you. How are you looking at this market now that it's been a counter trend move today? There's not a lot of volatility.
No, I'm not convinced of this rally. I'd still be bearish on both ZB and ZN. Take your pick. They're both going to move. Basically, ZB is going to be about twice as volatile as ZN, approximately. You want a little, so that's the only choice you're really making. I think the yield curve is going to move fairly parallel. What's the word? Parallel, I guess. I don't know if that could be turned into an adverb, but parallelly, it's going to be moved to it's going to move together. So I think ZB and ZN, the curve's going to move up and down the same amount. ZB is going to be a little bit more volatile. Take your pick of which one you want to sell, but I would be bearish on these things right now.
Ilya, I know that you're a bond bull here, and volatility aside, I'm not seeing prices crossing thresholds that I think would draw you in yet. I have a 1 week moving average here against 108.5, we'll call it, the swing low that we had here in the middle of July. We didn't clear there today in notes and in bonds. Likewise, those swing lows from July not tested, and we couldn't get through the 1 week here. I mean, you and I are going back and forth about how much this is related to oil, but I feel so much, for me personally, given the inflation burbling in the system right now, diesel prices don't look at diesel prices. I feel much more comfortable saying that bonds have a greater chance of continuing lower than maybe oil would be continuing higher. And even if oil reverses, I feel pretty good about bonds eventually staying weaker here. But what's it going to take for you to want to push a little bit more chips on the table for a long bond swing?
So I took one as we tried to bottom there in the first half of July, and then picked up anchor nice and quick because clearly that's not what the market wanted to do whatsoever. I thought it was really interesting that crude oil was surging and gold was not selling off, and that kind of war trade dynamic was not working. And so it looked like what gold was sniffing out was that the surge in real rates, all this heat coming off the AI boom with the inflation from the oil was starting to choke off the economy. And indeed, we've seen that the economic numbers have been increasingly weak. We can see that we were talking about earlier, the Atlanta Fed GDP Now forecast sinking in July from 3-ish to sub 2 for the second quarter. So my thought process was maybe the market is going to start looking forward and going, okay, we're done baking in the inflation. Let's start baking in the consequences. And let's start looking at the economy weakening and maybe the Fed not hiking for bad reasons. And by the way, gold is still in that range and seemingly still signaling it. Take a look at the continuous ZB or even at TLT on a, let's say, monthly chart. Weekly chart, something like that. And you can see that we are at a major multi-year bottom right about here. Now, does that mean that we're going to bottom next week? Of course not. Who knows? But this is a really big level. We've been bumping against it for years. And if ever there was a moment for the market, especially with what gold is trying to signal, what the dollar maybe is signaling by refusing to break out even as real rates surge, what maybe we're starting to see is something that could set the stage for a bond bottom. I'm not ready to put money back into it yet, but I'm not a seller.
Yeah, I've been looking for a bond bottom for a number of years.
That's fine. You place your bets. The point is, use a strategy, get in there and trade.
Exactly.
It's, Ilya can be longer term, can wait and wait and wait. That is the perfect scenario for a defined risk strategy. He can sell an out of the money put spread, and even if bonds drop, okay, he can still make money. That's the point. Ilya has an opinion. Chris has an opinion. I have an opinion. Our opinions don't really matter. It's the strategy you use that is going to determine whether you are profitable or not, and whether or not you manage your capital efficiently.
Well, TP, to that point, we were looking at something in the Nasdaq earlier today, and we actually jumped over triple Qs to make this point. Like, is this a dip that it's worth even trying to, put your toes in the water in right now and see if you can take something that's going to give you compensation for, accepting that kind of risk right now? So I just went out triple Qs to the August 21st, which if you're looking at the various expiration cycles, that seems to be the big date. So I went out to the expected move, right? 39 points. We're trading at 683, so go down to 645 or so. $5 wide strike, you're only getting 84 cents of credit right now. So you're really, I mean, I don't think you are getting compensated for trying to buy the dip here. There's not like a fun technical setup that you could play with and justify.
Well, no,
there's not the math in the market. So
not that far out of the money. Not that far out of the money. And you'd have to pull that up if you want to, if you want to have less of a cushion, you can get rewarded. But going out to the expected move or the one standard deviation lines, you're just not going to get anything. The volatility in the Qs isn't much higher now than the VIX. Can we look at the VXN? I don't know. Does the VX? I don't think we get VXN as a quote. But the VIX itself is only up 13 cents today. So this move down this afternoon really hasn't done a whole lot for the VIX.
No, the VIX VXN right now is currently up a bit today. It's up 78 cents by comparison, and that VXN VIX spread is currently sitting at 10.02 points. Which TP, I mean, this is kind of remarkable. I think for most of my professional trading career, that spread sat between 2 and 6 points, and it's been holding up near 10, and we haven't seen it hold up near 10 since post-COVID. I mean, how do you play that? We were talking about this weeks ago, and the theory that we laid out was like short Nasdaq vol, long S&P vol. We wouldn't have made a single dollar doing that so far.
No, but I wouldn't necessarily. I didn't trade it like that. I would just short the Nasdaq, in just structurally, selling call spreads, that sort of stuff. And closer into the money, I didn't use the expected move numbers. I just looked at the price I was getting. I forced the trade to give me the reward I needed for taking the risk. That means I was probably within half of the expected move that you're looking at, Chris. And so that's the point, is you can have all the volatility and the probabilities, yada, yada. That's awesome. That's what I use. That's what I look at, yes. But if I'm not getting the price I need to offset the risk. One of the things I'm looking at is another iron condor in gold. GLD, I've had some pretty good success selling premium, let's say out 28 days in the 28-day expiration. Ilya, I don't know what your thoughts are. If gold is going to just, sit in this range for a while, GLD is nice. I don't need a futures account to trade it. I can have nice 2-point wide strikes, keep my risk low. What do you guys think?
I've typed 79 cents on $2 wide strike is nice.
Yeah, I mean, I'm long a little bit, both gold and silver, but in different ways. Both of them kind of look similar here. Gold, I have just the one little baby 1 ounce future on. It's easy, it's small, it's very manageable in the way that, let's say, an M6 currency contract would be. And so I like the liquidity. I like the flexibility of scaling it up and down. And so I have that exposure there, just waiting to see if gold really wants to bottom here. And then on silver, there I have call verticals, but I cut the position in half earlier this week. I was long a little bit more, but I took a little bit off because it got a little fuzzy here in the past day or two, but I still have sort of the core of it, just smaller. Want to give it some time. I want to let this bottoming, if that's what it is, kind of come together a little bit more.
Yeah, I agree with you. And just, not to change the subject at all, I agree with you on silver. I'm short a put in SLV. I think it had been underperforming gold. That was just a slightly contrarian trade for me and silver. But right now in gold, 28 days, the volatility is fairly strong in GLD. It's not awesome, but I can go out to I'm just fiddling around with some of the strike prices here.
I got the 353, 355, 389, 391 queued up on the screen, just right at the expected move TP. 79 cents a credit on that $2 wide strike, risking basically 3 to make 2.
Yeah. So that's
I'll take it with you.
Right? That is almost exactly what I would do. That's almost exactly what I would do. And so,
well, we're only 9 minutes from the close, so
you take your pick. Well, you may not get filled today on that, but that's the sort of thing. Try it again on Monday if you're not, because I think I'll join you on that. But the point is, you just find opportunities wherever they are. One of the stocks that I bought today, did I get filled? on AXP. I did. American Express got whacked. I guess they had decent numbers, but market didn't like them. They said, somebody in the comments said, the earnings numbers are solid. Then management comes out, says something stupid, and they drive the stock down. AXP had as far as standard deviation price changes, it was a big one. That's the only reason I look at AXP. I haven't traded AXP in years, but I saw it had a huge sell-off, so why not do a contrarian trade? I sold the 7 days, the 323.17 half, or the 317 half, 320 put spread, selling the 320s, buying the 17 halves for 80 cents. And I got filled there. The markets looked a little wide. I wasn't confident I was going to get filled. So I sold that, sold a put spread in NVIDIA. What else did I do? And I covered a lot of stuff. My dead IBM call spread finally turned profitable today. It's a weird little thing like that. I was short a put spread in Now. That thing was killing me. And then all of a sudden today, bang, the stupid stock is up. Fine. Turns a loser into a winner. Okay, I'll take it.
I something similar now. I unloaded part of the position and then it said, it dipped. I kind of like what I did with Liz with that diagonal. I was able to offload the short 108 call. I got back into the 96 call, just on the 96 call. Just why not? So that is one of the good decisions. Hey, before we keep going, I know that we have a new 3% cash match. It's true. Up to $100,000, you get up to $3,000 back. That's big. So you bring it, we match it, 3% cash match on all qualifying deposits. You can trade stocks, options, futures, prediction markets all on one platform. Investopedia ranks it as the best place for trading options if you're in the United States. Or is that globally? I don't know because I haven't read the Investopedia article, but that's not what the copy says here. So go to tastytrade.com, 3% cash match for qualifying deposits. They really got to give me a teleprompter here, guys. I figure if I screw up enough of these ad reads, they'll get the hint.
Chris, I think you're doing a great job. I can see the numbers; they're flowing in as we speak. And, it's not to be too nativist here. But the U.S. market is still the place to trade, and it has the most liquidity, the most trading activity, the most products to trade. So, is Tasty the best platform in the world? Sort of by default,
I think so.
I would say yes. Say yes.
Let our employers know that we all think so.
Well, but there are some important reasons for that. And it's not just me saying, oh yeah, we're the best, blah, blah, blah. It's not the point. Is we have there are things we have that nobody else has. Like the probability of making 50% on a trade. Nobody else has that. Okay? Nobody else has that. Nobody else has the ability to chart the implied volatility. I don't know if you're on the web platform or not, Chris, but you can do that in the web platform.
I'm a desktop guy. Admittedly.
We have the easiest order entry. Look at the way Chris can drag and drop strike prices. Oh, you want to move it up or down a strike? Drag and drop, drag and drop. You want to send it to a different expiration? It's the
greatest thing is the intuitive nature of the platform. I mean, options, structures, even for those of us that have been doing this for decades, are a woolly thing on a good day. And the platform makes it very intuitive to think about all of that, which is a very, very big deal.
TP, we go back to the market here. Apple is up at highs. You and I were talking yesterday about our little short put spread around 315. I did not get filled. Hopefully you did. If not, though, this thing is a little bit of a runner here up what might be a close at new all-time highs. It's so funny how the narrative works with Apple. Didn't spend enough money. Oh, they didn't spend enough money. Good. They didn't waste their money on AI. They're not burning down the house. That's fantastic. That's exactly what we want to see.
Check out my blog on the news and insights portion of the site today about why the markets loved Capex before, hate Capex now.
They do. TP, I'm just running through some names around the horn here that catch people's interest. TSM, let me know if there's anything that calls out to you. SanDisk, for example, that's down a 10% today. SK Hynix
getting crushed today.
The market just Can we talk about this price discovery? I find this so fascinating because it's a brand new stock, obviously.
Yeah.
Have you guys seen the daily returns? It's like plus 3%, plus 6%, minus 8%, plus 0.5%, plus 9%, minus 6%.
No. I haven't looked at Sky in about a week.
I don't think I've ever seen this kind of instability, like those single price swings on a day by day basis right after an IPO. Like the market's literally having such a difficult time figuring out what this thing is worth.
Have you seen EWY?
I know the South Koreans are still at it.
I mean, this is basically an echo of the Kospi, and the Kospi
They're still at it.
The Kospi is in the middle of a full blown conniption.
Right.
Okay. TP, going into next week, we have all these major earnings reports. The bulk of the Mag 7 names are coming out. We also have that Fed meeting on Wednesday. I'm curious. Liz asked me this question earlier. I had my own view, but I'm not going to pollute the chat with this one, my own view just yet. When you see something like, we could just go to the calendar, for example. In fact, instead of talking about it, I'll pull up here in front of me. So I'm looking at the Wednesday, July 29th calendar right now. The Fed meeting is at 2 Eastern. Microsoft and Meta earnings are coming out right after the closing bell after 4 Eastern. Likewise, for Thursday, you have Apple and Amazon. Do you avoid trading earnings or putting on trades for those earnings that are on that Wednesday because of the Fed meeting until after the Fed meeting passes? Or do you do them beforehand, just completely ignoring the event risk altogether?
I ignore the Fed in that case. I don't think what the Fed is going to announce on Wednesday is going to be nearly as important as those Mag 7 numbers. I think everybody's pretty confident about what the Fed's going to do. I haven't even looked at the Fed watch numbers on the CME. And those tell you the probability. Those tell you the probability of a rate hike or cut, but it's mostly a hike at this point. I think it's going to be. The market already knows what's going to happen. I think they're going to take it in stride. On a percent basis, I would give the Fed 5% of the market volatility, the earnings 95% of the market volatility.
Ilya, you're not necessarily trading an earnings report kind of guy.
Not at all.
But with
I am anti.
Ilya hates earnings.
See, my view here is that if I'm going to trade Microsoft and Meta, I want to do that after I get the Fed meeting because whatever their implied move may be, the market could take a ratchet down 2 or 3%. Let's just say it's a bad day, and then I could set my trade, right? Maybe. Or just go to Amazon and Apple. Ilya, you seem to think that the Fed matters more, though. And we have 15 seconds before I wind this thing down.
In the last Fed meeting, Kevin Warsh came out and made a whole big deal about we're not going to have press conferences if there's nothing to say. And then they demonstrably put out a press release saying, "Hear ye, there will be a press conference." I guess there's something to say.
Maybe there is something to say.
We'll see.
74.48 here is where the S&P looks like it's going to close. It's maybe a 4 or 5 point bounce. It's getting a little bit of a bump to the upside here. Volatility likewise 1851.
Could we hit my short strike? Could we get to my short strike?
But it's another bad day for tech stocks. Nasdaq's down 336 points, 1.2% here. Guys, I just have this inkling that we should be paying attention to the news flow here this weekend because we're going to be watching what could be a big gap open on Sunday. We have first call coming up Sunday night, 5:55 Eastern, 4:55 Central, right here. So we're going to take a quick, we'll call it a 47, 48, 49 hour, 55-minute break here on Tasty Live. Hope everyone has a good weekend. Thanks to the production team for putting on another good show this week. And of course, thanks to the audience for showing up. For Tom, Preston, TP, Ilya, Spivak, I've been Chris Vecchio. See you on Sunday.
What's up, Tasty Nation? Welcome to the show. My name is Mike Butler. I'm here with Jermal Chandler.